Hello and welcome to the October 22nd, 2025 meeting of the Governmental Accounting Standards Board. We're back for another day. We've had a day and a half great GASAC meeting. Yesterday we started the board meeting and worked through a pre-ballot draft of subsequent events. Made progress on the going concern project and implementation guide update. I knew there was another one. So we've got a full day today, starting with revenue and expense recognition. So Pam, I'll turn it to you to start us off.
Thank you and good morning. So we have two papers today for the board to work through. And so I guess we'll just get going on that. We'll start off with Kara, who will lead us through paper one.
Thank you, Pam. Good morning, everybody. Back at the board's December 2024 meeting, the board discussed examples of items that could be identified as performance obligations. And we did that by walking through some examples that were provided in GASB topic 606. And one of those examples that's in topic 606 is an option in a contract that represents material rights are a performance obligation. So during that meeting, the project staff deferred that discussion on futures, options, and material rights. And now we're bringing that topic back to the board today. So the purpose of paper one is to facilitate the board's discussion regarding material rights. So the paper starts off with an overview of material rights, including the literature review of topic 606. And based on our review of that guidance, we interpret that a material right is an option within a contract that permits a customer to obtain additional goods or services at a price less than the standalone selling price of those goods or services, which would otherwise not be available without entering into that contract. Because the presence of a material right constitutes a separate performance obligation, what this means is a portion of the total transaction amount is allocated to the material right in which revenue is recognized either when that option is exercised or upon expiration of the option. So effectively, the existence of a material right results in the postponement of recognition of a portion of the total transaction amount until a customer either elects to exercise that option or allows the option to expire. The rationale behind the existence of a material right is that the discount applicable to the future good or service is factored into the transaction amount of the contract for which the option originated, and therefore the customer is making an upfront payment for those future goods or services. To demonstrate how to evaluate whether an option provides a material right to the customer, we provided in the paper an example in which the seller of widgets offers a customer the option to purchase the second widget at half price. And the example illustrates how the total price would be allocated to each performance obligation, the sale of the first product, and then the option to buy that second product, using the standalone selling price of the good and the option. So the question the paper seeks to address is how does this project approach material rights? And to develop our recommendations, the project staff considered material rights in the context of three topics. We first looked at how material rights align with the conceptual underpinnings of the performance obligation model developed in this project. We looked at the prevalence of material rights in the government environment. And we also looked at the complexities and potential challenges associated with assessing and accounting for material rights. So the first issue that we considered is whether the identification of material rights as a performance obligation could be aligned with the principles of Category A recognition. So first, to recap, the board has tentatively decided that the recognition unit of account is identified as each distinct good or service stipulated in a binding arrangement, and that a performance obligation is satisfied when or as there is a transfer of control or distinct goods or services to a customer. Based on these tentative decisions and also tentative decisions regarding the characteristics of control, the project staff believes that thus far in this project, the board has identified a performance obligation as the provision of goods or services to a customer. And for this reason, the question arises whether the concept of a performance obligation should be expanded to include an option to obtain future goods or services. And we also believe that expanding the scope in this way could inadvertently lead to expanding the scope into transactions that were not necessarily initially intended to be in the scope of this project. In addition, when talking about the characteristics of control over goods or services is the customer's ability to utilize the present service capacity of the goods or services by determining the nature and manner of use of the present service capacity embodied in the resource. So therefore, another question arises is an option a resource that becomes an asset to the customer when transferred? We find it challenging to associate the exercise or expiration of an option with the transfer of control of goods or services to the customer, which is foundational to recognize the anchoring element. So next, we looked at the prevalence of material rights in the government environment. Generally, in the context of revenue transactions, we do not believe that the presence of material rights will be prevalent, especially in general purpose governments. In our experience, we have not observed governments frequently offering options to customers for future goods or services at discounted prices. The government's missions are to support public purpose and provide services to its citizenry, which is a different purpose than private sector entities. We do note that it might be slightly more common when we look at activities of certain special purpose governments engaged in business type activities. We found potential examples of material rights in healthcare, higher education, utilities, and gaming, with maybe the most prevalent being in the gaming industry. For example, state lotteries or casinos offering loyalty point programs to customers. From an expense transaction perspective, we believe it may be more prevalent than in revenue transactions because governments may be entering into binding arrangements to acquire goods or services from a counterparty that are for-profit businesses in which that business is offering options for future goods and services at discounts to encourage continuing business with the government. So then the last section of the paper, we considered the practical application of material rights in the government environment. And we believe that there may be circumstances in which it's challenging to, one, assess the existence of material rights in a transaction, and also apply the accounting and the accounting for material rights in a transaction as well. First, assessing the existence of material rights. A government would need to evaluate all discounts provided to customers to determine whether that option in a contract is unique to that specific customer or determine whether it's widely available to all customers. And this assessment would be necessary to clarify whether the discount constitutes a material right or it's simply a marketing offer. In the basis for conclusion in topic 606, it provides that marketing and promotional offers do not constitute material rights because the customer does not prepay for a good or service. Instead, such offers represent incentives provided by the seller to encourage future purchases and to retain customers. The project staff finds it challenging because in the governmental space, the motivation of a discount might not be for those reasons, but rather to enhance public purpose. And in the paper, we use an example of a local toll bridge authority offering options to purchase long-term toll passes at discounts in efforts to reduce traffic congestion rather than to retain customers. We also believe that an additional challenge that governments may encounter is determining the standalone selling price of an option or an alternative valuation amount. And that provides the basis for allocating the total binding arrangement amount to that performance obligation. And I will note that the board has not made tentative decisions regarding the allocation of the total binding arrangement amount, that those deliberations will happen when we are closer to the end of measurement. However, we do believe that the standalone selling price for options may not be a straightforward calculation, especially when it's not directly observable. We believe that those calculations can be highly complex, requiring governments to make assumptions and judgments in order to arrive at an amount that is reflective of a standalone selling price of an option. First, they'd have to determine the selling price of the additional good or service that's offered in the option. And we believe that if the customer option remains valid for extended durations, meaning spanning over multiple years, or the market for these additional goods or services experiences significant volatility, the process for developing an estimate may be more complex. So for the purposes of this project, we've identified 3 alternatives that could be considered regarding the development of proposals for material rights. The first alternative is to require the assessment of material rights in a binding arrangement, require governments to assess whether material rights are performance obligations, and thereby requiring them to allocate a portion of their total binding arrangement amount to a material right. Alternative 2 would be to permit but not require governments to assess whether material rights are performance obligations, and this would result in governments having the choice to determine if they need to allocate a portion of their total binding arrangement amount to them. Or alternative 3 is to limit the identification of a performance obligation to goods and services, which would result in not permitting governments to identify material rights as performance obligations because options or futures are not goods or services. As discussed a little bit in this paper, but we've also noted throughout the development of this project, the foundational underpinnings of the performance obligation model developed by the board are different than FASB Topic 606. So therefore, we believe that including material rights as a performance obligation would erode the recognition principles for Category A. And also, given the complexity that we see with accounting for material rights, we recommend alternative 3. We did take some consideration in looking at alternative 2 because although we believe it's not very prevalent, we do acknowledge that there is some foreseeable and identifiable circumstances in which governments do provide material rights to customers in revenue transactions. But the downside to that, when you're permitting but not requiring, there's an issue with comparability when governments have that choice. So therefore, we ultimately recommend alternative 3. And just a couple of additional items to note from an expense transaction perspective. We noted in the paper that we believe it may be more prevalent to see material rights when the government is a customer, but we do not recommend permitting the assessment of material rights in the context of expense transactions. The guidance in Topic 606 relates to material rights from revenue transactions, and the assessment is we rely heavily on the seller's judgment on whether discounts offered to the customer on future goods or services would be offered independent of the original binding arrangement. So therefore, although we find it challenging from a revenue perspective, it's achievable. However, from an expense transaction perspective, we're unsure if governments would even have the information available to make assessments or judgments about the context of options. So that brings me, we have 2 board discussion questions. Before I pose them, the task force members who we received feedback from generally agreed with the project staff recommendations. Question 1, does the board believe that performance obligations should encompass material rights for expense transactions? And the project staff recommends performance obligations should not encompass material rights for expense transactions.
Thanks, Kara. Board member responses. Question 1. Diane.
I agree with the staff recommendation. I think Kara did a nice job of breaking it all down. I think that there's some real concerns that on the FASB side, the seller has to make so many determinations. And if we're on the expense side as governments and the customers, we're not going to have all of that information to make those decisions. And all of these things could be really difficult to determine as the customer. And so this could lead to inconsistencies or even possible manipulation in applying the guidance to the expense transactions. So I think just not even considering that on the expense side for governments makes a lot of sense.
Thanks, Diane. Robert.
I'd also concur with the staff recommendation and add on the one point in the paper in terms of the difficulty in assessing this from the standpoint if the government is the customer in an expense transaction. If there was a material amount, if it was determined, the impact on reporting, because it's could span multiple periods depending on the length of the option, I think would be difficult, which is, I think, getting to what one of Diane's points was. So I would concur.
Thanks, Robert. Jackie.
I also agreed with the staff recommendation. I have a problem fitting this whole material rights thing into the way we've decided to model our revenue and expense recognition. So for that reason alone, I think that I would have to say I couldn't support any other than option number 3. And then the other reasons that have been mentioned also, I think, are extremely relevant to the fact that it would be almost impossible from the expense side to actually figure out what was in the seller's mind to identify whether or not this would meet the criteria for a material right. And then the idea that if we did it for one but not the other, it could result in some manipulation, I think is realistic also.
Thanks, Jackie. Carolyn.
And I agree with the staff recommendation, the analysis and the paper and the way that Kara explained it. I just do not think that a material right should be part of the expense transactions.
Thanks, Carolyn. Jeff.
Yeah, not much to add here other than, I felt the same way about the difficulty that this would have in the expense transaction. That's not to say when we talk about revenue transactions that there's not difficulties there as well, right? So I don't want to ignore the conceptual difficulties just because it's the reverse side of a transaction. Those are real and exist, and we'll talk about them, but layer on that difficulty of information asymmetry on the expense side, and I don't see how we could do that.
Thanks, Jeff. I agree as well, and I would be pretty repetitive of what my fellow board members and you guys have said if I said why. So same thing they all said.
Just for the record.
Just
to get it all on record.
Chris wasn't here.
Chris agrees with the staff as well and doesn't want to include expense items.
Very good. I'll remember next time. Out of sight, out of mind, Chris.
Okay. Question 2, does the board believe that performance obligations should encompass material rights for revenue transactions? In other words, should the notion of a performance obligation be expanded beyond the provision of goods or services to a customer to include options and futures that are material rights? So here are the 3 alternatives again. Alternative 1, require the assessment of all material rights included in a binding arrangement for revenue transactions to determine whether they represent a performance obligation. Alternative 2, permit but not require governments to assess all material rights included in a binding arrangement for revenue transactions to determine whether they are performance obligations. Alternative 3, limit the identification of a performance obligation to those considered in the project thus far. That is the provision and receipt of distinct goods or services. And the project staff recommends alternative 3.
Thanks, Kara. Board member responses? We can start with Chris. That way I don't forget.
No, I'm fine with that. I will read this one because this is another one where he had
Okay.
a good amount of words to say. I just think it's important to really read his point of view. So 3/4 into the paper, I found myself in lockstep with the staff and agree with the arguments that would ultimately support the staff recommendation. However, there's a long part of this, so don't hang on the however. However, the discussion surrounding key industries such as education, gaming, and healthcare caused me to reconsider my position. While I do not know if the types of contracts included in the discussion are prevalent in the three industries, and if the option to include were to add value to users. I think the inconsistency with the conceptual underpinnings of the project and the potential for inconsistent reporting within the three industries identified, assuming that some would elect and others would not, is enough to secure my support of the staff's recommendation.
Great. Thanks, Chris. Alan. Jackie.
I also support the staff recommendation on this for alternative 3. Again, I do not see that a material right actually allows for the transfer of control of a good or service. So it would undermine the underpinning of the model if we were to go with anything other than alternative 3. And as laid out in the staff paper, which was really well argued, there are other reasons beyond that why we should not include them, including the complexity of it, the fact that they aren't going to occur very often, and all of those. But the fact that we're now starting to make exceptions to our model for a reason that doesn't seem to be prevalent just doesn't make sense to me. So I support alternative 3.
Thanks, Jackie. Carolyn?
I ended up agreeing with the staff recommendation. For a while there, I was kind of stuck on alternative 2, to give organizations that might have a need to want to include this information. But then I also came back to the fact that it's very complex. And even if we do land on alternative 2, I think it would open up too much comparability issues. And then as Jackie's point out, and I think as Chris was saying, it goes against the underpinnings for what we have developed so far as this this project. So with all of that, I did end up agreeing with the staff recommendation.
Thanks, Carolyn. Robert?
I agree with the staff recommendation as well. I think one of the things that was compelling, as I'm understanding more and more as I get further into this, is there a discussion in the paper that talked about, these types of items are, to me, appear to be more like derivative financial instruments. I mean, and they're not assets that you would have present service capacity. So the whole, Jackie talked about the transfer of control of the asset. So you don't have an asset that could be used to provide services. So in that regard, I'm in agreement. The one issue and the one question I had for the staff was the prevalence of the what I call the carve out. And, and it appears, at this point, as Kara alluded to, the most prevalent might be in the gaming world. So at some point in time, if this becomes an issue, that might be something that we might want to look at dealing. But in the scope of this project, I don't think it deserves any special attention at this point in time. So I would concur with alternative 3.
Thanks, Robert. Jeff?
Yeah, so this one seemed like, as you go through the options that you end up with canceling each of the options as you go through and consider them, right? Because, option 1 with the cost and complexity, and I've been a big supporter of this project to get the revenues in the right period, right? But then you start to look at the examples here, the examples given in the paper, some of the FASB examples, and they were simple examples. And it took me some time to go through, and I can only imagine, right, as we get into, one would get into more complicated examples, then it sort of got me to think about my trademarked phrase of, is the juice worth the squeeze in those situations, just on cost and complexity alone. Then you layer in the conceptual problems of this thing being an option and having it recognized at exercise or expiration and the difficulties there and what that might bring in. So that becomes increasingly difficult to point to that even if you were to permit it I still don't think you get rid of the conceptual difficulties because you're still saying that that's a legitimate way to recognize. And why is it legitimate to recognize at expiration, not at the transfer? So because of all of those reasons, I ended up agreeing with the staff in alternative 3.
Thanks, Jeff. Diane.
So I agree with the staff also. And I was where Carolyn was, where I really wanted to make alternative 2 work, because if there's industries in the government sector that actually would use this kind of thing, I wanted to give them that option. But I just could not break away from the conceptual underpinnings of how we have defined everything in this project. And what would the unintended consequences be if we actually expanded that? So I ended up on alternative 3.
Thanks, Diane. So I agree with the staff recommendation as well for the reasons you laid out in the paper, and that many of my board members have said. I think the one that I don't want to say it bothered me the most, but maybe the other board members haven't talked about as much, is when I think about why the FASB does this, and they're, in a way, it seems they're very worried about revenue manipulation, right? And trying to put this right as something that is relevant to kind of a more fulsome look at what's going on. They could manipulate revenue given these things, and it isn't something that applies in our environment for the most part. The public service nature, the easy pass that you guys used as an example on the bridge authority, the government didn't initiate an easy pass discount for the second 6 months or whatever in order to drive sales of the easy pass. It did it for the public purpose of reducing congestion. And that happens all the time, even in some of these industries that we talked about. Maybe you might see some of these, like the higher ed or healthcare. I mean, those are subsidized organizations. They're not necessarily there to, again, create profits or that sort of thing. They're providing a public service that happens to have some user fee attached to it, but it's subsidized. I think the one area, and this is piggybacking on what Robert noted, where that may not apply very well is the gaming industry. And so I know in the past we've had a potential project to kind of address that industry specifically. And if we wanted to, I think we should consider adding it back to the potential project list to deal with them specifically and see if there is enough support, or they need something like that to address performance obligations and how they're satisfied in their industry specifically without kind of harming the rest of all of what we're doing in the model. I think that would be fair. And then we just see what happens and if they really need it or not. But absent that one specific thing, I agree with the staff recommendation for this project for sure.
If you don't mind, I would just like to also underscore a topic that I don't think the board members picked up. I know it's in the paper, but I just want to make sure that you also have a very good perspective on the issue. Is including material rights as a performance obligation also changes the scope of the project. And I know you underscore it by the principles and the opinions of the goods and services, but then it bleeds on into intangibles. It bleeds on to contracts that we don't even know what they are. And so I think the challenge is for a government to operationalize that. So let's say we have a new pronouncement and the government has to sit there and go, okay, what transactions are in the scope of this thing? And they run into material rights. Then anything can be in the scope of this project, on the scope of this new standard. So it creates a very sense of concern for the project staff about the scope, ability to manage. And so by coalescing around distinct goods and services, you're enabling us to propose to you a better definition of what a performance obligation is and to be able to control the scope to a visible thing that a government will have to go, okay, this is in, this is out, this is in, and this is out. So it was just an important issue that I thought I wanted to highlight the scope concern.
Thanks, Paulina.
All right, so that brings us to our second paper, which relates to consideration provided to a customer and incentives. And for that, I'm going to turn it over to Brett.
Thank you, Pam. As Pam said, paper 2 covers consideration provided to a customer and the related topic of incentives. To determine the approach to account for this topic, the project staff reviewed FASB topic 606, which identifies 3 types of consideration that may be provided to a customer: cash, credits such as vouchers or coupons, and share-based consideration. The FASB guidance generally treats these as reductions of the transaction price unless the payment is for the customer providing a distinct good or service. In addition, the project staff reviewed the GASB guidance applicable to incentives. In the governmental context, the project staff believes that most of these forms of consideration provided to the customer, particularly share-based consideration and credits, are not prevalent. Additionally, the project staff does not believe that consideration provided to a customer is applicable to Category B transactions and recommends that if proposals are developed for the topic, such proposals would be limited to Category A transactions. Regarding share-based consideration, while private sector entities can provide stock or bonds to their customers as a part of a revenue transaction, governments generally do not have stock to provide in any transaction. Although there are some entities that report under GASB standards that could theoretically provide stock to their customers, the staff believes these cases are rare. In addition, we do not anticipate a government providing a municipal bond to a customer in a revenue transaction, and for these reasons, the project staff does not recommend developing guidance for share-based consideration in this project. Regarding credits, the project staff believes that while governments do issue items labeled as vouchers, they are generally associated with Category B expense programs, not revenue transactions. For example, housing authorities issue vouchers to assist with housing needs. These types of coupons and vouchers addressed in FASB Topic 606 are rather promotional discounts or loyalty credits that are not commonly used by governments in the same way. If a coupon or voucher is identified and reduces the current binding arrangement amount, it would be treated as a discount or price concession, which was discussed at the August 2025 meeting. Additionally, if a voucher or coupon reduces the future binding arrangement amount, it would be considered a material right in FASB guidance, and the proposals in paper 1 recommended to not consider them as a performance obligation. Moreover, the accounting complexities associated with coupons and vouchers in the private sector, including third-party redemption and supply chain implications, are not typically prevalent in the public sector. Therefore, the staff does not recommend addressing this form of consideration provided to the customer either. The project staff's analysis focused on cash consideration, which is the most likely scenario for governments. And here, the staff identified 3 possible approaches. 1, treat cash consideration in line with FASB Topic 606. 2, follow the approach in Statement 87 and treat the consideration payable to the customer as an incentive. Or 3, provide only general guidance for incentives without specifically addressing consideration provided to the customer. Option 1 would require governments to distinguish whether the cash provided to a customer is an incentive that reduces the binding arrangement amount or compensation for a good or service provided by the customer, which would be treated as a separate transaction. The project staff believes that the issue of distinguishing between 2 transactions or an incentive is already resolved in categorization, and for this reason, it is not the recommended approach. Option 2 would treat all cash consideration provided to a customer as an incentive that reduces the total binding arrangement amount, which is the approach used in the leases guidance. During the development of the preliminary views, that approach was contested because of its practicality. However, in the context of this phase of the project, associating consideration payable to the customer to an incentive is more closely related to option 3 below. Given the analysis of options 1 and 2, the staff recommends option 3, which is based on existing tentative board decisions. The project staff believes the categorization methodology would address the identification of a separate expense or revenue transaction. And with this analysis, the project staff does not believe that specific guidance for consideration provided to the customer would be needed in this project. So the remaining issue is to address incentives, which, as previously noted, the project staff believes further consideration of the guidance in leases and subitas would be applicable. The project staff cited the guidance in Statement 96 because it is more explicit regarding the treatment of incentives, but broadly recommends treating incentives consistent with existing guidance and that they be considered a reduction of the total binding arrangement amount. In summary, the project staff recommends the inclusion of limited guidance applicable to incentives to reduce the total binding arrangement amount. Therefore, incentives would be addressed along with all other items of variable consideration that reduce the total binding arrangement amount. The proposals for incentives should be limited to Category A transactions. And finally, proposals should not be included for share-based consideration or for coupons and vouchers. With that, we have 5 board discussion questions. For all questions, task force members who provided feedback generally agreed with the project staff recommendation. So board discussion question 1, does the board believe consideration payable to a customer should be explicitly addressed in this project? The staff does not recommend addressing it as a specific topic since the categorization methodology already distinguishes incentives from additional transactions.
Thanks, Brett. Board member responses to question 1. Jackie.
I agreed with the staff recommendation on this. I think they laid out very clearly that we already allow for this through the categorization. They would be able to address this issue. So I don't think we need to have a separate call out on this when it will be resolved through categorization.
Thanks, Jackie. Jeff.
Can I ask a question? If we go the categorization, how do you envision, how explicit or not do you envision? Certainly it's not going to be explicit, but when we talk about categorization and the things governments need to think about, will we allude to these sorts of things in there specifically, or do we think we don't need to even do that?
Allude to, I'm probably say a little more.
These sorts of discounts or cash consideration and these sorts of things, would we mention that in the context of categorization discussion, or do we just, the types of things that would be separate transactions, right? Could be cash considerations paid, right? That sort of thing.
So obviously we have to get through the drafting, but in categorization, you would walk through the very basic principles first, identify your binding arrangement, determine how many transactions you have and what kind of transactions you got, right? And so in that process, the example that I think we provided to GASB and we have used to explain is a private sector example, makes it a little bit easier. I'm selling you breakfast cereal, you're the grocery store, and you're providing me the service of shelving my cereal boxes. And so I'm paying you for the shelving of the boxes. When you go through categorization, you should be able to identify in there that you have 2 transactions, a revenue transaction where I'm selling you something and a service transaction where you're providing me a service, right? And so during the categorization, we're going to intend to provide examples at least where a single binding arrangement gives rise to more than 1 transaction, and it's going to be probably in the context of interlocal agreements. That's what it's easy, more applicable, more tangible. But to allude in there won't be any relationship to discounts. But then to say, oh, by the way, make sure that there's not an incentive. I don't know. It could be done through an illustration, but what we're essentially doing is not following the cooking recipe of FASB topic 606, and I think that's the best way to explain it. And so within the measurement section, there will be not a subheader that says consideration payable to the customer first has to be assessed to determine if it's a separate transaction, and then if it's not, treated as an incentive. That's the bit that it wouldn't be there. Obviously, if the board rejects the consideration payable to the customer, there has to be something in the basis to say the board thought about it this way. So at least in the basis, we'll have to say something.
Thank you.
Robert.
I agree with the staff recommendation. I don't think we need to reinvent the wheel. And Paulina just explained it very well.
Thanks, Robert. Diane.
I agree with staff recommendation. I think that this can all be handled under the decisions that we've already made and identifying the transactions in the binding arrangement.
Thanks, Diane. Carolyn.
And I also agree with the staff recommendation for the reasons that were expressed by the team and the reasons my colleagues have expressed.
Thanks, Carolyn. Chris.
Chris agrees with the staff recommendation.
Thanks.
I agree too with the way that Paulina expressed it, right? That we don't need this separate section that goes through this thing. And I take that to mean in the question explicitly addressed, right? So that's what the question says. Do we need that separate box that has this thing? And no, we don't. So, but we may implicitly address it through illustrations or some other mechanism. And with that, I'd be satisfied with that.
Thanks, Jeff. You went first, right, Jackie? I agree with the staff recommendation as well here. And I guess I'm maybe I'm in somewhat the same place as Jeff, but not nearly as worried as Jeff is about making sure we have an illustration or discussion of this in categorization. I just think it's going to be self-evident in the categorization by the types of things we do illustrate in categorization. For example, when we have to separate a Cat A transaction from a Cat B transaction, because again, the public service nature of how these governments operate and the more prevalent transactions they have where this might kind of come into play, I think it's going to be kind of obvious and people are going to, based on the illustrations we have in categorization, they're going to, I think, get this concept without it having to be specifically called an incentive or payable, whatever, even in those. And maybe you weren't going quite that far, but I'm pretty comfortable that that's going to happen. So I agree.
Okay. Question 2, does the board believe that limited guidance regarding incentives should be provided in this project? And the staff recommends including limited guidance to address incentives, which would be addressed along with all other items of variable consideration that reduce the total binding arrangement amount.
Thanks, Brett. I didn't totally get from the paper what you just said, and you said it before though, but that is the idea, right? That the limited guidance we're talking about is when we talk about the binding arrangement and reductions in the binding arrangement, and we bring discounts and price concessions, this would just be a part of one of those things that goes into that consideration. Okay. Brett said it. I just wanted to be clear. Diane.
I agree with staff recommendation. I'm glad you just said that because that was really helpful. And I think, based on the SBTA guidance in Statement 96, that kind of lays it out well. And so I think just mentioning it as part of the guidance, I think is good.
It's Diane. Jackie.
I also agreed with the staff recommendation. I always think guidance is good. It's never bad. So I think providing guidance, limited or otherwise, is helpful. And as has already been pointed out, we do it in other areas. So why wouldn't we do it for the RER project, which is already probably more complicated than most of the others?
Thanks, Jackie. Carolyn.
And I also agree with the staff recommendation.
Thanks, Carolyn. Robert.
I concur with the staff recommendation with the illustration that Brett.
Thanks, Robert.
Chris also agrees with the staff recommendation.
Great. Jeff.
I agree with the recommendation.
Thanks. I agree with the recommendation as well. I think once you narrow it down from just payments to customers or whatever, and we're talking about incentives, I think just listing it in that list because it's functioning like those things. And it gets to be, well, do you call it an incentive or a discount or a concession or a credit? All these things we've kind of talked about when we talked about those things, it's functioning like one. So let's worry about the substance of it rather than the form and what it's called.
Okay, question number 3. Does the board believe that incentives should reduce the total binding arrangement amount? And the staff recommends this approach.
Thanks, Brett. This goes along with the last one to me. So I kind of lumped it in there, but I agree here. Diane.
I agree with staff recommendation.
Thanks, Diane. Robert.
I agree.
Thanks, Robert.
I agree too.
Thanks, Jeff. Was that Carolyn?
I agree with the staff recommendation.
Thanks, Carolyn. Jackie?
I also agreed with the staff recommendation. It's consistent with how we've handled incentives in other GASB standards, so it makes sense that we'd be consistent.
Thanks, Jackie. Chris
Chris agrees.
agrees.
Okay, moving right along. Question number 4, does the board believe those tentative decisions should be limited to Category A transactions? And the staff does recommend limiting guidance to Category A transactions.
Jackie?
I just have a question on this. The recommendation was to limit to Category A transactions because we haven't seen anything for Category B primarily, but is there any harm in not limiting it? Do we see any issues with not limiting it just in case we didn't see something?
Perhaps just to kind of what do we communicate with that? I don't think there's a technical challenge with it. It would reduce the transaction amount. So tactically speaking, produces the same result. Do we want to communicate that a government provides an incentive to pay taxes? Do we want to communicate that the government provides an incentive to enter into a grant? It sounded and it felt like more a policy challenge, but also a little bit GASB members. Yesterday, remember, we were discussing a little bit incentives and we mentioned that we hadn't seen anything. So a few people came by and said, well, we do have an example and I have one, but I think it's a discount, not an incentive. So let me share the example that was talked to us. ABC City forgoes your property taxes at 100% for 5 years. If you're a senior citizen who buys or builds a brand new home in the jurisdiction, in the subsequent 5 to 10 years, you get to pay only 50% of your property taxes. So this municipality, what it's trying to do is attract senior citizens from running away to Florida. And so as an incentive, you can call that an incentive, but it's really a discount, right? And so that was sort of a little bit where we were trouble with recommending it for Cat B. Conceptually, we don't think there's a concern. Mechanically, no concern. In case we find them, no concern. Are we communicating something of a funny message? I think that's a little bit what it boiled down to. We don't foresee them existing, and it sounds really weird to think that way. But if it's no harm, we wouldn't have an objection if the board wants to make it even AB.
Just
Jeff?
so you say, just in your response, Pauline, it did raise my struggle in going through some of these papers, right? Was where you say, you gave your example, and is it a discount? Is it an incentive? I don't know, right? I could say it's an incentive. I could say it's a discount. And that's sort of the problem with all of these terms of rebates and refunds and all this stuff. And it's like, what's my conception of what that is versus what is the understanding? And that's sort of my struggle and trying to figure out, are there some fundamental things we could use to describe what it is without using these terms of incentives, which may have, or whatever other terminology that would confuse, or have a conception of what I think that is, and therefore what do I understand you're asking me to do, is my great difficulty in sort of going through these sorts of things.
I appreciate greatly, and I think as we have discussed throughout the development of the entire project, substance over form, obviously, is always a very important thing. I think Statement 33 spent like 3 paragraphs on that. Clearly, we wouldn't, but obviously that sort of emphasis at the very beginning is important. The way the FASB addressed it, not that I'm advocating to follow the path, but just an issue of consideration for the board, is they just call it variable consideration that reduces the binding arrangement amount, something akin to those words, and then lists a few examples, credits, discounts, price concessions, incentives, but it doesn't explicitly tell you which one is which one. because that's the problem. And we worked through this issue when we were discussing with the board, the issue of the rebate. If you're in a revenue transaction and a government gives you a rebate as part of that revenue transaction, I see this in water utilities giving you a rebate for using showers with lower flow or toilets that flush with less amount of water. They give you a rebate for those. It's part of the same thing. But we talked about the property tax example where the legislation called it a rebate, but it was really a refund of unassigned fund balance that they had in excess and they wanted to give it to all the citizenry. But the only way that they found a methodology to do it was through property tax ownership. And so they call it a property tax rebate. Is that really a rebate? And so this is where we also run into trouble if we try to define the terms. So we have to narrate them. This is why we keep saying limited guidance. We have to use those words, we have to talk about them, but if we hone into each word and try to define them and try to prescribe an accounting treatment, we also can run into a lot of difficulties of the government being able to apply this. My legislation call it these, but I'm not quite sure which one of those buckets fall into. So a little concern on that too. I mean, I understand your concern, but that's the other side of it.
Yeah, no, I mean, but that also points up like, depending on how they consider these or how they call them, right? It could determine how they treat them. And, so two governments doing the same thing, one calls it this, one calls it that, one treats it this way, one treats it that way, right? It's just, I don't know how, I agree with you. I don't know how you can sort of avoid that fate sometimes, right? But I'm always trying, as I'm reading these things, trying to figure out, are there some fundamental principles we could employ that would be simple enough, understandable enough to sort of say, hey, are you paying full amount for this amount and getting a rebate? Are you paying a discounted, that sort of thing. But I understand it gets, I sort of go down this hole and I have trouble getting back out.
The risks of the principles-based standard setting at a group of transactions that are so broad, right? So if we're doing property tax, revenue recognition, hey, we can define all those. But because you're taking such a broad swath of revenues and expenses, then the higher principle and then the professional judgment increases as opposed to property taxes, sales tax. That's just sort of the challenge that we have to work through.
So I don't know if this is where Jackie and Jeff were headed, but as I think about this question, I don't disagree. Like, I think that question one and the categorization is going to take care of kind of funneling off the B transactions to be their own thing. And these are probably going to only apply to A, depending upon what you call them. And so I'm fine if this is what we do. My concern is the way you just described how the words are going to be. How do we then carve out, and are we making it more complicated to carve out incentives and say, well, those only apply to Cat A, but discounts and price concessions or whatever apply to both? When if it's just not going to be a thing, is it just easier to just lump them all together and just have them apply if it's kind of ends up being no harm, no foul? So in the end, I'm fine if we want to make this a decision. And then as we get to writing the words, if it becomes complicated to try to carve these out, then let's just not do it. But that's kind of where I would leave that to y'all's discretion, would be kind of how I would leave that. I don't know if that makes sense for the TBD of what you want to do with it, but that's my only concern, is how the words play out, given what Jeff has talked about and form over substance. And, well, is it a concession or is it an incentive and that sort of thing?
Appreciate that. And I think if, because we don't believe that it technically creates a difference, we were just concerned about, again, what are we conveying as incentives in Cat B? It sounded just off to us, but if that's not a concern.
I just wouldn't have an example of an incentive in Cat B so that you don't have to do what you did, right? But if you're lumping them all together and talking about form over substance, then to me, you're not kind of implying what your concern is.
And so
it doesn't seem like it would be.
That's fair. And so if that is not a concern, then my advice to the board would be then say you disagree with that recommendation. And so therefore the TBD is just to make it all across variable consideration, including yada, yada, yada. There's no sentence about it only applicable to Cat A. And then we just go through that way. We were just concerned about this communication issue, not the accounting technical thing. So the staff advice would be, if you're not concerned about the messaging, then please say no to question 4.
Okay, well, I'll disagree for now. And then if somehow as the words come out, the messaging starts making me more concerned, then I guess we can revisit this then. Jackie.
I'm where Joel is on this. The way he put it, I think is exactly, if it's going to create an issue, fine, but if it's not going to create an issue, then I just say, let's go with generalization.
Thanks, Jackie. Robert.
Well, I was in support of the recommendation initially, but the conversation has led me to reconsider that because I'm thinking the practical issue is I don't think there's going to be very little, if any, ever incentives vis-a-vis a category B transactions. And so if you just leave it alone and let the government figure out how to apply the guidance, they'll be fine. Because otherwise you're getting into exactly what we're talking about. It's, how do you it's the carving out the incentives from the other things that could be more applicable that gives me concern. So you will put me down as disagreeing with the recommendation.
Thanks, Robert. Diane.
Well, I think this is really helpful because I had agreed with staff recommendation because of the, who gives incentives for paying their taxes. But I think lumping it all together makes a lot of sense. So I'm convinced, and I'll be a disagree.
Thanks, Diane. Carolyn.
And I originally agree with the staff because I didn't think there was a high prevalence of these being in Cat B, but I am open to Joe's suggestion, and so I guess I'm switching my vote to disagree.
Thanks, Carolyn. Jeff.
Yeah, I guess my view of the situation hasn't really changed, right? In terms of, and so I guess what we're saying is it worth actually the trouble of carving these things out so I don't really think
juice worth the squeeze.
Right. I don't know if my view, so I don't think my view has changed about it, but it's in fact, but given that view, is it worth even carving these things out separately? And I would say, yeah, why would we do that if we don't really need to?
Thanks.
I almost feel like I really shouldn't say anything because you've changed the discussion a whole lot from what he read in the paper, and it doesn't affect what we're going to do anyways at the meeting. Right?
Put him down as agree, doesn't affect it, but he has the ability to tell us.
I mean, he was in agreement, and I'm not sure he would actually change his opinion, but I think he was in agreement on the staff recommendation, but it's a very different conversation we just had.
Okay. Question number 5, does the board believe that the measurement guidance should address the seller providing share-based consideration and credits such as vouchers and coupons? The staff does not recommend addressing these issues as they do not appear prevalent in governments.
Thanks, Brett. Jeff.
Pretty sure I can go first here because I'm pretty sure we're not going to change the decision on this one as it relates to share-based consideration. So I agree that we do not need to address this in the government environment.
Thanks, Jeff. Jackie.
I also agree with the staff recommendation on this one. Like Jeff, I just don't see that this is ever going to happen, so I don't think it's a problem.
Carolyn.
I also agree with the staff recommendation. These issues are not prevalent in governments.
Thanks, Carolyn. Diane.
I agree with staff recommendation. I think some of the terminology too, like Brett had mentioned, like the vouchers, that means something different in government than it does for the private sector. So I agree with staff.
Thanks, Diane. Robert.
I agree with the staff recommendation, particularly related to the share-based consideration. My only confusion was on vouchers or coupons, and the nuance would be that if it currently, as it was described in the paper, you would, if it was basically a discount you would recognize, but if it's a future towards a future binding arrangement, then it'd be excluded. And I would agree with that, but with that little nuance would be, I agree.
Thanks, Robert.
Chris agrees with the staff.
All right. I agree with the staff too.
Right, I think that brings us to the end of the materials we have for the board. The project staff is working on our December papers right now. As of now, they include topics related to contract modifications, or binding arrangement modifications, contingent consideration, constraining consideration, and on the measurement side. So we will be looking forward to discussing that with the board in December.
Are we getting a November
Oh, sorry. Yeah, we
for
are.
paper, right? I thought I mentioned Al, we're having the short meeting, right?
Yes, we are. We are planning to bring a paper to the board's short meeting on November 10th, related to non-exchange consideration, or sorry, non-monetary consideration.
Thanks, team. Appreciate that. Look forward to both sets of papers and issues at both meetings. All right. Let's take maybe a 10-minute break and transition the team out to the Voluntary Digital Financial Reporting project. See everybody back in 10 minutes. All right, welcome back. That's probably better. But voluntary digital financial reporting, EFR, taxonomy, whatever you call it, that's the project we're talking about now. Paulina, please walk us through what you would like input on this meeting.
Thank you. Good morning, everyone. For the board's feedback and input, we have two primary topics. We took an opportunity to look at Statement 100 and model it cover to cover, face of the financials and notes. And we also took an opportunity to look to fund balance and net position. The strategy a little bit about thinking of them. In Statement 100, it was a really interesting work to think about whether and what is the relationship between modeling line items that have an associated note disclosure to it. And so I do foresee you're going to have an awful lot of thoughts and feelings about it. So looking forward to the feedback on that. But also in the same context, when we looked at fund balance and net position, it was about the different approaches on modeling. And so when we talked to you about capital assets the last time, we provide you a cluster where essentially you saw the taxonomy defined line items. And we're going now into net position, and at the risk of stealing Kara's thunder, we're going to a cluster where we see a lot less commonality, or we see harder to model commonality, and so the prevalence of government-specific information. So it's trying to give you a high overview of strategy of modeling face to notes, as well as detail and notes, as well as thinking about the line items. So while the questions are couched very much in specifics of the examples and the modeling that we have provided for you, I would also encourage the board to think about more holistically in the approach and the thinking of the items. How would it apply or permutate to other financial statements or other topics that we have to work through? We have, as I mentioned, two papers for consideration. So Zach is going to lead us through Statement 100.
Awesome. Thank you, Paulina, and good morning, everyone. Like Paulina said, I'm going to be walking you through the team's taxonomy modeling approach to guidance provided in accounting changes and error corrections that were established in Statement 100. As Paulina mentioned, our model addresses requirements in both the face of financial statements and in the notes to financial statements. For the purposes of our model, we focused on classification and presentation guidance. And then the project staff would also note that we did not incorporate any restatements that were outside of the provisions of Statement 100, such as restatements for the first time adoption of GAAP. So on this slide, you'll see an example of the types of items that require restatement under Statement 100. And we've overlaid the modeling of the relevant display requirements for those items that impact beginning net position. You'll note that changes in accounting estimates are not captured in this section of the data model. As discussed in the paper, guidance in paragraphs 31 and 32 of Statement 100 provide the following presentation guidance, which is shown on this model. A government may choose to present only the aggregate amount of restatements and adjustments, also known as the cumulative effect, by reporting unit, which is shown in yellow on this slide. This is known as Model 1. Or a government may choose to present each accounting change or error correction by reporting unit, which is shown in pink on this slide. If a government presents items individually in this manner, they must still display the aggregate amount of restatements and adjustments by reporting unit, which requires Model 2 to involve the usage of both the pink and the yellow line items on this slide. We also included on this slide the 3 types of items that result in restatements. Those are changes in accounting principles, changes in financial reporting entity, and error corrections. However, the guidance does not permit aggregating the restatement items by these 3 types. So therefore, there is no individual item in the data model that includes an avenue to present just those buckets. And it's only being shown here for illustrative purposes. This slide shows the applicable taxonomy modules where the accounting changes and error corrections model will be applied. The line items generally impacted are net position and fund balance per the guidance in Statement 100. In addition, as we've discussed at previous meetings, the team's efforts include modeling minimum reporting requirements and observed practice using the sample of ACFRs that we've collected. And so the team has identified that the beginning balance for cash on the statement of cash flows and reconciliations for both proprietary funds and special purpose governments engaged only in business type activities could be restated as a result of changes in financial reporting entity. Therefore, the project staff have also applied the Statement 100 model in those cash flow statements, making a total of 9 statements that will contain the accounting changes and error corrections model. As we just discussed, there are 2 methods of presenting Statement 100 restatements and adjustments. This slide shows you both Model 1 and Model 2 applied to the governmental funds statement of revenues, expenditures, and changes in fund balances. In these models, you'll see both the single line item adjustment for the aggregate effects of Statement 100 items to the beginning balance of fund balances, which is Model 1, and the government-specific specification, which is Model 2. These are both in light green. When you apply Model 2 by disaggregating to each adjustment, taxonomy users, as you can see here, can have 0 up to as many adjustments as they wish. And each adjustment needs to be described by the preparer, as these are government-specific line items. Now, we're going to turn to discussing the modeling of note disclosure requirements provided in Statement 100. This slide shows the blocks of text that the team has identified for the 4 types of accounting changes and error corrections provided in Statement 100. The project staff first identified 2 Level 1.1 items, one to address the 3 items that result in restatement, and a separate and distinct Level 1 item for changes in accounting estimates. This modeling does not require that a government presents the notes to financial statements in this order or in this organization. Additionally, the project staff identified 3 Level 1-2 blocks of text and 1 Level 2 block of text, the tabular for accounting changes and error corrections. And then lastly, the detailed information provided in the summary table can be identified and captured in Level 3 blocks of text. The project staff would note that this specific item will come at a later phase in the taxonomy development. Now we're going to turn to discussing examples to apply each model for restatements on the face of financial statements and the unstructured text model for the notes to financial statements that we just discussed. As we discussed in Paper 1 in the September 2025 board meeting related to capital assets, the team reviews various sets of ACFRs to validate the data models. These examples come from some of those samples. So this slide illustrates the application of Model 1, the reporting of a single line item representing the cumulative effect of adjusting items in the scope of Statement 100 on the face of a financial statement, which is always required. Below, you'll see a table comprised of the amounts within the red highlight box on the side. Each record or row shows an individual fact or number from the financial statement and provides the relevant taxonomy attributes or metadata. In Model 1, the team would point out that the cumulative effect adjustment has a classification of adjustments, since this cumulative effect can be comprised of multiple types of Statement 100 items. Also, you'll note the classification attribute or property on this table is used to differentiate the beginning net position from the restated beginning net position. In the taxonomy, since a line item represents a singular concept and each factor number is tied only to one line item, we had to have this separate item called classification to differentiate these 2 items. So the classification, as previously recorded, was created to indicate to a taxonomy user that a restatement has occurred and that the number with that classification is the previous beginning balance prior to the restatement, and that the number that has an NA classification is the restated number. This creates a sort of alignment from last year's financial statements to this year's financial statements. Therefore, the team did not need to add an as restated classification since these two NA classifications provide translatability from the previous year's ending to the current year's beginning balance of net position. This slide illustrates the application of Model 2, which is the reporting of individual government-specific line items for each adjusting item within the scope of Statement 100 on the face of a financial statement. In this example, we're applying the model to the government-wide statement of activities. On this slide, our focus is on the comparison of prior year and current year reporting. On the left is prior year information, and on the right is current year information. The government in this example had only one adjusting item, a restatement for an error correction, which resulted in the restatement of their beginning net position for the year ended June 30th in 2024. In the prior year report, you'll see the taxonomy classification for ending balance remains N/A. And in the current year, the previously reported item has been retagged to show as previously reported, which differentiates it from the restated values that contain NA. So that way you can see the prior year and the current year reports, the most up-to-date numbers always have the classification of NA in the taxonomy, which is the underlying metadata that makes this information comparable. Continuing in the same example, we're now focusing only on the current report. If you look into the details of the adjusting item, you'll notice something a little bit different about this classification. In Model 1, because a government reports a single line item as the cumulative effect, the classification is adjustments. In this model, where governments can make their own government-specific line items, the classification attribute can be any of the three types of items identified in Statement 100 that result in a restatement, because each of those items can now be separately presented and tagged. As you can see for our sample government, the fact, the 58,346, is classified as an error correction, and the government provided description is previously unreported escrow. Project staff would like to point out that we have not provided any taxonomy-defined line items for the restatement categories. Rather, this Model 2 only provides a placeholder for the creation of government-specific line items in each of the restatement categories. And that again goes back to the fact that in observed practice, each government's specific error or change in accounting principle could be worded differently. And so this will actually conclude the portion of examples related to the modeling of presentation requirements in statements associated with Statement 100. Therefore, I'm now going to pose board feedback question number 1, which is, what feedback does the board have about the modeling of the presentation requirements associated with Statement 100? In particular, we're interested in feedback that the board has about modeling as government-specific line items, the three types of items that require restatement under Statement 100.
Thanks, Zach. So I'm still learning. I can feel really dense at this when we deal with this project sometimes. And I just want to be sure I kind of understand what we're talking about as a base first. I'm used to when you give us board papers, we have alternatives. There's alternative 1, 2, or 3. These models are not that. This is just, it is one proposal. And the reason you have 2 models is that you have to have any time in the way we've organized the taxonomy, you're going to give the government prepare the ability to create their own line item, then you automatically have 2 quote unquote models, because there's kind of has to be one where we've provided you with something. That's Model 1, is the taxonomy specific provided, whether through observed practice or through gap requirement, we've given you a line item. And then Model 2 is, here's where the government adds their thing. And so that's why when you say, it took me a minute to get past, well, how is Model 1 part of Model 2? The point is, if you have a Model 2, you have that, you kind of have to have one. One is always going to be subsumed into the other one. But you don't always have to give governments the option for something that there could be no options. It's just these things. If that exists in GAP, then we could just have a model one. There may not be a lot of those, but we theoretically could. Am I understanding or explaining what these model things are appropriately?
Definitely. And the only circumstance in which you, for example, would have only model one, which is taxonomy defined line items, would be deferrals. You cannot cook
Okay.
them at home, therefore government specific would not be appropriate. Then the vast majority of line item clusters are always going to be a combination of model one, taxonomy defined, and model two, government specific. For the purposes of a government consuming through any software interface, they're not going to know. They're just going to see a list of things. Yep, none of those lists works for me. Click the plus button, add one thing associated with an existing thing, moving on. So for them, it's seamlessly. So perhaps we're always talking to you as if you're the programmers. So sorry for that. And so that's why we have communicated the two modeling. In model one, we would be providing descriptions, codification references, codification links, all the content that is associated with a taxonomy defined line item. In model two, we just provide a placeholder for you to keep adding the plus button and a mechanism to relate to model one or to table one. So that way, as we talked yesterday with GASB, you don't lose context. So I don't add just some random line item and then you don't know what kind of thing is in the context of statement 100, but it's associated with the three buckets of restatements. And so that's the mobility between line item model one and model two. For a preparer, they seamlessly interface. For the purposes of taxonomy development, we have to think about two different things.
You answered my next question, which was, does the preparer care? And they're not going to see that. That makes sense to me. Where, Jeff, I know you have a question. One more follow-up. Where or how did the headers, the subheaders, the things under which these things can be assigned to them, where does that reside? Is that part of model one? Like where should I see that? Or
so technically speaking, in the taxonomy, we developed model one with the headers, which are not line items usable, as we talked yesterday with GASB, and the yellow line items are the ones that you can tag. So that's what you see in model one. Underneath the hood in model two, we would have also, and we're working through the anchoring, which is what that is called. The model two always anchors to model one. And we're working through what are those choices, the lowest point, the highest point, and how to navigate through that. We're still working through that. But that would be, so in a government interface, so that's the data model beneath it. From a government specific, I told you, generally the GUI interface show you the list of line items of, let's say, an position. And then when you click the plus button for your government specific, there should be a drop-down menu which shows where to anchor it. And so that's the table two that would appear as they connect the two models. Does that answer the question?
it does.
Okay.
So as I think about statement 100 and what I think you're asking us, first off, the yellow, the cumulative effect. I mean, to me, you've modeled what we put in GAP, right? That you have these two options, which is cumulative effect, or you put all your individual things. All the individual things to me under GAP are by default model two. They're these government specific line items because there is no, well, I can't imagine that we would create some observed practice.
But that's
for
the
common
question.
Restatements, right?
That's the feedback to you.
But I heard Zach say that the other part of the feedback is, are there either white subheaders or observed practice for the three, I don't want to say categories, the three different types of accounting changes. But on the face of the statements, which is what we're talking about here, we didn't give you the option to accumulate error corrections. It was specifically identify the things or put the cumulative. So to me, you've modeled it appropriately. I think if I've understood what we just talked about, then I don't know. I almost don't see how you didn't do it this way, but I understand other people might have different views about the three types.
Appreciate it. And so just to continue the conversation, I'm sorry, I know you're waiting on your questions. Two heavily important questions. So the fact that the project staff thought that is only Model 2 or government specific in the details is sort of an important issue. Tactically and practically hard to figure out what are the common practice of error corrections. It's hard to wrap your head around that. But also, if you think about things like changes in accounting principle, do you really want to provide a list of change in accounting principle? Yeah, I didn't think so. So that's also a little bit of a issue that we wanted to be mindful. You mentioned the details. We provide essentially government a space to provide the details of the 5 error corrections that they might have encountered that year. But it's also important to note that the taxonomies that we have always discussed generally is not a tool of enforcement. A little bit, we were called out yesterday, well, is it going to prevent from us doing bad stuff? No, it doesn't. And in this case, for example, if a government were to put under the error corrections a single line item, cumulative effect of error corrections, they can.
Or if they wanted to create their own government specific line item for the cumulative error corrections or whatever, even though we didn't model it, we don't think that's necessarily a gap that you could do that. They can still do it.
That's
Yeah.
what I want to make sure you are aware. So the way we have modeled it, we are trying to provide the flexibility to you to comply with the reporting requirements as exist, which means every single error correction listed. But because they're government specific, that also opens the risk of a government following a slightly less gappish path.
And that's just kind of by default. I don't see how you avoid that. If you're going to let them put their own stuff, they're going to put their own stuff and you can't control it. Jackie.
I was just going to say the taxonomy is not going to be the problem there because they're going to be taking it already from their financial statements where their financial statements would have indicated that's where the problem was. It won't be the taxonomy. So.
Jeff.
Yeah, just because I think, I mean, I agree with the conversation and the fact that the Model 1, Model 2 here, to me, were a representation of what the statement requires. So I, like Joel, when I looked at it, like Model 1 is in Model 2, I had to go back and look at the standard, right, and make sure I was like, yeah, right, we didn't have a model that just allowed you to put the disaggregated things, no total. Didn't seem like we allowed that, in which case we could have had a Model 2 without Model 1 in it if we had allowed that, but no, we require you to put the aggregate. So you're always going to have Model 1. It points out, though, this is a minor thing, but just if you go to slide 4, as you were talking, where you describe Model 2 as cumulative effect, it's really not, right? It's individual effects. Isn't that right? And Model 1 is always cumulative effect. So for people's understanding, right, unless you go with Joel's thing, unless you're having some sort of cumulative going on within but that's a nuance that I didn't necessarily get from the standard, right? But I could see how people would do that. And then my only other point on this presentation is when we talk about, and you say in the paper, right, we didn't model any government specific, right, because the standard is new and we don't know what that's going to be. But over time, right, as we work over time, right, would it be possible, would it be a thing we do, right, to just say, what are the types of things people put as these government-specific line items? In other words, can we get to a place of observed practice at some point? Is that something we will endeavor to do down the line, right? So that's how the taxonomy sort of evolves. We don't have as observed practice now, therefore everybody's got to write their own, but we try to help them out a few years hence where we give them a pick list maybe or something that here are the common ones. And yes, you can still do your own, but these are some observed practice line items that we've seen.
That's a really interesting question, a little bit in the context of what Jackie and Joe were talking about. Common practice for error corrections. I'm not sure what common would look like. So I think error corrections therefore get dumped at that side. Changes in reporting entity. They tend to be entity specific. Component unit ABC became a component unit or stopped being a component unit. So also super entity specific, kind of hard to work through. And so then you're left with the lovely changes in accounting principle. Changes in accounting principle, you could create a pick list for the statements, statement 104, 105, 106, 107, and then deprecate them. A lot of work for taxonomy to put them in 1 year, but then leave them open. So if they implemented, I'm just coming up with statement 108, they implement a year late, is that a change in accounting principle or an error correction? And so therefore you're communicating something through the taxonomy about that. And so those are a little bit the challenges with trying to come up with pick lists or model one for those items. And so we struggle both tactically and philosophically, what could that look like? And that's what it's at the inception, it's hard to see because we don't see practice, right? It's a brand new implemented statement. It's not a new concept, but it's a more modern concept, the level of details that we are now asking governments to provide. And so we could look back and even in history today and try to come up with something, but it has certain implications. And like I said, the error correction, I think, is hard, and the component unit is very entity specific. And then the changes in accounting principles, are we going to really dip our toes and trying to communicate which ones are changes in accounting principles? And those are sort of the tactical challenges in addition to the observed practice issue.
And that may be just thinking wider, though. I don't disagree with you as it relates to statement 100, right? But as a wider thing, there could be, right, future instances where we allow some sort of thing and there's some options, but there's, there may be some more common options, right? It is a thing in the taxonomy development, right, that we're constantly going to be scanning into the future, right? What happens with observed practice? Observed practice changes, we have new stuff with observed practice, that's just part of what the taxonomy is going to be as a living, breathing thing. Right?
Sure. So I think you did catch the question. I think it was Suzanne yesterday that posed the question. So it's common practice. I'm like, no, whoa, we're still in observed practice. And it's because the definition of what becomes common practice can become a philosophical issue in the taxonomy development. So for example, we have documentation of one of the standard setting bodies who has a paper, a public document defining what is common practice and how they arrive to it. So at the moment, as you're aware, and we share with GASB, we're working with a sample set of ACFRs. We hope to expand our sample set, and when it becomes very large, and then we start working around, that's where we have a great research manager, senior research manager, will help us guide to how do we select sample sizes and how do we think about what to propose as definition of common to be common practice. And so the evolution would continue. I would envision that, for example, that protocol would help us to refine things like receivables, payables, capital assets. Would we refine statement 100? There may be certain small clusters of line items that you're not going to, but there are going to be other clusters of line items that you would want to constantly, as a philosophy of maintaining the taxonomy, keep an eye on practice. So are we still in a range of what we define as common practice or not, and how to deal with it? And so I think super appreciated the question is an area where, as we mature the taxonomy development, is certainly something that we have envisioned being able to bring back to the board a philosophical view and thinking of what we propose to be a common practice, and be able to work through a set of principles that we can work around to do that, if that answers your question.
Jackie.
I was just basically going to say where Jeff ended up with what Paulina said. For some things, yes, there will be more development so that everything is more observed, and you'll be able to add things, but I don't ever see this one being one where we want to actually come up with what's observed, because I think that causes anchoring in other heuristics that we may not want.
Diane.
So maybe you've talked about this a little bit, but so in statement 100, you have the option of putting things on the face of the financial statements. So help me understand, is that under model 2 because it's government line defined and then rolls into model 1? Is that how that works?
So for the preparer, they don't see the difference between model 1 and model 2. And for the user, they probably extract a single data table called error corrections in the face of the financials. Or, I mean, the entire suite of 100 restatements as a single thing. So perhaps what we're talking to you is more about the code underneath and not how to eventuate in the preparer side or in the user side.
Any other comments or feedback for the team? Robert?
I mean, my reaction was, I mean, this made sense. I mean, the Model 2 without knowing exactly how people are going to present and recognizing that someone could do what we talked about, where they put a subtotal in that they're not allowed to put a subtotal in, but that's probably not an issue for the actual taxonomy. It's if they're drawing it from their actual financials or ACFR or wherever they're getting it from, you can't prevent that. But I think it all made sense. I think this is the right direction and would allow, if that's Model 2 allows the governments, if they want to disaggregate, they can disaggregate, and then we have the required cumulative effect from Model 1. So
Thanks, Robert. Anybody else? Jeff?
I had one other question here. I think it's in this question 1 we're talking. So if we go back to slide 3, you talked about this, right? Which was, I'm in my statement 100 mode. I'm looking at it. I'm focusing on net position, right? And fund balance, because that's all of what statement 100 talks about. And then as you point out, we have these 2 items that are cash. And I stop, right? And I go, is cash talked about in statement 100? It's not, right? So, but I understand the point, and I guess I raise it just for the point of we're always navigating this line, right, between what needs to be in a taxonomy versus what's actually in our standards, right? And this is an instance, right? I don't necessarily disagree, right? But this is an instance where we're like, well, the taxonomy has to deal with these cash line items, doesn't it? Even though statement 100 doesn't talk anything about modifying your cash flow statements.
May not be explicit about it. And this is, we're navigating between minimum requirements and then how things operationalize. We were talking about even the interesting bits about when we do line items, what is explicitly stated about a line item and then what is practice that is not inconsistent. And so if a component unit moves in and out of the reporting entity and it affects an enterprise fund or a BTA, special purpose BTA government, I think we will want to give them an avenue for them to show a restated beginning balance of cash. Otherwise, the numbers are not going to make sense, or you're going to have a line item in the cash flow statements that is not really a cash flow, but it's a change reporting entity. So those are the places where the difference between GAAP, I don't think it's in clarity, but being super explicit, or it's just the principles based and therefore minimum requirements. And then we have to work through the mechanics of working through that. And I think that's the fine line that you're always talking about. And as I was teasing GASB yesterday, this is the standard setter sitting in the other side, right? So the standard setter is always in a position to exert change. No, we're the ones receiving the change. And so the differential between the minimum requirements and what we observe in practicality is something that we have to work through.
Yeah, I imagine that's going to be something that will hit a lot of times, right? And so I'm just trying to make sure, because I'm trying to, apply this, and recognizing these instances and saying, yeah, this is what we have to say, or this is what we have to do, is how we have to operationalize it, even though we were not explicit about it.
So this is sort of a confession offering at the moment. This is the hard part from having started our careers as standard setters, because we're in gap and what the standards prescribe. And now you have to expand your perspective and work through practice, right? And so it's an interesting challenge. And I suppose that the board would face a similar issue. You guys are very focused on providing guidance, and now you're looking at practice going, oh. And so it's an interesting shift working on that.
Thanks, Jeff. Any other feedback for the team? Jackie?
My only comment to the team was that I thought the modeling worked aligned with the standard. As Robert said, I don't see how else you could have set it up. It worked out, I thought, nicely.
Thanks, Jackie. All right. Next.
Thank you. Now we're going to discuss examples applying the unstructured text data model, which, as we discussed, I've brought slide 5 back up. Just as a note, the level 1 text blocks are for unstructured text. The level 2, that starts with L2, is for tabular or table data. And then L3 are always data points contained within tables. So now we're going to discuss applying that to an example of unstructured texts that are found in notes to financial statements. On this slide, you'll first see the entire note is surrounded by a green text block at level 1, which contains the entire accounting changes and error corrections block, and that's tagged as level 1 block text. The blue text blocks surrounding the changes to or within the financial reporting entity paragraph and the error corrections paragraph are level 1-2 block texts. So a preparer could either extract the entire green level 1 text or the blue level 1-2 texts. You'll also see that the required summary table is surrounded by the yellow text box, which is our level 2 block text. The preparer could also pull that entire table, or a user could pull that entire table, excuse me. And then these individual boxes, this level 3 individual data points, are individual points of information contained within tables that allow preparers to tag things at an even more detailed level of granularity, which could be important for data analysts to extract information. But the project staff would again note that the modeling of this level 3 item comes at a later phase of taxonomy development. Here's another example of the team's application of the model for unstructured text in the notes to financial statements. We would note here that when you have items such as error corrections, you'll see that you could have multiple types of error corrections or multiple types of changes in financial reporting entity in different paragraphs that can each be tagged. And so there's actually a slight correction on this slide. You'll see changes in financial reporting entity that should be tagged to the 2nd and 4th paragraph. Error correction should be tagged to the 3rd paragraph, and changes in accounting principles should be tagged to the 1st paragraph. And so what's really important here is, just like in example 3, a user could extract the entire green box or any of these blue boxes or the summary table or individual data points. But even if you have, for example, 2 changes in financial reporting entity, you could extract both of those, and a preparer could tag 2 different paragraphs to that level 1-2 header. And then in our final example here, it's provided only for an error correction. And so even though we have this presentational structure for the unstructured text, you don't have to use every single one of these level 1, level 2, or level 3 sort of items. You can only tag the ones that are applicable here. So here you could tag error correction to the blue note and then the summary data table here. And the project staff would point out that in the sample aquifers that we reviewed and used to validate our model, we currently have not found an example of a government disclosure related to accounting estimates. So even though you'll see that distinct level 1 text block, we haven't seen that in practice, which is why there's not an example from our current model here. And then this final example illustrates how a user of financial statements may extract the information that is provided from the prior slides. And so the reported facts in these unstructured texts, as we discussed, can be extracted as entire blocks because the taxonomy design for these items is different than that for the individual line items used in financial statements. And so this will conclude the portion of examples related to the modeling of the note disclosure requirements associated with Statement 100. And so therefore, I'm now going to pose board feedback question number 2, which is what feedback does the board have about the modeling of the note disclosure requirements associated with Statement 100? In particular, the team would like to know what feedback the board has about the level of granularity for levels 1, level 1, 2 that we showed you in the model.
So I think that as we continue into unstructured data and then the notes, I don't know that my thinking here has changed much from every time we've discussed it, but I'm becoming a little more hardened. I think in my view, we talked about this when you kind of first talked about your approach, and it was almost more of how we were going to roll it out and phases, and L1 was first phase and L2 would come later and L3 might be later, almost more from the preparer's ability to absorb this detail. I was like, well, okay, that kind of makes some sense, but I don't, do we really need all that granularity? Then we started talking about the MD&A, and we got into the same discussion, and we talked to users some, maybe anecdotally, I don't remember exactly, but we talked to users some, and they were like, I really kind of read the whole thing. And we were kind of like, yeah, but you need all this detail, but they kind of didn't tell us we needed all this detail. And so we ended up somewhere more in the middle, really, with the text boxes for the 4 or 5 sections or whatever, which kind of made sense, but maybe nothing else. And then we get here, and I don't know, I just start like it all to me drives back to how the users are going to use it. And I'm not a user, but I have a hard time believing they're going to need almost any of the level of detail we're proposing here beyond the L1-1. And I think that it's important. Everything in the notes is important, right? That we've heard that from the beginning of this project. No one bit of information is more important than the other bits of information. It's all essential. That's why we were required as part of GAP. And the L1-1s do that, right? They cover all of it. So that always makes sense to me. But as we get into more granularity, it's not, do they use it? Because our view is they use it all. They read it cover to cover. I hear that from users, but maybe how they use it. And maybe there are individual bits within those notes that they've read cover to cover that they need to more easily be able to identify, pull out, and ingest into their processes. But it's not going to be every word or every bit. And so it kind of feels like we need to talk to them about what that level of granularity is. But when I look at this, I can't, the L2 and L3, like the table is no good to me without the narrative. The narrative is no good without the table. And I kind of, it seems like the benefit here is to understand in tabular format how a user knows you reported net position is this last year. Now the beginning is different. How did it change and what were those changes? And yeah, is it the distinction between an error correction and a change in accounting principle is probably an important distinction, but I only care in the context of understanding all the changes and what they are. I don't just want to see the changes in principle or just the error corrections. I want to see all the changes because that's what tells me why it's different than last year. And then I have the explanation. So in the end, I think we need to talk to users, but for this note in particular, I would just stick with L1-1 and I wouldn't do any of the rest of it. I have a hard time believing users are going to need anything more granular than that, but maybe they'll tell us different. I'm sure as we get to other notes, like capital asset roll forwards, the pension note, there are going to be bits that they likely need to pull out and that are buried in there and they need to ingest. And so there's a need for some level of granularity. The difference between an L1-2 and an L2 and an L3, it's just a more granular level than the L1-1 is how I kind of see this playing out. But in the end, I think we'll hear from users, but those are my those are my thoughts and feedback on these notes as we continue to look at them. Jeff, as a user,
bringing that user perspective. So as I went through this, I had a few questions. I don't disagree with Joel at all about going to the users and having them understand, try to get some feedback about what they care about. And I'm also admit it's a struggle. I think I mentioned this I think I did at the GASAC. Like we're trying here to sort of think about how information is going to be consumed 10 years from now, which is really challenging, right? I can think about how I consumed information in my past and how I think others have done it, but we're embarking on this new way of doing it, and I got to think about how they're going to do it. So that said, one of the questions I had was, or a couple of things, was I guess it's slide 5, I guess is the visual depiction of that. So the two greens, the two L1-1s, right? We have them separated out. And so my question for staff was, why are they separated out, right? Why as a user, this is the suite of things. Now, some are resulting in restatements, some are not. I'm looking at it maybe from the way like the table is presented, right? Where this will be part of that thing in there. And so here's the suite of things that affected. And so I don't really make, as a user, do I make the distinction between that? No, these are all things that affected my prior statements, and I got to assess whether I care about them or not, or how do I think about them. So that was one distinction. I don't know if you want to speak to that one, Paulina, or let me go to my couple of others.
I will forget, so maybe one by one would be great. It's fine. So the thinking in there was that the first bucket cover all the items that resulted in restatement, and the other one cover items that did not result in restatement. But I think it begs the question that Joel just posed. If you're a user, does that matter to you or not? Because I think, and I think as after you guys offer your feedback, there's need for us to go back to think about the strategy, because I think that's where the staff might be often in somewhere you guys are trying to help us narrate back this a little bit. But if a user, the financial statements, we review about 2024 ACFRs in the last few days, and it's a single note. Accounting changes, I think they phrase them as restatements and accounting changes. I think that's all that is called. It's a very benign title, so it doesn't communicate anything wrong, anything bad, but it's a single note. And that begs the question, does the user find value understanding that this thing's caused restatement and this didn't? Are they going to know to pull at them both, or is it just at one topic? And so the way we were thinking is we just align it to this cause restatements, this does not cause restatements. But it's fair challenge for you to push back and go, I don't think people consume it that way. I think the user should be able to get the entire note of statement 100 and then determine what to do with it. I mean, that's the dialogue right now.
And I can't sit here and say I know for sure which is the way it would go. All I can point out is that's a thing to probe, right? When you're talking to the users as
agree, because then the other side of the coin is now a government doesn't have to tag one box, but two. And then as we talked yesterday, the more boxes you have to tag, the more cost is associated with it. While if the consumption is the user wants to know the entire suite of statement 100 things, one box, and that's the one box.
My next thing was, I guess it's back to the slide 13. which I think was the good visual depiction of this. Okay, so here's the sort of the breakout from biggest to smallest, right? And so Joel's saying, what else do they need but the top thing? And again, I guess it depends, again, from a user perspective, I guess it depends on what users provide feedback to us on, but I could see a world where I just need the summary table because I'm looking at relative magnitude. And all I care about is relative magnitude. And if it's not that big, I don't care, right? Now, again, as far as probing what the thing was and what do I need to learn more about it other than what they give me on the line item, right? Maybe I need to go more because so now I go to the box above. I need the description. Some of them I don't. Then I go to the description, right? So what level you're sitting at depends on what your concerns are about it, potentially, right? So that's where, could I get all that from the box above? Yes. And then there's this trade-off. Maybe it's simple just to do the one box, but maybe you're giving too much information. All I need is the table for my first triage of this thing. And then I need more information because I don't know how complicated these notes are going to be, how long they're going to be. And I'm going to have to figure out what they're saying and all that kind of stuff when I really don't care because it's small, right? I understand what this thing was. They implemented a new statement or whatever. I can read whatever the thing is. So that's where it's like, that's a question for users, I think, about how they
Sure, but
want
let me challenge you a little further. So a couple of comments of context. I'm not sure that they grant first on magnitude because I think there is that was the reason why there was a desired table walkthrough because of the implications of certain things like an error correction. Even if the magnitude is small, if you have a government having error corrections every single year, and so that sort of thing. But again, the limited feedback that we also heard from users, and I'm not going to purport this to be a user, it was a handful of people we heard from. The conversation revolved around, I want to see the table and the narrative. Sure, the table tell me something, but I want to know the narrative to determine whether I care or not. And so this idea of separate them did not resonate. There was a desire of togetherness because that's how they think about it. That's how they assess whether I need to use this information for further purposes. So you're consuming, it's always essential, but what do I then take this error correction and plug it into one of my analytical things or my ratios or my calculations? I determined that after reading the narrative is how a little bit this came about. So I think what that begins to resonate a little bit to what Joel is saying is we took this approach very tactically of L1, L2, L3, so the big box, the table box, and the line items. And what it more resonates is, well, that sounds like a great structure and probably usable. Can we first talk to users before applying it to every note? And particularly something you said, Jeff, is super critical in the conversation. This is a small note. Picture yourself in the long-term note. Picture yourself in the capital asset note and the cash and investments. And so I think that's what when I probed to you at the very beginning of the conversation, is super grateful for the feedback on the Statement 100 items. But may I dare challenge you to also think about the implications of these items in the context of larger topics.
Right, it's a fair point, right? I don't want to do this because it's simple and I can do it versus then I'm going to be faced with the larger disclosures and it's not so simple and I can't really do it. So do I want to make governments do it? Only because it's simple and they can do it. So the other point I wanted to make is in this visual where the table, see, when I was originally reading it, I thought L1-2 would just be the narrative. You've got the table now in two different levels, right? So again, I'm not suggesting, but in terms of depending on how it's consumed, it's like if you just consume the table first, then go to the narrative, then the narrative is its own thing and not with the table, but maybe you want it always with the table. I'm just noting it's in both places and how much more, and do we want to make that distinction is
certainly appreciated feedback. So what I'm translating this to a follow-up potential philosophical thing is, Do you need to disaggregate every single reporting requirement in an L1-2? And if you do you associate that with a table or a number? So I don't have an answer for you. I'm just trying to formulate the kind of questions that I think strategically we need to resolve to be able to make informed decisions about the granularity of all the other nodes. So that's how I'm reflecting the comments that you and Joel had made thus far. Is that a fair question?
Yeah, first off, Jeff, I'm hoping there aren't any things in here that are immaterial or insignificant. So I hope that's not a thing we have to think about. And that the assumption should be if we're disclosing it, if we're restating something, it's material. So hopefully it is going to be a number that you care about. So I don't know that any user should stop at the table. Now, I've seen plenty of financial statements where they have really small restatements. I don't understand that personally, but I get why when you say one of those, then you don't care anymore. But I don't think that should be our assumption. But I guess to somewhat expand my comments of earlier and something Paulina kind of just said, it's almost the philosophical approach that you have to take now in order almost before or when do you go to users, right? Am I going to philosophically drill down to L3 everything and go to users and say, hey, is this what you need? Or am I going to go to users with a note and say, if we just did this bigger box, is that good enough? Or what parts in here beyond knowing and reading everything do you extract out and use differently that you need to pull out? It's almost a which way do you approach the users? Do you approach it having all of it in there, or do you approach it as a big thing and say, also tell me the individual things? And it feels like you're kind of, we're originally starting with, let's go down to all the detail. And it seems like a lot of work and a lot to throw at them, and they may not know exactly how to respond. Whereas it seems like if I'm a user, you give me the whole thing and say, hey, this is how it's going to be. Maybe it's broken out these main sections. Tell me the individual bits you need for to plug into your analysis. I don't know. It might be a more cost efficient for them and us approach to going to them.
So I will call a lifeline when I get a moment to consult with our senior research manager and her advice. But I think those are definitely what it sounds to us is that we will come to you, and we plan to do this by December, and show you all the level 1 topics. We've been calling them themes topics that we have identified. So those were the very large boxes. Okay. And then what it's
the like 53 or 59 or whatever separate notes you got. Yeah.
And so we will bring back those topics and again, get your feedback on the topics, but then clearly the follow-up to that is, do we need a research type effort to deal with this usability of how do people need to be breaking down the notes? Like you noted, Statement 100, the very limited feedback because I cannot purport it as broad. We have 2 very different reactions, so the strategy will be interesting. One of the users was the more the merrier. And okay, somebody called them out and go, how do you use that? Oh, I would do a regression analysis and see what is the largest error correction and the lowest error correction. Okay, that's a fascinating, nice to have analytical. Why would you do that in decision making? And so giving them the detail and getting them to react, I think some users are going to go, yay, the more the merrier. While if you approach them with the large topics and make them work for the detail, may help us get to a balanced approach. But like I said, that's my uninformed strategy at the moment. I think we need to think through how would we do this. Jeff is always telling us about users are non-monolithic. How do we approach each individual set of users? How do we ask the questions and how do we solicit feedback? So this is clearly not an exercise where we would be able to take our L1, L2, L3 approach and just click through all the notes. It sounds like there's a step in between where we need to do outreach and get better information and then work through that process to determine. A little bit like the line items, there could be topics in which got one little box, and there are going to be other topics. And I think we know what those are generally, where there's going to be a lot of level 3 items because people do lift them and put them in their spreadsheet for analytical purposes. And so what we're doing is just facilitating that. We have discussed very openly that the last thing we would like to do in the taxonomy is go against what you just talk at the very beginning, Joel, which is we're not challenging essentiality. That is well outside the scope of the taxonomy. So everything is essential. There's no loss of information. Every line item every note disclosure will be captured. It's about how much detail to facilitate consumption. So it's not about essentiality and then try to see how different users react, and we'll have to come up with a strategy to find what is the most efficient way to communicate that.
And one question, when you say the users you're talking to, these is from the TCG meetings, right? The
Yes,
consultative
we spoke with we did some private calls for the MD&A with users in and out of TCG, but the no disclosure statement 100 were TCG users.
Thank you. Jackie.
So my reaction to your comment was, first, I looked at it with regard to what we had already decided we were going to do and said, yeah, no, don't break it down anymore. But in reflection, one, I liked your strategy, as I mentioned in my comment to you, where you aligned the restatement and the non-restatement. To me, that made sense because I figured that's the way most people are going to actually look at it. They're not going to look at, let me see, what was the changes in this and what was the changes in that. They're more interested in restatement versus not. So I thought your strategy for approaching it was good. On looking and visiting with you, I do believe that we're going to have to look at each of these notes individually and decide what the breakdown's needing to be. And this one, after discussing and listening to it, mine would have been, I want that table. That's the first thing I'm going to look at to see what the errors are that's causing there, what the problems, the changes are that are causing the correction and how big they are. Then I'm going to go look at the note. I don't care necessarily about the breakdown of the note. I think I could get by with the whole text of the note if I had the table. Because I could dump that note in AI and get what I want quick. At that point, in something that I think we need to think about when we're deciding the level of granularity that we need as we're moving forward, particularly when we get into these really, really complicated notes. The other thing that I was going to mention was I think that this does need a research project just based on the idea that we're getting into some notes that are going to be more and more complicated as we go forward. And I caution against giving them the detail, but rather just giving them the note and asking, like you're recommending, what do you need out of here and how will you use it? Because we know that if they're given the detail, they're going to want the detail. And it'll be harder for them to come up with how they're going to use it. They just want it. So I think that strategy makes good sense. And I do think one of the things that I think that's important is that we get all kinds of users focusing. I know that credit users are the biggest users of the information, but I think it's really critical that we make sure that we're not structuring this in such a way that other kinds of users who may be drawn into using the taxonomy more because it simplifies things are not considered as major users or potential major users.
Can you say that again? The new users, I'm not sure I understood that.
In other words, think about academics too.
Academics, policymakers, those people, watchdog groups, other users of the financial statements.
So don't just focus on the financial market.
I kind of thought about some of this, Pauline.
Correct.
I kind of thought this is a little bit of finding the right Goldilocks approach, right? And making sure where's our starting point, right? And so like the project team, like what's the starting point? It's the starting point, the L1 and the note. And don't make an assumption you got to go anywhere beyond that until the users tell you got to go beyond that. So we don't build that first. We just do the L1 and then they tell us we got to go below that rather than going all the way to all the detail, only to find out later we didn't need to go to the detail. And so it's almost how you approach it strategically. And we do the L1s and then we talk to folks, and if folks say there's more stuff beyond the L1, then we can do the L1, but we haven't already done that. Therefore, we haven't put work in that we really didn't need, because we know at a minimum L1s are true, because we go back to essentiality and the L1 is the note. It's the, or the category, the theme, however, because there's a lot of conversation there too, which we're not getting into today, but that's how I thought this was kind of going to play out. It makes sense to me that way.
Carolyn.
And not to repeat what what Joe and Alan and Jackie have said, but I do agree. We heard from the users in the meeting yesterday, and there were various types of users. And even from there, we kind of heard a divergence of opinions as far as how, what they need and what they're getting. But I also agree, thinking back to the last presentation that we had with the MD&A, how the users said, okay, yeah, this is great, but we really just kind of like go to the L1 and then we're satisfied. So I do think there's a lot of benefit from hearing that feedback from users. And then also if that is a way to reduce the cost that we kind of heard the preparers talking about. So I would just want to emphasize that I do agree with Joe and Jackie's comments of getting that feedback from the users.
Thanks, Carolyn. Robert?
Yeah. In reflecting on what's been discussed, and I think your question specifically on the granularity, I do think the L12-2 in some respects is, I would say, too much. I think people are looking at it in totality. And I think they are maybe going backwards. I think they're looking at the detail, at the detail, and then if they want to find out what it is, I mean, I have no idea. We'd have to ask users what they're looking for. But if they're looking at the numbers and then they have a specific item that they have a question about, if it's, if you have the L11 with the entire note there, then you've got it. The other thing, and this is different take than what Jackie was saying, but I'm looking at this as almost, this is in the, you call this in a colloquial sense, this is the statement 100 note. So you have, and you have changes in estimates, even though you've broken it out into a separate L11. I suspect many, although who knows what will actually happen in practice, but will include everything in that one note. And then but then there's a granularity on the L1-2 is if you want to break it out by the types of accounting changes in entity principles, error correction, and then the estimates as the fourth category, I think that there's some validity in that. But I suspect that many aren't really going to be in. Again, how I'm perceiving people would look at this is the table is going to have the error corrections. The changes in estimates isn't going to be in the table. So that's the only inconsistency with the way I'm looking at it in that way. So I'm not sure how to reconcile that at this point. But again, it's just in my mind, I'm going, this is a statement 100 note. That's not what I'd call it. But
No, I think that's exactly the struggle we had.
Jackie?
And I think when I was making my comment about, I liked your strategy, but in going to a broader perspective, I agree with Robert that they're going to put the whole 100 in. And I think that works because if you've got the table, I can go back to the narrative and just ignore the change in estimates because, and it can still all be you can have it all in the same note. You don't have to break out the change in estimate. You can put it all in the same text box. I'm going to dump that note into AI and only take what I want out of it anyway.
And I think when we were modeling, as I mentioned, the thinking was what we described. So the first L1 ties to everything that is in the face, and then the changes in estimate is not in the face, or it's actually not highlighted. It's in the face, but not highlighted. But then if you follow that approach, essentially we created an L1 for different outcomes and reporting requirements. Let's talk about cash and investments. So it's a note that generally encompasses at least, if not more than 4 pronouncements. Then do we need an L1 within each of those pronouncements, knowingly that people have cash and investments single note? Or do we then dig through the content and think about people use this table individually, this bit of information individually, and then create the granularity based on the usage as opposed to align to financial statements? So that's a little bit the art and the science in this issue and the user needs. Yes, ma'am.
So I think that's going to really present some interesting challenges, because so many times now we're saying, and don't duplicate the information. So now, right, we're encouraging them to put
To
things,
combine what makes
combine things together. So tying and tagging for the taxonomy, strategically, how we do that is going to be an interesting research question, because I think that it's the information they want more than the statements they want.
But that's the point. And so if if the board has taken that philosophical direction to standard setters and to prepare us to go combine, don't duplicate, make them efficient, make them effective, and then in the taxonomy we disaggregate by reporting requirement and don't think of the overlap, then are we communicating a message against what the philosophical direction of the board is?
What was that last bit?
So Jackie noted that in note disclosures, the board always talks about don't make them duplicative, condense and combine, and that's the result of, for example, cash and investments. It's like things put in a single note, but there's multiple statements in there that governments have efficiently come up with a methodology. If in the taxonomy we turn around and map statement 3, 41, 31, 72, and each provision separately, are then we going against or disincentivizing this combination?
Okay. I was thinking about what I was going to say and I missed the last bit. I was like, what did she say? But I don't know. I was about to comment on the same thing that it doesn't make sense to me to map it to statements. I mean, we might not even have statements. Who knows what's happening with gap structure? I don't, that's
Codification is still there.
right. But in that case, it makes more sense to me to lump the notes together in probably the 53 or 59 or whatever the number of boxes you have is, because you did that probably based on not statements, but based on what you saw in practice of how governments organize their notes. They have a cash investment note. They have a receivable note. They have a capital asset note. They have a long-term debt note. There are as you pointed out, multiple statements in some of those. It seems like a futile attempt to try to tie all that stuff to individual statements as opposed to
you say individual
what's
statements, and then the question for us was even further, not only individual statements, but individual provisions within the statement.
Because Paulina, this is the conversation we've had. If an average, I'll say state, because I'm familiar with that, the average state government has 20 notes, but we have 53, 59 themes. But then we have within 106 and 107 and 2300, hundreds of lines. Like, which is the level that we're actually trying to gauge towards? And your slide that we always look at with the 53 themes is kind of the one in the middle, because it's not based on statements. It's not based on the whole 106 and 106, all the lines in 106 and 107, but it's also not the 20 notes, because governments may do those slightly different. So it becomes these themes, which most governments can take those themes and put it into their 20 notes or so. In a local government, I have 10 or 12 notes, but take those themes and put it in there. But it's what level of detail we're going to think about this at, right? Which is what you're saying.
Jackie.
However, there's always a but, right? I can see where there may be some statements that do rise to a level. For example, risks and uncertainties being an example.
So definitely when we were reviewing them, there were some things that were very complementary to statements. Tax abatements, sometimes they get rolled up with in disclosures around property taxes or things like that in smaller governments, and states are standalone. And so we see some of that definitely happening. Conduit debt was really interesting. The vast majority of people had a standalone conduit debt, and some others rolled it in contingency commitments, and some other thing was like, wow, that's a lot of miscellaneous things in there. And so those are the cases where we had to break the note into more discrete things to make it common to more people. But that, if the philosophical approach, it's agreeable that we're creating level one topics, level one boxes based on common practice of notes. We are really saying that we're not modeling level one based on statements, and we're not modeling level one based on reporting requirements within a statement. And then we have then the burden to try to figure out how those things map together, because there's not all the auditors in the room, which I happen not to be one of them, is going to go after the completeness assertion. Did you capture all the reporting requirements in the statements, and were they? And so we're talking about the potential of having this 50-something list of themes that we're working through and having them map to what we see prevalently, the statements or the reporting requirements of it shown, so to be able to show completeness. And there was a really interesting question in one of the TCG members who said, by doing that, are you also then combine a preference where you should have group your disclosure requirements? There's always that risk. And this is where dancing the taxonomy issue is so difficult. Prevalently speaking, we saw fair value disclosures within the cash deposits. Every now and then, a government created a fair value note as a standalone. And so by you putting it into the cash and investments, are you conveying a preference for it? And those are the sort of difficult things that we have to work in the narrative of the document. And so we're not conveying preference, we're modeling practice. And so those are sort of the challenging issues as we are raising from Statement 100 to a more holistic issue.
But modeling practice will become even more practiced.
Correct. So we're therefore reinforcing practice because we're modeling practice. So it's sort of a circular problem, right?
But it kind of almost feels like if we, as maybe I'm not thinking about it correctly, but if you are identifying every individual disclosure requirement and kind of making sure that part of
It's somewhere.
that is somewhere, it's almost like your objective of modeling the note disclosures or tagging the note disclosures is almost like a disclosure checklist mentality, rather than it's really about user consumption of the data, which preparers have taken all these disclosure requirements we've provided them and organized them in a way they think is most digestible by creating these groups of things that they put together in a note disclosure. And so to me, it makes sense to model that practice because they're trying to communicate to the users in an organized way. And why would we disorganize that in a way to break it apart just to tie it to our stuff when it's really about getting the users the information they need in a digestible format?
And I think it goes back to what we were talking about. What is the objective of the taxonomy? It's not to change GAAP, it's not to change practice, it's not to alter financial statements. That is sort of your job as a standard
It's
setter.
not to enforce GAAP.
It's not to enforce GAAP either. And so if the board is comfortable with a common practice, I mean, that would be sort of the philosophical outcome of this discussion. You will see the themes in December. We would have cross-reference and a crosswalk to the reporting requirements to ensure we're not missing anything. But then it would be a longer discussion about whether or not we expose a crosswalk, because we don't want to convey, you should be putting Statement 72 disclosures in here. You can put them wherever you want to. But then make sure that we can philosophically communicate. This is how we're organized. We're organized them based on common practice. And then the granularity would be the product and the result of a research effort where we do outreach to users of multiple types, and try to better understand what are they going to, how are they going to be using it in a mechanical way, not the concept statement 7 issue, but the how do you plug into your analytical models so we can determine the granularity and come up with a philosophical approach. With that in mind, you also, I think, are buying into, just want to make sure there's a reaction to it, that some notes, for example, if statement 100 people tell us we read as a whole, there's an L1 note. We absolutely know pensions, capital assets, and long-term debt are consumed in detail. We know this for a fact. Those will might have level L1-2s, level 2s, level 3s, and a lot of data in those levels. So you may have a very different level of granularity applied to each note, a little bit like the clusters of the line items, but they would be informed by this outreach that we would like to do. So I just want to make sure that you understand that not all the data model will be consistent across the notes.
Jackie?
Yes, I totally get that and I support that. And something to keep in mind while we're doing this is, as you've already indicated, taxonomies are dynamic. So nothing we come up with at this point has to stay the way it is.
That's the beauty of it. So for example, if it's determined that this node gets aggregated and then a few later down the road, users are like, no, we really need these 5 data points. We add them to the taxonomy. It's not incongruent with the structure. So that's why we keep the structure, but then how do we apply to the structure to each node is a strategy of user consumption.
Jeff?
Okay, so this discussion is really sort of beginning to blow my mind a little bit, because I want to think about this through and I want to bring it down to make sure I understand a little bit the ramifications of what we're talking about. Bring it back to the statement 100 example, right? So we're talking about a world where maybe we have an L1, right? But as I was thinking about it, I think this is true. The standard does say you have to have a table. The narrative doesn't have to be there. The table could say, I had a error correction in my capital assets, see note 6. And over in capital assets note, I describe, because I think there's some context there. And so when we're saying there's an L1 here for statement 100, does that L1, it's not one L1, does the government got to go over there and grab that sentence from capital assets, tag it as L1 statement 100, and do that potentially 3 or 4 times, because they have things throughout their other notes, and take it a step further, and then I'll let you respond. If they're doing that because they believe the context within the capital asset note is the context that you need, are we saying what do you take from the capital asset note? Only the sentence, not the sentence before it, not the sentence after it, which is what the context is that supposedly helps the user understand what's going on, because those things are going to be tagged to something else, right? So I can only take my L1 sentence, and I'm losing the context that I really thought that was being provided. Am I making sense?
Yes, but you don't lose context. So what wound up happening, and this is where the conversation started, are we modeling the statement or modeling practice? And where modeling is practice, and what we have seen with statement 100 is, at least in the first year, 2024, everybody put it as a single note, generally note 2 or note 3. Right beneath summary of significant accounting policies. That was a very prevalent observation. However, if a government decides I am unique and I want to put my changes in reporting entity with the reporting entity node, and my change in estimate would relate it to revenue with my tax node, and my error correction, something in the debt, and I put it in there, you would have to tag 3 times L1. How much? That's professional judgment. And therefore the system can glom it back to this theme, this topic.
Pauline, it's true. This is your question, I think. I'll use a slightly different example because I think this happens a lot. I think a lot of governments will put subsequent event debt issues in the long-term liability note. But I theoretically can go into that note and block long-term liabilities as here's long-term liabilities, and then come back. And that would have included maybe the sentence or 2 on the issuance, come back later on and block text that subsequent issuance as part of subsequent events. Those 3 or 4 sentences have now been blocked twice but it doesn't matter. They've both been, those same sentences have been associated with long-term debt and subsequent events. So in your scenario, I could have blocked those 3 or 4 sentences within the note, and I could have blocked them again to be within accounting changes, and that doesn't hurt anything because I can block that subset of text more than once. That's
That's the idea. So you lose context. I don't know. I mean, you have to determine how much of that within the capital assets you're going to be grabbing. But you have the avenue to have capital assets, including that narrative, and then changes of error correction within the bucket that you want within it. And so it glums it back.
And so this will all be embedded in the themes that you're talking about?
Yes.
Right? So I'm going to see themes.
So because one of the themes would be statement 100,
changes, right?
or however
They could sit in any of these notes, right? So
this is, like Ellen said, this is an example that is expected to happen more in subsequent events because you have, assume you have an impairment after year end, you have issuance of debt and something with the leases. That potentially be in 3 different notes, okay? You don't want to force the governments to put all the subsequent events in a single note if they don't want to, but by having a topic called subsequent events, you then sub-tag wherever they land, and then the users glom back together. So there's a little bit of the art of putting the themes and the topics together because that's the desired outcome and the desired behavior. Is then the government can have the flexibility of organizing the notes in any way they want to, but the themes will get them back to some, I will not use the S word, some way of comparability because of the themes and the topics, without having to force them to redo their notes, rethink the notes, duplicate the notes, or duplicate the information. So there's the modeling practice, what we have to just be mindful is the ability to give them that pliability.
and now I get a little better. Well, first of all, it's helpful in my understanding to see that things could be tagged more than once, right? But then we go back to what we were talking about a while ago, right? That this is the taxonomy equivalent of duplicating information, right? Where we're saying, don't duplicate, right? Don't put it in this note and put it in this note. What the taxonomy is doing effectively is putting it in this note and putting it in that note. I don't see how you avoid that, right? But that's the reality, I think, of what I'm hearing.
I can tell you how to avoid that. The preparers and auditors told you yesterday how to avoid that. Be overly prescriptive about what to put, where to put, and how to put it. And that is never been the way we do it.
In the end, Jackie brought this up a couple of times. I think part of what comes into my thinking too is I'm constantly thinking about how this applies now and tags and things like that. And I'm also constantly thinking about this as a tool 7 years from now when governments don't have to tag and the taxonomy is used to train artificial intelligence tools how to structure unstructured data. And it's going to know kind of how to do that. It might figure it out on its own, but this is a tool to train it in our thinking of here are the buckets of how users like to think about note disclosures and how they might pull that information out. And the more you think about it in that context, you worry less about the L1s, 2s, and 3s. It can go find whatever it needs to find individually if somebody wants to find it. But we're trying to train it on the most common structures and the most common things to include everything, first of all, and then the most common things of here's typically what users want to pull out individually and find very quickly and very specifically to be sure they plug it into the discount rate on pensions or whatever it is to plug into their analysis. So that certainly goes into my thinking of how much effort, what does this look like 7-10 years from now? You know, what's the point of L1s, 2s, and 3s? Is it more just more general structure with some specific data points?
appreciate that. And so, as you know, we're moving forward in the developing of a discussion memorandum. And so obviously this has been extremely helpful. We would think to still propose the way we're discussing. So we have notes, you see the topics in the December meeting, and then openly open the conversation about the user outreach to determine what to go to L1 and L2 and L3. And then as a means of illustration, we'll show them DNA the way we have tentatively looked at the option 2 with the middle ground. And potentially a statement 100, we have to think about how to illustrate those examples, because if I'm hearing you correctly, in statement 100, you can live with a single L1 and be done. And then is there a way for us to illustrate? We'll have to think through. I'm not going to commit to what illustrations would look like, but then there's a need to illustrate an example when they would see a table as an L2 and data point as an L3. So anybody reading the DM would have a sense and a context of what the strategy could look like implemented in a longer term horizon. So maybe we use statement 100 as an example, just because we have it builded, but with the idea that we need to go back, or maybe we pick something that is a little bit more normal that we would expect that will be breaking down. So that's how we were thinking about it. But I think the strategy of reaching out to users to figure out how to philosophically pick what to break down, I think it needs to be in the DM as part of the conversation. Okay.
Makes sense.
Okay.
I do worry if 100 is the right one.
I know,
Because you're
because
gonna
it's small and that,
Well,
and then
You're going to get users that just say, I just want the whole thing. I don't need the individual bits. But yet that same user on a different note might like individual bits, right? And so you're not going to know that unless you have also a note that we think maybe is more geared towards doing that. I don't want you to have to do the pension note, right?
that is not going to happen, rest assured.
But I don't know. So, and maybe there's a way within 100 to articulate.
Either
Even if you
that,
don't think it here, think about these other notes or
or
whatever.
can
I
we
think that's
pick a
easier.
piece of the capital assets just to illustrate the table
Just a part of it,
and
sure.
the piece? So we will work through it, but that's sort of, just want to make sure that was the thinking based on this conversation, where we're thinking about the chapter of unstructured data, the things that we'll be showing.
Jackie.
If your only intent is to illustrate an L1 and L2 and an L3, I might pick them from 3 different kinds of notes so that they're not looking at them all in one note and saying, yeah, I like that, I want that, but you're just giving them an example of what it would look like for me.
Oh, so one example of one node L1, another example L2, a different node L3. Oh, that could be clever.
Thanks, Jackie. Any other feedback for the team on, that was all the 100 stuff, yes? Jeff?
I still we're still in Q2, I think, right? So I had one last thing. It's sort of like a little caboose on the train, right? But not to forget it. I talked to you about this, Paulina, because you talked about associating text blocks by reporting unit. And so my question was, when I'm thinking about, and I understand we're thinking some more about the L1s, L2s, L3s, I'm like, well, what gets associated by reporting unit? And I'm thinking, the table that we see here sitting in L2, which has got the columns with those things, is that what they associate with the reporting unit? Because that meets the requirement. Do we need to go up to L1-2, or do they associate L1? So what do they associate by reporting unit?
Thank you for circling that one back, because it would also be a topic in the chapter of the DM. I think it's going to permutate very much on the type of note. So for example, in summary of significant accounting policies, what we see is prevalently the government disclosing the policies for the primary government, so the reporting unit. And then, as you know, anything about the discretely presented component units is professional judgment, but you have to give them that option so they can see that and then cause the debate. There are other statements which the reporting unit may go lower to major funds. And so I think that the reporting unit is going to be something that we have to also look very specifically how to model potentially every note to make sure you're always going to have primary government discretely presented component units. That's unavoidable because of the provisions of Statement 14. But how do we deal with going beyond primary government and discretely presented component units? I think we're still evolving our thought and still working through it. And so certainly appreciate the nudge about to continue the thought on that.
I would. But it's the larger issue than Statement 100, and Statement 100 be one example. Like what would be the most appropriate thing to satisfy that requirement?
Well, on the table is easy because of what we talked about. In the tables, governments already disaggregate but business activities and governmental activities. So that's the tables are sort of the easy bit of the reporting unit. Is the texts that are get a little harder to think through. Do you just put the primary government and the discretely presented component unit, or do you put all the major fund reporting unit structure? And that's the tough part.
I guess question 3 of this paper, which you haven't posed, is do we have any additional feedback regarding this? So does anybody have any additional? I think we probably provided it, but
One thing.
there you go, Jeff.
Because question 2 only talked about L1 and L2, right? So, and this is sort of maybe feeding along the lines of furthering the discussion about what's this future state look like, right? So when I thought about L3, my comment back to the staff is like, well, help me out here. How are users going to understand L3, which is just the data point, right? It's just the data point, right? So if in my brain, I see that's just the data point. I don't have the table around it. I don't have the headers. I don't have the line items. I don't have the context. Or do I? Do I have that through some other, does the machine, does the machine give it? And then in my future state, I don't need this context, right? The machine gets.
I would never dare say you don't need the context. I'm sorry. That is, you will
Don't-
never.
I don't need it. No, I'm saying I, as a user, don't need it because the machine is getting it through the metadata. And the machine, I have programmed my machine to understand and provide me that context that I think I need to understand that number, right? So now I have to sort of think in a way that I'm not.
Not thinking today. So think about it in the same way as when we first started talking about what is the taxonomy and why do we need it? And we show $1.5 million, 1.5 million. You don't know anything. The machine will know 1.5 million. Well, the machine will know 29,000. Okay. So that's a lovely number. I can tell you the binary code for each one of those. That's all it knows. The embedded metadata, whether it's a table, financial statements tell you which statement it came from. It tells you the type of activity it came from, is US dollars, is rounded, is a debit, is a credit, blah, blah, blah. All that metadata gets embedded into the information. If you have data tables, for example, for fair value, L1, L2, L3, there will not be debits and credits. There will be different, a little bit like when we model pensions and OPEB RSI schedules. They're numbers, but they have different contextual metadata information with it that would help you understand what it is that you're looking at.
If I think about it, then, so I get a table, the metadata will tell me it's a error correction in this thing, it's in governmental activities, right? So in that way, right, then I'm trying to think in a future state, right? In that way, I don't, does all that stuff, isn't it all about L3s, right? And because L3s will even be able to read into the explanations, right? And tell machine readable, that information is all provided, that context is all provided via the number, right?
Right. And so imagine all the effort, forget about us because it's a lot of effort to us, but a lot of all the effort for the preparer to tag. So unless you're really going to take the number and pull it out and plunk it in your spreadsheet to do something, why the effort to do it for any of us or the preparer or anybody else? And so that's the balancing act, because the data point within the table is also enriched to ensure it has contextual information.
So what that says is there's like even a lot more work to create all this context around understanding the data point. When if you just broadened out and not done the data point, but broadened out and only had the whole thing together, you would have that context anyway. It's like we're doing extra work to get to the same piece of information because we don't want to lose the context and that.
Unless you're going to pull that data number and put it somewhere. Therefore, it's user expediency to extract the data point and put it in their analysis.
Or unless the way and again, I'm trying to just think ahead here, unless the way I program my machine to understand it is I can understand it from the L3s. I don't need because the metadata has all the context that I need to my machine to understand what that is. I don't know if I'm making myself clear enough. Joel's talking about it like there's you need the context. I have the context embedded in the metadata. So I don't need that. I'm thinking like a human now by looking at L1 and saying, that's how I understand it as a human. I'm not thinking like a machine where a machine says, I got everything in I got it under control. I can give you all your metrics, all your percentages, all your ratios, all you want, because I know what that number is, right? And I don't even need anything more than L3 because L3 has got everything above it is embedded in my metadata of L3.
But this is also part of thinking about machines as they work today and need today. Whereas you said it, I'm thinking like a human. We are training the machines to think like humans. So 5 years from now with artificial intelligence, when it reads the notes, it's going to read the notes. We're going to have trained it like a human. And so I don't know that we have to get in a future state too caught up in the machine thinking about it only like a machine can think about it and not like a human. It's going to think like a human.
No, I understand, but I think that I can get to that same thinking by a human via the metadata versus via the L1 box,
But
right?
you've only
That's what
done it at the expense of more work to do every individual bit.
Right.
When it was already there in the broader sense. Jackie.
Yeah, but those L3s mean all I have to do is ask the database that's got all of this for the error correction for whatever, blah, blah, blah. And it'll be tagged to the L3. It'll dump all those numbers in a spreadsheet for me, and I can do my research on that. I don't have to go search for that because it's all tagged to the L3, and I can just say, this is what I want. Find me all of those numbers, and it'll give me all those numbers. That's the beauty of it.
I caught this also yesterday and with the TCG conversation, the machine readable business. The way Xperia was designed is to be machine readable by a dumb machine. So we didn't have AI, we didn't have LLMs, we didn't have that protocol. And so the explicitness of the metadata that needed to be embedded into it was more detailed because at the time, there was no such thing. We are in a hybrid place where LLMs are becoming smarter and some envision to become a lot smarter than us. And so therefore it calls a question, and this is why the strategy has always been, we're working on XBRL taxonomy with intent of, and we said that's to TCG, to GASB yesterday, with a vision to change to a flatter taxonomy potentially in response to machines being smarter. So what does the machine read yesterday? What does the machine read today? And what does the machine is going to read tomorrow? May be slightly different. The extraction for Xperia was done Python query. The extraction with LLM is different than the extraction that maybe tomorrow. I don't know. And so if an LLM can scrape your data table from an L3 straight out and produce significantly high results, what do you need me to embed the metadata in there and create all the work for us and the preparers when you can extract it with just an LLM? So this is sort of the place in where we are it's funny to be developing a taxonomy at this junction of technology, but we have a feed in here trying to figure out what it would look like over there.
Anything else from anybody on the statement 100? All right. Go to paper 2.
Okay, so now we're going to discuss the modeling approach for net position and fund balance. Okay, this is a two-cluster data model. The first cluster is net position, and the line items identified in the taxonomy are presented at the top of slide 2. Authoritative guidance requires net position to be displayed in 3 components: investment and capital assets, restricted and unrestricted. And in addition, authoritative guidance provides that certain types of restricted net position could be required to be broken down into expendable and non-expendable portions of those items. The second cluster is fund balance, and the line items identified in the taxonomy are those identified categories of fund balance in authoritative guidance, which is provided at the bottom of this slide: non-spendable, restricted, committed, assigned, and unassigned. Now, reporting requirements permit governments to display the major purpose of certain components of net position and fund balance in either the financial statements or in the notes, meaning a government can choose to aggregate in the financial statements and disaggregate in the notes, or they can disaggregate in the financial statements. And in this paper, we provided examples of what we observed in practice. For restricted net position that is disaggregated in the financial statements, as Paulina mentioned earlier when she introduced this topic, we did not find commonality in how governments displayed major purposes. We believe this is because of the unique nature of governments, and their major purpose is really dependent on the activities in which the government is engaged in. And I also note that we observed that same lack of commonality for display of major purpose for restricted, committed, and assigned fund balance as well. So therefore, we developed 2 models to address the reporting requirements for both net position and fund balance. Model 1 includes the prescribed components for each cluster as provided in existing guidance, and Model 2 are government-specific line items. Slide 3 shows the model for net position, and slide 4 shows the model for fund balance. We note that a few line items would not provide governments with the option to create a government-specific line item. For example, existing guidance does not provide for the disaggregation of unrestricted net position or unassigned fund balance. And in addition, we did not observe disaggregation of these line items in practice. And the other line item that we did not provide an avenue for disaggregation was net investment and capital asset, because again, we did not observe this being done in practice. So on slide 6, this is an example of how example of a government-specific line item for net position. On the right side of the slide, we see that this government disaggregated restricted net position by the 4 purposes: debt service, capital projects, highways, and other purposes. And these 4 government-specific line items are associated to the taxonomy provided line item, net position restricted. The next 3 slides show examples of the models for both net position and fund balance. So on slide 8, this is example 1. And this is an example we just showed in the previous slide, in which restricted net position is disaggregated by those 4 major purposes. The table to the right shows the taxonomy provided line items, and the table at the bottom shows the government-specific line items. Example 2 is an example in which a government displays fund balance in aggregate. The table on the bottom left shows the taxonomy provided line items for the general fund, and the table to the right shows the taxonomy provided line items for the other funds, which are government-specific units. And then lastly, example 3 shows a government that disaggregates its fund balance. The table at the bottom left shows the government-specific line items for the ARPA and Capital Projects Fund, and the table to the right shows the taxonomy provided line items for unassigned fund balance and fund balance for those funds. Okay, so then this brings me, we have 4 board feedback questions. Question 1, what feedback does the board have about the modeling of net position?
Board member feedback for Kara and team. Jackie?
I support the proposed modeling. It's based on what I've observed and my reading of the standard. It models to the standard the way it's intended to, and it models pretty much everything I've actually seen in ACFRs that I've looked at with my students. So I think the modeling looks good to me.
So, Kara, if I understand the model correctly, within restricted, you have no observed practice line items. It's just the government specific created line items, correct?
Correct.
I guess my only thought, and if this just creates hardships, it's not that important. And in your examples, you see it. I pretty routinely see restrictions within net position and the same thing in fund balance for capital projects and then for debt service. Like those are very common.
I think
I
those
would
are
kinda-
one of the circumstances where we wouldn't be opposed to interject common practice to the extent that it's observable. So this is one of those where, statement 100 fund balance, I don't
Right.
think we would have concerns.
If it were me, I think there's so many governments that are going to have those two. I would just create within model one, I guess it is the observed practice items for those two, if it were me.
Debt service and capital
Capital projects or capital purposes or whatever. Otherwise, I agree with Jackie. With what was there, it models the standards appropriately. Other feedback for the team on that position, Jeff?
Yeah, so slide 3. So what we were one of the things we were talking about, and I think we talked about this, Melina, so the expendable, non-expendable line items there are only there if you have these things, you have these endowments. If you don't have these things, you don't have those line items, right? So this goes back maybe to this term of art because we have the box next to it that says required. And it's like this whole optional thing. It's really those two line items are mandatory if present. But if they're not present, they're not mandatory. All you need to do is do the.
Okay.
Is that right?
So what we meant by the require in that little orange box that you're alluding is that if you put in, you have to break it. If you break it down, you need to put something in it. You can't just create a line item and then leave it blank with a number. It's a little bit the question of GASB yesterday. What does this say optional? If I have a government specific, I need to fill it in. So we have to meddle with the words.
That line is different than the restricted line. The restricted line will always have to be present. Those other lines may not be present because I don't have these endowments or whatever.
I mean,
right?
I'd never see it, but God bless America, there could be a situation in which a government doesn't have a restricted net position, so you don't have to anything. But if you have it, then you have the approach to break it down by expendable and non-expendable if you're in the circumstances in which expendable, non-expendable is required to be disaggregated. It's just that then you have to write up the description, the text. It's a string of text that you would have to put what it is, endowments, something like that.
Not every government has capital assets. So not every government's going to have invested in capital assets net related debt. Some governments don't have unrestricted net position if all of it's restricted. So, I mean,
The
none of
lines
the
there
things are
for
going to be there.
usage. All the lines are 0 or 1. And in the case of restricted, expendable, restricted, non-expendable is 0 to N. Does that help?
Right. That would, yes. Now I get it. And then on the next slide, we have this non-spendable, right? But we also have this non-spendable could be broken out, right? It could be broken out as not in spendable form or legally contractually required, right? So there too, like just like in the prior slide, you would have two line items that could be that non-spendable form. And I noticed in the literature it says may, whereas the other one says should. So it sort of suggests to me that okay, you have an option of doing this, you have an option of putting that non-spendable in 2 lines, or you want to put it in 1 line as non-spendable, that's fine too.
So the provisions of that section essentially generally provide for a government to either roll up the non-spendable, restricted, committed, assigned, and unassigned is not, it's 1 line, or to disaggregate that in the face of the financials. You have to provide the details, whether you choose to put in the face or in the notes, that's a you problem. The catch with the non-spendable and the may be disaggregated by the 2 component in the 2 forms, non-spendable by legal or non-spendable form. Okay. And so we didn't put it in, but we could add those as taxonomy defined line items. So if a government disaggregate non-spendable fund balance by A or B, that's fine. But we also observe in practice that governments disaggregate the non-spendable fund balance, but the type of asset that generated, inventory, long-term receivables, endowments, or things of that nature. And so if then we can have a government specific that can be mapped to those 2 issues if they choose to. So you will have a model 1 with non-spendable fund balance as one option, non-spendable fund balance legally not permitted to be restricted, non-spendable fund balance in non-spendable form, and then government specific for all the details that they might want to put. So I think it can be expanded to address that.
Right, it's like a model 1, model 2 thing, going back into, so the prior statement 100, we have a model 1 here, which is just the non-spendable line item, and we have a model 2, which has got these additional lines that are possible.
Yes.
Right?
So we would make those modifications as we move forward. We would put the 2 types of non-spendable form, and then we will retain the model 2 bit.
Jeff, you're such a rule follower, but that was question 2, wasn't it?
Oh, was it?
You got carried, he got excited. He got excited.
Ahead of myself. Yeah, sorry about
It's no worries.
that.
I was
I
just
did
giving,
like question
just giving you a hard time.
Good.
Anybody else have feedback on that position? So question 2.
Yeah.
Kara?
Question 2, what feedback does the board have about the modeling of fund balance?
Jeff's provided it. I kind of did too, and that I said I have the same comment of restricted and or for restricted fund balance, I would add the capital projects and debt service lines for that too. But otherwise was good. Jackie.
I was fine with the examples that were shown, and as you've indicated, the non-spendable bill that I've seen, they list assets like you've shown them, and most of them that I've seen, that's how they do the non-spendable. So
Funny enough,
totally
that's where we
see.
struggled when we were modeling. So the words on the standard say these, but the illustration had the assets. And so I did call a lifeline to a friend, and people told me that there's disclosures for governments to do in non-spendable form and legally restricted. So some people do follow the exact words on the statement, not the illustration. So definitely we have to circle back and put that in.
But my experience, Jackie, is yours, that people put inventory, long-term receivables or whatever.
Yeah,
But I understand what the standard says, and that in
And
your
there are
lifeline, they
observed-
told you they see both. So,
There is observed bits where they do the other one.
which makes what you did all make sense. It's all good. Other thoughts on fund balance? Feedback? No more feedback on that one.
Okay, so the last question is, what feedback does the board have about incorporating into the taxonomy certain line items as government specific only?
In this case would be, for example, the committed, assigned. So the restricted, we have 2 taxonomy defines plus government specific, but then committed and assigned fund balance, for example, would be government only. So that would be the model 2 only.
didn't understand what you just said, Polly.
Okay, so
Is this related to Joel's capital projects and?
Right. So for
and-
example, for restrictions, net fund balance or net position, the feedback was, we observed this capital projects and debt service. So seems like a reasonable taxonomy to find because it's common practice, right? Or at least observed practice. But then in committed and assigned, you would only have government specific line items. You okay with that?
I think you need it. I mean, when you look at what people, I mean, some cases they go overboard and put things into categories that really don't belong there, but or technically don't meet the criteria. But if you don't have it, I think you're, yeah.
I think it's necessary because of the reporting requirements. It's more, do you have any concerns that we're putting nothing in observed practice? Okay.
No.
I would say in those there's no commonality. It's usually very specific to those governments and what they've created. Some council has set aside this money for X or whatever, and it's internal to them. And so that it made sense to me to not have observed practice for those. Jackie.
I agree. These are just too specific to the government. I think you're not going to find an observed practice for these. But I agree with Robert. There may be some things in there that shouldn't be in there, but that's not the taxonomy's call on that. But it was interesting when I was looking through some that you did have as examples. I was going, huh, interesting.
Anything else? Any other feedback? All right. I think that's all we got.
So thank you so much for all the great discussion. I think, as I mentioned throughout the conversation, we are going to be bringing to you the topics in December of the level 1 notes to financial statements, but that probably will be the only topic. So we expect to be short and small. Also, in the December meeting, you are going to be liaisoning with the TCG. It's going to be a hybrid meeting, and we look forward you guys conversing with them. We're going to solicit their input. We have had conversation with them about the reporting model, reporting entity, the approach for line items, the approach for unstructured data. So we kind of have heard the feedback, but we thought it was important for you to hear that feedback as well as the coming DM. And then, other than that, we would be locking down ourselves to get the taxonomy ready for exposure.
Great. Thank you. We really appreciate the progress. Very exciting progress. Appreciate all the work. It's looking good. Very exciting. Look forward to next time. All right, give us a minute. Okay. I'd kind of prefer to just break for lunch and not start and then break in the middle of infrastructure, but maybe we could, if lunch is ready at 11:30, maybe at 12:30, we could come back. All right, come back at 12:30 and start infrastructure. So we have a little more than an hour, 15-minute break. We'll eat lunch, see everybody back at 12:30. Okay, welcome back, everybody. Hope everybody had a great lunch. I did. It was wonderful here. We are moving on with the board meeting to our last topic for this board meeting, which is infrastructure assets. We had a good discussion at the GASAC about the document that we have before us here at the board meeting. But Scott, if you'll start us off and walk us through, I would appreciate it.
Okay, thank you, Joel. As Joel said, attachment A is a draft standard section, and we'll go through it paragraph by paragraph. Before we get started, as you noted in the cover letter, and I apologize, I should have had a question related to that cover letter, but we put in there an issue of a tentative decision that the board had made that we did not reflect in the document specifically, and that was the board's tentative decision to no longer require phase 3 governments that did not report infrastructure assets at transition, to note that in their summary of significant accounting policies. As we stated in the paper, that's level B GAAP. And so if we did it through level A GAAP, we would basically be saying, in where we list significant accounting policy, saying this is not one. So our take from the board's discussion previously wasn't that this wasn't a significant accounting policy. It's that because of cost benefit reasons and the time that has passed since then, that the board wanted to do that. So we are proposing instead in the next, not the one the board's deliberating now, but in the next update to the implementation guide, which is scheduled to come out at a similar time as the final document related to this, that we would delete that question. And I don't know if the board has any concerns about that or would like to discuss that. If hearing none. Or
Joel?
Scott, I don't, yeah, Robert, go ahead.
Okay. Well, my only question would be, what would be the timing on an update to the implementation guide that would make that change? Are we talking within a year? I mean, I don't recall if that's contemplated in anything contemplated in the tech plan for something, because the one we talked about yesterday is specific on the 103 stuff.
Okay. I'll come. So to answer your question, I think that it would be fair to say that given the timing of the issuance of this final document and the effective date of this final document, we're going to have more than one ability to actually take an implementation guide, remove it via an implementation guide. So exactly what year, I'm not totally sure, but it could be as early as June 2027. But we're going to have multiple cycles to get it taken out. And the problem with that, Jeff, is it is at the end of the day an implementation guide question. So I think the only way to remove it is from an implementation guide update that we would propose to do, even though we know what the intent is.
But we couldn't just do it through COD instructions. We'd actually have to put it in an implementation guide update and delete it. Is that what you're saying?
we could do it through COD instructions, but we would have to have something specific in here stating it, that basically, and citing the original source of that, because that doesn't have a original source. It's, just a Q&A. It's
Yeah, no, I
in
understand, but
700s.
when you say something in here, would it be just the COD instructions paragraph, or are you saying we would have to have something in the standard section that sort of talks about we are deleting, as a result, we are deleting question, whatever?
Yeah, if it was in the COD instruction, it would have to have something in these paragraphs to reference to that we're changing level A gap.
Scott, what you just said, it says that in the paper. I did, for whatever reason, I was thinking about it like Jeff. I thought we were just going to do it in COD instructions. So I'm I kind of find myself. thinking on the fly, I guess. But that's my fault. Other board member reactions to a question about what was in paper one. Jackie.
So to me, it makes sense that this question has to be removed, because if we're removing the requirement that they disclose that they didn't retroactively report infrastructure, if we're removing that requirement, then certainly nobody has to address why it wasn't included in the basic financial statement. So the Q&A doesn't apply. I guess I don't have quite as much trouble with the timing issue, because I agree that the Q&A probably would come out before the standard goes into effect. I hadn't thought about whether it could be addressed in the codification section, but apparently it can't. So I'm fine with removing the question.
I've thought I've seen Q&As removed from with COD instructions before. Is that not right? Like just solely COD and not a statement in the thing saying we are eliminating the requirement that requires this question, but just merely we are COD instruction, we are deleting question 7 point whatever. Have I not
Correct.
seen that?
Because it's related to something in the standard section. So it would because the standard section has a specific statement that contradicts what's in the Q&A. So that that's the source of why it's removed.
So this is a removal of the requirement, right, Scott? So I guess we didn't say anywhere in here that we decided to remove the requirement.
Correct. As stated in the cover letter, staff did not include it in here. We could include it, but that, as we state in the paper, if we include it in the standard section here, we would then probably in statement 62, but probably even in statement 34 as well, where it talks about making accounting policies, we would have to make a specific statement that this is not.
So I have a follow-up question then. So one of my comments was that it seems like we should indicate in the standard that we're rescinding the requirement that they disclose that they didn't retroactively report infrastructure assets. If we included that in the standard, then would the reference to the Q&A in the codification section then work? Or would we still need to do the rescind through implementation guide?
Yes, if we made a specific statement in the standard section, that would work. But then when we go to codify that in level A literature, it would basically be now saying that in level A literature. It doesn't currently state that requirement in level A literature.
You're saying that there's nothing in level A that says that they don't have to retroactively report.
It just is generic that says you have to report your significant accounting policies. And then the Q&A says this is a significant accounting policy.
Yeah. So Scott, in statement 34, paragraph 151B, 151 is it. I may know the answer to this, but I'm going to ask. 151 says, while governments are applying the transition provisions, these are infrastructure transition provisions. While governments are applying the transition provisions, they should make these disclosures. And then B is, or no, A description of the infrastructure assets being reported and those that are not. And so those that are not these things that we're taking out is a part of those that are not. But is this paragraph essentially gone because it was only related to while you're applying transition provisions? So the only reason it's a continuing disclosure and not while you're applying the transition provisions is because of the Q&A? Is that why we're there?
I thought it was, but I'll have to look since it's in the transition section. And if it is, then that would be, I guess, something we would.
That would be a way.
That would be when we put in here, yes.
That would be a way
We would
to, it's a level A gap. We would rescind that version of level A gap.
Yeah.
And then through the COD instructions, you could also take the implementation guide out, but that would be a way to do it if that works.
Yeah, that's what we'll do if it's in there.
Okay.
Yeah.
If you don't mind looking into that. Cause I hear what you're saying and I just missed it. I thought we were doing it COD instructions, but I hear what you're saying, why we can't. Maybe this is an avenue we can. And in the end, if we just deal with it through an implementation guide, I guess I'm okay with that, but it'd be nice to just have everything we kind of decided wrapped up if we could, but.
Yeah, we haven't, I've only done part of the work on the codification.
Okay.
But if it is in there, we definitely have to do it so that would take care of it. Yes.
Any other thoughts on that, Diane?
Well, I was okay with removing it, but if we can do it somehow just in this whole process, in this project, I think that's a better solution.
Carolyn?
And I'm where Diane was at. I didn't have any problems with what the staff had proposed, but if we can do a more direct way, then that makes sense.
Thanks, Carolyn. All right, Scott, you just look into that for next time, I guess, and then we'll just, in the next version, we'll see if you are able to address it. And if not, it sounds like we're probably going to be okay doing what you proposed, but we'll just deal with it once you've figured out whether you can or can't do it. Thank you.
No, thank you. I don't see it in 1400, but that doesn't mean it's not somewhere else in the codification.
Okay. Yeah. Yeah. Thanks.
Okay. I guess with that, we'll move to attachment A and the document itself. And I guess we'll just go paragraph by paragraph. Anything on paragraph 1, the introduction?
Any board comments on paragraph 1? Starting out well.
I should have said before I jumped into that, we did get feedback that you had, and those that are, grammatical, we will incorporate. I do want to point out, please, look at those, because if we don't make them, and you get next time the codification instructions as marked up, which is part of the pre-ballot process, some of them we will not make because of continuing with style of how it will be incorporated into the codification. But that would be if we don't make it for that, or you believe that there is a reason we still should, please bring it up at the next round as well. Paragraph 2.
Any board comments on paragraph 2?
Okay.
Don't see any comments there, Scott.
Okay. Well, we had a lot of discussion at the GASAC meeting the other day on paragraph 3, so we'll jump to that.
Board comments on paragraph 3? Jeff?
Well, just channeling some of the comments from GASAC, right, about the examples section where we heard some feedback and the shift from calling them to examples of networks of infrastructure assets. And now we have some of these, as I read through them, and this was before we had the GASAC feedback, I was like, a tunnel network? A dam network? Like those may be true, but they may be far less frequent than tunnels as part of a transportation network or dams as part of a water network or something like that. So just trying to see what the board's interest in or belief that do we need to sort of relook at these examples and sort of, do we want to entertain this notion of whether it can be at a certain level, like transportation networks? If you have transportation networks, that would include roads, but if you don't want to do transportation networks, you could do road networks. Or, our water and sewer, you could have a water network and a sewer network, would be two different things. Are we saying you have to have one water and sewer network? Depends on how literally people would read these things, and I'm not sure, but I'm just wondering like whether we need to attempt to address that.
Jackie.
I think we've had this, we've struggled with this already quite a bit, where we didn't know how prescriptive we should be and how high level, because for some governments, it may be a water and sewer network. For others, it may be a water network and a sewer network. For some, there may be a bridge. So it's a single asset that's a network, according to our definition. But for others, they may have different kinds of bridges, and they may classify them differently, or they may be part of a transportation network. So every government probably is handling this different, which is, I think, one of the reasons we didn't prescribe this. We just gave examples, but it goes to the problem we have with giving examples, right? That do the examples then become the level at which they think they need to set their networks? So I don't have a good answer to that. I'm not sure what the best way is to do this. We did add the word networks to some of those, but we didn't put the word network behind all of them. It's a conundrum.
Yeah, Jeff, I certainly had the comment, and I thought about it a lot. I started with, should we have left this as examples of infrastructure assets and then have somewhere else we have examples of networks? But as a board, we decided we wanted the examples of networks to kind of mirror these examples. And so would we have just had those examples in the next paragraph where we talk about networks? That ended up not making sense. So I ended up being, well, this makes sense to change this to be examples of networks. And then I was worried about what you were, because I do think, especially the governments, especially smaller governments that maybe just had one line for infrastructure. Probably all that infrastructure is roads, bridges, is a transportation network, because they're water and sewers in an enterprise fund, so it's already separate. And so I don't want them to think they have to break it down more than transportation network. And so I was kind of worried about the same thing, but then it's like, well, what about the governments that right now have it as roads and bridges? Now we're going to make them think they have to change. And in the end, I was like, well, this is pretty close to what we have now. And maybe that's the best message, is to just leave it as we have it now. But I mean, it's a little bit where Jackie is too. I don't have a better solution. So that's where I ended up, was just leaving it and saying, I guess this is okay. But I worried about the same thing. I just don't have a solution either. So. Diane.
Well, I thought that the whole discussion, we decided to take out the major classifications because there were too many levels. So we went to the networks, which I'm good with the networks, but I'm wondering if we should take out the roads, bridges, and tunnels and just change that to transportation, because it does seem too granular if network is our big classification, and then let governments decide where they want to break that network. But our implication by showing roads, bridges, tunnels would be you break it out into all of those different areas. And maybe transportation would be a better way of capturing those as a network instead of that granular description.
Thanks, Diane. Robert.
in rereading, I guess I'm looking at this more sequentially. So you start the first sentence that says infrastructure assets are capital assets, and they're part of a network. And then we say they're all in there, we're qualifying its stationary nature, can be maintained and preserved. Do we need to say examples of networks? If we're just trying to say, I'm going back, and maybe this is where you were, Joel, and then you went flip from one to, if we're just trying to say what examples of infrastructure assets globally are, do you just state those? The transportation, I don't know, are bridges separate and distinct enough from roads or tunnels? I'm not certain on that. On Diane's point, I mean, I think they are, because I could also then put sidewalks and bike trails, and I mean, the list could be a page long, and I don't think we want to do that. I think, but I think, and I know we went back and forth on this, if we just said examples of infrastructure assets are these, and I hope people understand it just is an example. It's not meant to limit or not be the only ones that are there, even though that will be the way it will be read in some cases. So I don't know if that helps or not.
I certainly contemplated that, Robert, but and I knew why we wanted to provide examples of networks, because we have this definition of a network in paragraph 4, and the disclosures are by network. And so we really wanted it to be clear what networks were. And so I kind of circled back around to being okay with it being examples of networks. And well, I'm saying the same thing I said earlier, because I wanted to do what Diane described, but then for people, governments that think of roads as a network or bridges as a network, I didn't want them to think they had to do something different now either. So anyway, I'm saying the same thing I said before. It's why I ended up just being okay and leaving it. Caroline.
When I originally read this, I was okay with what is here. There have been some interesting questions raised. If we were to make any change, I would be inclined with where Diane is at, as far as with the examples. There will be some who think they have to go down to a level where it's not intended. But then again, as everybody else says, how many examples do you put in? Because for every example you put in, there's 5 more governments that have it classified a different way. So with all that said, I come back to agreeing to what we have in here and leaving it that way.
Thanks, Caroline. Jeff?
Can I make a suggestion? I'm not sure it solves the problem, but it may help. That examples of networks sentence now, where it sits, as I ponder this some more, may not make the most sense. Could we drop that sentence to be the second sentence of 4, so that we focus 3 on infrastructure assets and buildings, and yeah, we mentioned network in the building sentence, but then it would say a network of what a network is, and then examples of networks are, and then continue with a network may have one component, may have many components, and finish the rest of it. That to me is more of a logical, as I think about it, place to put our examples of networks next to our sentence, right after our sentence of what a network is. Otherwise, we're kind of front running it.
Jackie.
I actually think we talked about that too the last
Did we?
time. And yeah, moving that examples to a different location. Because some of us had the same idea that you did, I think, Jeff, that it wasn't in the right place. I don't know if that fixes the problem or not. It's logically, it seems to make a little more sense to me in that location than it does where it is, but
Small.
we're going to have 2 examples in the same paragraph then. We're going to have examples of networks, and we're going to have examples of components. I don't know that that's necessarily bad. It may be illogical too.
I mean, I think when we talked about it last time, it was when it was still examples of infrastructure assets, and we didn't want to move that, but we had a TBD to provide examples of networks that was mirror or similar or the same as that one. And then as Scott put it together, that probably didn't make sense to Scott, so he just changed infrastructure assets to network. So I don't think we contemplated it exactly the kind of way that Jeff is describing it. Scott, did you have a thought?
A thought. I don't know that it does anything or muddies the waters more. Do we want, as you just said, Joel, should that be, since the requirements in paragraph 6, 7, 8, now the notes are required to be disclosed, the board's made decision by network, but since those requirements are by assets, do we want to have that paragraph, be examples of infrastructure assets? And that these are what's applying those recognition and measurement provisions. And if that's the case, then it probably shouldn't say, it should say, go back to saying examples of infrastructure assets, and then we rethink or we still have the issue as to what to do with systems, because we probably don't want to call them networks if they're assets of a network. I don't know if I'm making myself.
No, I understand what you're saying.
Okay.
I'm thinking through it. You start getting into, you kind of come back to the problem of where do you start the network and what's a subsystem, and governments start the network at a different place. And we didn't necessarily want them to force them to change that. So adding more structure to that might lead governments to think they have to change where they start and consider their network. And I mean, it's a possibility. Like what you're saying is logical and makes sense, but what do people think about changing this to be examples of infrastructure assets include roads, bridges, tunnels? Well, that's what they used to be. No, that's what they used to be. Some of them were systems, some of them were just, we added networks, but and then in paragraph 4, have examples of networks and have it be transportation network, including roads, bridges, tunnels, water and sewer networks. I don't know. That might be too much.
I mean, that's
Too
kind of,
Maybe just repeating the same, pretty much the same thing.
that is kind of the point there, right? Because you have infrastructure assets make up networks. In the first paragraph you're describing, here's what infrastructure assets are. Networks are transportation, energy, water, sewer, communication. Those are the networks.
But-
which I thought those were the things we wanted to have instead of classes.
But we're still then implying that those that have separate networks of bridges and tunnels would have to put them together to make a transportation network. So I don't know that that addresses the concern that we'd already talked about.
But Jackie, Jackie, this is the part the second part I was going to say is, do we tell people what major classes of capital assets are? Or they figure that out over time? So can we just say examples of infrastructure assets are, and do we have to tell them what examples of networks are?
I think we do.
I think we need examples of networks.
Well, but in most places where you Google, it's transportation. It's not a road's not a network, it's transportation. But Jackie's question is, do you have to then put if you have roads and bridges as 2 lines, do you have to put it together? Or could they be more granular than that if they wanted to be, but they don't have to be, at least they're at this level?
It seems like since we've made networks that highest level of category, we just need our examples to be at a high level. And I think what you're saying, Joel, makes sense. If we want to do examples of the capital assets that are included as infrastructure, such as roads, bridges, tunnels, and the more granular ones. But then the description of the networks needs to be the highest level because that's the equivalent of the major classifications.
I mean, in the end, I don't know. I don't know. Maybe we said disclose it by network. And if we say transportation is a network, are we making them do that? I was going to say people can always be more granular than what we tell them, but
these are just examples too. I mean, we could have the same thing with major classifications. We would provide transportation as a major classification, but some of them will want to list roads.
so okay. As we contemplate this, I'm genuinely not trying to make this more complicated, but I'm about to make it more complicated. A separate, but now I see related concern I have, although I didn't really have a solution, was the unit of account issue that we continue to hear about. And that we intentionally didn't really change the unit of account, except that we do require components to be broken out in that one specific instance. And that the disclosure, instead of potentially being just for infrastructure, you at least have to break it down into the networks, which you didn't necessarily have to do before. But other than that, we didn't change the unit of account. So if you had, like GASAC was talking about, you had my 2022 additions to roads, that's your unit of account. And that's how you apply the 80%. That's how you apply the changes in estimated useful life, et cetera. If we break this network thing out between here's individual assets and here's networks, are we now implying even more to people that roads themselves are assets, and now the estimated useful life applies down to my road? Like I was trying to avoid making them think they have to go to a lower level unit of account than what they might already do. And if we solve this by doing some of what I talked about a minute ago, and you just talked about, now I'm worried that we might almost be reinforcing people thinking they have to go down lower, because now we talk about assets different than networks and disclosures by network, but we talk about assets. And so now they might think they have to go lower. And I want to avoid that. So I'm stuck back to just leave it as it is. I'm adding to the conundrum, Jackie. I don't know if that made sense to
So
anybody.
the idea of infrastructure assets being roads, bridges, tunnels, and drainage systems, and networks being transportation and communication, that doesn't help you at all.
I understand that, and I kind of in a way like that idea, but I worry now that it's going to affect people's unit of account decisions, because they're going to think, because we talk about for your infrastructure assets, you have to periodically review the estimated useful lives. For infrastructure assets, although it's by network, but for infrastructure assets, you have to disclose the 80%, 100%, et cetera. That's going to imply that we actually did change the unit of account down to an individual asset. And
Well, you have to do the 8% on
that.
whatever, you have to do the 8% on whatever unit of account you currently account for today, right?
I agree with you, but that isn't necessarily an individual asset.
No, it's not an individual asset.
But are we implying that if we did this asset different than network kind of thing?
So by saying infrastructure assets are roads, somebody could say, well, you're saying it's the road. I'm like, well, it could be a mile of road. It could be a project related to road. It could be the surface of the road. It could be any of those things related to road. Like, we didn't say how granular that road is. It's a road.
I don't know, but in what you just said, it couldn't be all roads added in a year or all roads, period.
Could it not? Infrastructure assets are roads.
It
And if
does,
it's infrastructure as our roads and the roads is
it-
plural.
it
couldn't it?
doesn't imply that because you've differentiated infrastructure assets from networks. You've made it seem like those are two different things. So if you're talking about assets, you're talking about something less distinct than a network.
Yes. Yeah,
And
how about the asset is more granular than a network.
yes,
But don't you have the 8% thing at something probably more granular than a network?
I
think so.
It seems to me in most cases you do.
in some way you do. You have to back into that information in some way. And we can get into a composite method of depreciation discussion. but
Understood.
We're forcing them to figure that out some way, shape, or form to do the 80%, but it doesn't force more granularity necessarily,
No, I understand that.
at least not to an individual asset level.
No, I understand. No, I understand that, but I do think because parts of this statement talk about networks and part of this disclosure about major network, and then part of the statement is about the amount of depreciation. You almost got to deal with when is it about the asset and when is it about the network? Because if it's a transportation network, I don't know how I do the 80% thing.
Then what am I supposed to think about all the roads I added in 2021? It's not a network. It's not an asset.
It's an asset of
something in
roads.
between.
It's that unit of account was that project list, and that's an asset that's a road asset. It just happened to be all the products I did in that year. It's still a road asset.
I would imagine if I were a reader of this statement and I saw you said infrastructure assets, I don't think I would think I could do that. Especially when you differentiated that from a network. And we could tell them that, I guess, somehow, but. We already see they're struggling with that concept.
But even that scenario where it's the products I did in 2025 and I did different products in 2024, how does it relate to a network?
Those are a part of a network.
What we've heard them say is in their accounting records, those are individual assets. The 2024 products are an asset and the 2025 products are an asset.
They're an individual, they might be an individual line item in their capital asset inventory. I don't know that they would consider those to be quote unquote individual assets. Maybe they would, maybe they wouldn't, but.
If they're okay.
I don't disagree with what you're saying. I'm worried about how people interpret the words we write. And I don't know how to make it. I don't know how to fix all the problems. Is the problem. Robert.
I'm going back to being very sequential. So the first sentence is capital assets that are part of a network, okay? Then we're just qualifying their stationary nature. I don't like adding in paragraph 3 roads, bridges, that because I think that is going to potentially cause the problem that I think you're talking about, Joel. I like maybe taking that sentence though and putting it in paragraph 4 as the second sentence, as Jeff has suggested. I struggle a bit with how we say examples of networks include networks, but I can get beyond that. I can get beyond that. But I think basically it's sort of, this is what it is, big picture in 3, and then we get a little more definitive in 4 with examples which are not intended to be all inclusive.
Jeff.
So I don't want to argue against myself because Robert, you accurately portrayed what I said before, but some part of this discussion makes me think that, well, could we go back in 3 and say, go back to examples of infrastructure assets? And why I say that is I lean on the first sentence of 4, because the first sentence of 4 says a network of infrastructure assets is composed of all assets provide a particular type of service. It's really the conclusion that the government makes there that will determine what their networks are. If I think a particular type of service is transportation, that's going to be my network. If I think a particular type of service is a road, that's going to be my network. I don't think we need to feed them examples of networks as a result. We do, I think, need to give them examples of infrastructure assets, because we do in the rest of this thing say everything's by asset, infrastructure assets by network. So I think we could leave it at that and lean on the first sentence of 4 and say that's where you, now whether they pick up on that well enough, but I do think that's the key to me for deciding, for a government deciding what a network is, and not to feed them. Because then if we feed them network, then we're stuck. We're making judgments for them. We're saying, if we say transportation, we don't say transportation, hey, it's how you interpret particular type of service that determines what your networks are.
And what you just said, what would you do with the example sentence in paragraph 3? Would you change it to be examples of infrastructure assets, but leave the word networks in there where it's in there?
I might get rid of networks and just say infrastructure assets include drainage, water and sewer, dams, lighting, communications.
I think you've got to explain network someplace.
But I have in 4, like the first sentence of 4 is where I explain what a network is, right?
Okay, so that's the only, so you would not give examples, is what you're saying. You would make the examples just what the infrastructure assets are, and then explain networks just the first part of 4.
And maybe we could contemplate this in the basis. We can have some discussion about, we really thought about it, but we wanted to focus on particular type of service for the government to decide what their networks were. For example, transportation or roads, as being their, whatever we want to call that, determinant of what their networks are. Right? But we didn't want to prejudge that by putting examples.
I think I like your suggestion. I think that would work, changing it to just infrastructure assets in 3 and then having that description. I was concerned about leaving them hanging on what a network was, but I think the first part of 4 gets at that, and just leave it open and let them decide what their networks are. I could back that.
I realize, Robert, I threw you for a. If we didn't do that, then I would go back to, if people are like, no, I don't want to do that, then I'd be like, oh, if we're going to keep it examples of networks, then I would say that needs to go to 4.
Right.
So I would be consistent in that respect, but it's
But
really,
you're
to me,
kind of back where I started, was take out of networks, examples of. I probably either do it that way or move that sentence to 4. Yeah.
Other board members, two proposals, I guess, on the table. One, just have paragraph 3 be examples of infrastructure assets, so take networks of out, then take out the word networks from the examples, probably. Done. Or take that sentence, lift it up, and put it as the second sentence of paragraph 4. And then have no examples in paragraph 3. Jackie.
I think I'm supportive of Jeff's recommendation, getting rid of the word networks behind drainage, water and sewer, lighting, and communications, and just leaving those as examples of infrastructure assets. Not quite sure that they're going to get everything we're talking about in the first definition of 4. That might need some help, but I'm not sure that providing examples is going to help with that. So I'm supportive of Jeff's recommendation to leave the examples as those of just infrastructure assets and get rid of the word networks in the examples altogether.
I would say that solution, in the end, our problem with providing examples of networks is we don't know at what level to present the examples. because we want the government to have the choice. And so your solution hammers home that it's their choice, given that one sentence. So that, I mean,
Describe it more on the basis of what the guidance is, hey, it's whatever you determine. Whatever you determine your particular type of services.
you know,
Not that different functions.
I mean, I'm a little like Jackie, I'm a little worried that they're not gonna kind of get networks, but in the end, given the conundrum, I do think Jeff's approach is the one that most accurately ends up giving them their option that we're trying to give them, but describe what these things are.
I think it's a function of trying to not solve the problem by creating a worse problem, right? And that's where, if I give them examples of, then I'm not stuck at this level thing, and do I do transportation, do I not? I can avoid that.
Scott just tried to execute our TBD, which we said we want examples of networks, and now we're saying, no, we don't want examples of networks.
So what do you do with the last sentence in 3? Because it brings in the concept of a network, that it's integral to a network. Do you move it to 4?
I think
No, because networks in the first sentence of
Right.
paragraph 3, and it references paragraph 4. And so I think just continuing on,
Right,
I think
you
you're
do.
fine. Carolyn,
I can, I mean, what Jeff is proposing, it does make sense. It does give the governments the ability to exercise their judgment. I I can see a lot of questions coming in regarding what is a network? And we're going to have questions regardless. So I think this does, with taking out the examples of the networks in 3, does make sense. So I can support that.
thanks, Carolyn. So Scott, paragraph 3, third sentence would be examples of, take networks of out. Infrastructure assets include roads, bridges, tunnels, drainage, water and sewer, dams, lighting, and communications. We're good with it saying that. Does that sound good to you, Scott?
I see some heads nodding, but I don't see any going side to side. So
They're nodding up and down. And then paragraph 4, from that perspective, stays as is. And so we just don't have examples of networks, but maybe in the basis, we talk about it being the government's judgment to determine particular type of service. What level that is based on how they're organized, right? Might have a Department of Transportation, or they might have a roads department, or whatever it is. Okay. Anything else on paragraph 3? Mike?
I'm just throwing this out there. Should communication be still shown as an example of an infrastructure asset? That's because I always thought of that as higher, as a group. As we explain, networks, I always thought of that as something at a higher level. So leaving it, is it right to leave that in this sentence here? Just kind of
So
throwing that
we've
out.
gone, around the circle on this one, right? This is the only one we added to the old language, right? And this idea was this was fiber optic cables or whatever, all those things, right? Cell phone
Correct.
towers.
Seems like you need to go back to the original couple sentences. And because, we've gotten all kinds of feedback on, well, this and this is only 5 years, or this is not stationary or whatever. And so it's kind of a judgment, I think, on the government's part that we put communications, but they need to figure out, okay, what part of that is really considered infrastructure based on the definition that we have in the first couple sentences. So I think we leave it to their judgment and in that way, because we've provided enough information to determine what an infrastructure is, what an infrastructure asset is.
Other thoughts? I'm kind of a little bit where Carolyn is. If I just saw and communications, I don't like that's not an asset. It almost only makes sense in the context of a network. I would vote to take it out, I think. Just I mean, I know why we included it, but and I agree that there are assets that make up a communication network, but just saying communication seems I'm not sure what our stakeholders make sense of. Jackie.
Since we're just talking about infrastructure assets here, maybe we change communications to something that would represent a piece of a communications network like fiber optics.
I would be fine with that too.
That at least gets them thinking that there might be something out of what they've normally thought of as infrastructure assets that they need to think beyond where they've currently been thinking.
Communication towers.
Something like that. Anything that would be a physical asset that could be part of a communications network.
What do we want the thing to be? Communication tower, fiber optic cables.
One of those is fine with me. I'm indifferent to which one.
Robert.
I'm just, do you say and communication towers, cables, I want to say et cetera, because that just sounds, but, or similar.
I'll just pick one.
Yeah.
You said communication tower first.
Yeah.
Maybe we just do that one. Scott?
I was going to say towers or lines. That's, I think, what it comes down to.
Let's just say tower. Thank you, Carolyn. Anything else on paragraph 3? Jeff?
There was just one kind of editorial, but kind of not, is the last sentence. When we had talked, we had talked a lot about this last time. And the only change from the way I thought it was going to be written was when we get to ancillary, we say and are an ancillary part. And when we had talked about it before, it was but are only an ancillary part. And I thought that but was important because I think it's a little, integral and ancillary to me are two different thoughts. They're not sequential. They're not an and thing. They're an or thing. And so to set off and say, but our own, so to get people thinking, okay, it's integral, but it's ancillary, right? To make sure that they understand that, I think is, I don't know if they'll all get it, but I'm trying to make sure that they're focusing on it as a distinctly different thing to be ancillary than to be integral.
So instead of and are, it says what? But are only. How's that different?
I view that as saying something's integral, but it's only ancillary. Because it's different. Ancillary is a small or tangential. Integral is super important. Right? So I think those are two different things, and we're meaning it that way. So I'm trying to get to at the point that it's integral, it's super important. But if it's ancillary, right? No.
So in a way, they mean the same thing, but in a way, I kind of like it a little better because, and I remember talking about this before, being integral and ancillary sounds contradictory. I do think in the end, it means kind of both things are necessary, which is this, so they're both saying the same thing, but what was it? But our only ancillary does sound a little better to me, but
I like it.
our only. Jackie.
I like it too, because I agree that it defines the relationship between the two better. And they're both necessary, but they don't have the same level of relevance to the big picture, but they're both necessary. I like that.
Scott, are you okay with that? Okay. Robert, are you okay? Carolyn, okay with that? Okay. All right, sounds good. Thank you, Jeff. Anything else on paragraph 3?
Okay, paragraph 4. I will say, the text that's in markup should not have been in markup, but we would propose instead of consisting. That was a change made by, during the technical process for readability. We were trying to get away from saying composed of components. It should say may consist of rather than consist of, to bring back the issue Jeff brought up at last meeting.
Thanks, Scott. Yeah, that's good. Taking the may out, well, it seemed. I understand the consist versus composed, okay, but taking the may out didn't make sense, but that wasn't supposed to be taken out. May consist of many components. Okay. Thank you. Any comments on paragraph 4 with that edit being made? Jackie.
This is a little confusing to me because of what we're doing right now. So we got in here that a network is composed of many assets, probably. And then we can also have a network that only has one asset, infrastructure asset, that has many components. But wouldn't a network also have many components if it's going to be comprised of or made up of several different kinds of assets? Or so when we get to the one down here where a component is separate, distinguishable part, and then we're talking about, for example, are we talking about now still a single asset because it follows the single asset thing, or now is we talking about either a single asset or a network? So I was confused about how that applied because we're using consistent, composed, and it wasn't really clear to me when we were talking about which one or if it applied to both of them, or so that's where I'm at.
On the fly, throwing it out, would it help if component was a separate paragraph?
Maybe, or maybe if we talked about the idea that both a network can have components and a single asset can have components, because that's what we mean, right? They can both have multiple components, right?
Sure.
Well, I think it depends on how you're viewing the sequence, Jackie, which is what you're talking. So I read the last, what is that, the next to last sentence when it talks about components, it says of that infrastructure asset. So what we're talking about is, I thought, is you can have components in your assets, And then earlier on, we say your networks can have one asset or can have many assets. So I thought you didn't need to say how do components relate to networks, because I told you components relate to assets and assets relate to networks.
So you're folding the components into the assets, which get folded into the network. Okay, if that's clear to you,
That's the way I read 4.
It's certainly how I thought about 4.
Yeah. I think that's what.
And it, I don't know, it kind of follows the sentences in order that way.
Would it help, Jackie, if before the example on line 28, the service capacity, since the paragraph's on network, then instead said the service capacity, that infrastructure asset of the network? Of infrastructure assets.
My initial reaction was that might be more confusing, but in the end, what this paragraph is saying is that all infrastructure is part of a network of some sort. It might be it's only one thing with components, but so every infrastructure is a network in some way. The disclosures are by network, so every infrastructure has to fit into a network somehow. So
if I'm the only one that's having a problem separating components out and seeing where they apply and how they fit at what level, then probably nobody else is going to have a problem with it.
I'm okay with Scott's suggestion. I'm okay leaving it. It's up to.
I think it adds some confusion to put network in there. I see it like Jeff described, but that was the way I was reading it.
Jeff's with Diane. Robert.
I'm okay leaving it as it is.
All right, Robert. Carolyn, what do you think?
I was okay with it as is. If Scott's suggestion provides clarity, then I can support that.
Well, I've got 3 over here that would rather just leave it. And Carolyn and I are kind of in the middle. You okay leaving it, Jackie, for now? And we'll just, I don't remember the Gas Act talking about this part.
I don't think that they had that many concerns about it. I'm fine. And he's made you suggested the one change that had to be made anyway, and I think that might help. So I guess I'm fine with leaving it. If it doesn't work out in the exposure draft, we should hear about it, right?
Correct.
So.
All right. Very good.
Yeah, I'm being a little careful with Chris because his comments are very, very succinct and y'all are having a lot of changes conversations, which I really can't speak to. So that's why I'm being very, very quiet.
Anything else on paragraph 4? And then we didn't change anything in paragraph 4 other than what Scott has noted he was going to change from the edit. The may consist. All right. Next, Scott.
Paragraph 5, I assume we'll have lots of comments.
Maybe next time.
Darn, okay. I was hoping. Moving on to the recognition and measurement sections, paragraph 6.
Comments on 6?
Seeing any?
Nope.
Paragraph 7.
Diane.
So I had a problem with the way 7 was worded, and I would like to see the clause in that first sentence that has a cost that is significant in relation to the total cost of the infrastructure asset move to the middle of, well, let me just read this in my new wording and see what you think. If the estimated useful life of a component of an infrastructure asset is substantially different from the estimated useful life of the infrastructure asset and has a cost that is significant in relation to the total cost of the infrastructure asset, depreciation expense should be calculated for that component. And then the rest is the same. So it's just taking that clause out, because I thought that was confusing to just throw that in the middle. Finish the thought of the estimated useful life of a component of an infrastructure asset is substantially different from the estimated useful life of the infrastructure asset. And that's why I moved that other part to and has a cost that is significant.
Jackie.
Yeah, I can support that, because really what you need to do is figure out first whether or not you've got an infrastructure asset that has a useful life that's substantially different before you start looking at the cost relationship. You wouldn't look at the cost relationship first. You would look at the substantially different relationship first, I would think. So that makes sense to me.
It's interesting, Jackie, because I'd do the exact opposite. I would, no, because if the cost is significant, I don't care about the life.
That was the
So,
board's.
so the way in my mind, the way we worded it was the first thing you focus on is I want a cost that's significantly different. If I don't have any of those, the useful life doesn't matter to me, because at the end of the day, the cost is the thing that will drive the materiality to me. And so if I can't get to the cost, the useful life wouldn't matter. So I kind of liked it the way it was because it made you think about cost first.
But you could actually word it that way. You could start out with, if a component of an infrastructure that has a cost that is significant in relation to the total cost of the infrastructure asset and has an estimated useful life that's substantially different. So you could flip it around, but I would put the thoughts all together. Right now, we've split it like right in the middle. Useful life, cost, then back to useful life. And so you could do it either way, but I would put the thoughts together. So you have one thought and then another thought.
Yes, I agree with that. Mm-hmm.
Right. If we feel like cost is the thing first, then I agree with what Diane said second, right? Where you get rid of estimated useful life at the beginning of that paragraph, you focus it on cost, then you talk about estimated useful life.
Okay, so in that world, you're taking the estimated useful life part out of that very beginning and putting it in front of the substantially different, more or less.
To focus on the cost?
Well,
yeah,
I guess to avoid breaking up estimated useful life and substantially different.
Right.
Okay.
And so you either decide, okay, do you want to focus on the cost first and then you put that first in the sentence, or do you want to focus on the substantially different from the estimated useful lives?
I may not say this right, but this is what I think you're saying. It's basically if a component of an infrastructure asset has a cost that's significant in relation to the total cost of the asset, and the useful life is substantially different from the infrastructure asset, do this. I don't think that changes it, Scott, but I think that's what she was saying.
Well, if we're going to focus on cost, I would say if a component of an infrastructure asset that has a cost that is significant in relation to the total cost of the infrastructure asset and is substantially different from the, yes. Uh-huh.
Reason why I say this is because I worry if we did it the other way. I worry if we did it the other way, we'll have some governments that will see components that have substantially different useful lives, yet the cost differential is not significant, and they're going to do it anyways because the useful lives are substantially different. And so for me, it's like, give me the ones where the cost of material to begin with significant. Sorry, I use that word. Give me the ones where the cost is significant, and then worry about part two, but you got to get to part one first. I mean, we're agreeing. I'm not disagreeing with the wording.
Oh, and I'm fine with that. I felt like we were breaking up the clauses. And so that's all I was trying to do, but I'm fine to reword it and focus on the cost first.
Scott, does that change the meaning, you think?
No, but I guess I would think the board would want to highlight the estimated useful life since that's the driving this. But either way,
Well, it will though, right? Because if the cost of a component of an infrastructure is significant in relation to the total, and the estimated useful life is substantially different,
sure.
Right? Because you're still saying it that way.
I mean, I think the important is the and. I mean, that's the nuance that I think your version 2 gets to.
Well, either way.
Well, either way, but I understand if it's not significant cost in comparison, why would you bother? Because otherwise they're going to do exactly what you're going to say. Well, this one has a 10-year life and it's a component of this water system, and this has a 10-year life, and that rest of his system has a 100-year life. Oh, we got to do something here, and it may, but it's a $10,000 asset compared to a $10 million network. Yeah.
Carolyn.
I was fine with the original, but I do like the second suggestion that Alan and Diane came up with, where you emphasize all the make sure I get it right, significant cost in relation to, and then you look at the estimated useful life versus at first jumping to the estimated useful life and going down a road where you don't need to go, especially if the cost difference is immaterial. So I like that suggestion.
Thanks, Carolyn. I didn't love the wording of this. And I kind of had almost wondered if the TBD was more clear, but but as I'm sitting here with what you guys have kind of come up with, it seems more clear than what's there. It's helpful, and it's probably better than what I was trying to get at and think about. So I think I'm good with the proposal too. So I'm good with that. Jackie or Robert, were you good with that? I think you were.
Yes,
You
yes,
were.
I was good.
And Jackie.
Yes, I'm putting cost first is fine with me. I just don't like having the split.
Okay. Jeff, thoughts?
Yeah, I think I'm okay with that. If that's the sentiment that it's a cost thing first, then I think that makes it clear.
Okay. Are you good, Scott? Okay. All right. Well, anything else on paragraph 7? Well, I guess anything else on paragraph 7.
So I'm not sure it's a directly paragraph 7 thing, but I guess it would fall into this section. You alluded to it before, Joel, is the composite depreciation method. Like, we talked a lot about this. Do we need to say somewhere in this statement that at least for a certain version of that composite method as described in 34 really wouldn't work with all what we're trying to do with this statement. So you can't do composite in that. I think it's non-weighted average, or the non-weighted average way of doing it under 34. And don't we have to say something to that effect?
So Jeff, you and I have talked about this in the past. And so I've spent a fair amount of time looking at the existing composite and understanding it better. And in the end, I'll highlight some of the existing literature. In 1400.120, it says the composite depreciation rate is generally used throughout the life of the grouping of assets. And here's the important part. However, it should be recalculated if the composition of the assets or the estimate of the average useful life changes significantly. So no matter what, whether it's weighted average or non-weighted average, even the non-weighted average one, you still had to add up all the estimated useful lives. You just didn't weight it, but you had to deal with the estimated useful lives. And according to this part of the standard, if you change that significantly, you've got to redo it. You've got to redo the calculation. And then more specifically, if you go into, there's a Q&A that kind of talks about how you deal with the assets that you account for on the composite method when you remove and replace a major length within that road. And it says that the composite method assumes the assets are retired at the end of their useful life, so you don't record any gain or loss on the section, but the cost of the replaced road should be removed from both the capital asset account and the accumulated depreciation account. It goes on to tell you that there are some cost methods commonly used within the composite method to be able to do that, to take a part of it out, include average cost, first in, first out, specific identification. So I say that, all that to say that in essence, if a government's using the composite method as they're adding new assets on or taking old ones off because they replace it or whatever, they've got to have records enough or figure out a way to break apart their composite in order to continue to have depreciation make sense for the new batch of assets. All that leads me to say is if you can do that stuff through specific identification, having accounting records to show when you changed the composite, the estimated average age of the useful lives, you can back into all the disclosures and the requirements that we're providing here. Is it easy? No. Does it make me all the benefits of using the composite method? Does it kind of remove them? To me, it probably does, but you can still do it. And so I kind of came to the conclusion, well, at some point I'm not sure this is going to work and we might take that away. I think if they're really applying the composite method the right way, following these requirements, they should have records enough to be able to back into calculate the 80%, 100%, all the stuff we're asking them to do. And so I'm like, well, leave it in there. Like, it's not easy, but they're not exempt from any of the disclosures. They still have to figure out a way to do it from the records they have.
In effect, what you're saying is they could have the information to recalculate what they need to recalculate on an ongoing basis as the things are going in and out of this composite.
If they're doing composite method the right way, they should, and they keep decent records, they should be able to have all the information necessary to calculate the stuff we're asking them to.
And could we have some discussion of that in the basis? Say we thought about it, here's why we thought about composite depreciation, whether it would, be appropriate here, and here's why the board came to the conclusion that, and sort of to message that this point that we think you're recalculating, we point to these things, like we think governments, if they're doing this is consistent with what we have laid out here. Just to
I'll leave that up to Scott and the team. I'm comfortable with that, but Scott nodding his head yes. So does that sound reasonable to you? Kind of, sort of, based on you're trusting me? I have the references. I got the receipts.
I know way more about composite.
I know way more about it now than I did a month or two ago. Okay. I lost track though, because I had that note early in my notes. So we were on paragraph 7? No. 6. 7. Well, we just redid 7. Okay, so what was any other comments on 7? And you brought up that. Okay. Any other comments on 7? All right, Scott. Next.
Okay, move to the next section, paragraph 8.
I don't have a comment on 8, Scott, but I will highlight in particular to me here, although it's kind of throughout. Most of the standards we've issued recently have been like wholesale replacements or just additions to the literature. This standard is kind of by necessity of how we write standards these days or original pronouncements. This one is going to be one that on a standalone basis in some parts of it, it's not going to make a lot of sense. You have to combine it in with the current literature in order to fully understand what you're doing. And that's just the nature of how we do OPs. So it is what it is. But this is going to be another kind of like the reporting entity, although maybe not as bad, where you're going to have to start going to the COD to see everything in one place rather than it's a little more piecemeal for capital assets now because of this. But no edit. I'm not suggesting anything, just highlighting that this paragraph in particular is a part of that, but it relates to a lot of things.
I mean, I made a point to Scott that there was something, I think, in our deliberations where there was something in paragraph, forget which of it was, 23A through C, which we reference here. And there was something in we talk about for modified, we use the term establish and disclose. And I think we changed that to establish and present as RSI in our decisions, right? And so that was something I was like, well, Scott, we're actually changing that, but where does that go? Do we have to say that here? I think you said maybe we could do it in the codification, right, as a thing, but that's just an example of what you're pointing out, right? It's an amalgam of what exists currently and the changes that we're laying on top of it, right? And you have to understand the whole thing to understand how it's working.
Jackie.
I did have one comment on this, and that was the fact that it says governments that have processes in place that meet the requirements. And to me, somebody reading that might assume that that meant that they already had to have the processes in place before they could apply the modified approach. And I know that's not what we wanted because we were kind of hoping more people might look at this as a possible. So I was thinking we probably don't even need that. We can just say governments that meet the requirements of paragraphs 23A through 23C. I don't know that we have to say that they have the processes in place.
So I struggled with this paragraph a little for differently. I wondered if we still needed the 4 asset management systems in there because I thought the point of what we were doing was to take systems out and replace it with processes.
But I don't know whether 23A and 23C refer to processes or systems. And I don't know how that gets modified through the codification. So yeah, I understand what you're saying there. I'm just not real sure how that gets handled.
How would that work, Scott? So we say asset management systems in current literature, right? I guess the question, Jackie, you're asking, right, is does asset management systems in current literature stay there? And we just have this thing laid over that says now it's processes, or do we delete asset management systems in current literature and put processes in there?
The board's tentative decision was to delete asset management systems because that's the lead into those subparagraphs.
And so this language is the key to you now going to the COD and taking out asset management systems and putting in processes instead.
A through C don't mention system or process. Looking at it right now. A through C don't mention process or system, either one. It's the lead in to A through C says to meet the requirement, the asset management system should, and it lists 3 things it should do. The thing is, we're not changing that to be asset management systems. We're saying they should have a process that does those same three things that the asset management system used to do.
So basically what 8 is going to do is lift that first sentence and put this sentence in there. This is going to replace that sentence. I'm not I guess, sorry.
I don't know what the codification instruction is. Essentially, I don't want to speak for the codification instructions.
Like I said, I don't really mind. It's just that I want to make sure that they understand that they don't have to already have something in place before they could look at using the modified approach, that they could still continue to meet the requirements and then put the modified approach in place. I'm concerned that it says have process in place means that it had to happen before we make this change to the standard.
So you're saying strike in place.
Right.
Okay.
That would work for me.
But I thought you wanted to take out the part that they have it in place.
But what Scott's saying is if it just says governments that have processes that meet the requirements of 23A and 20, they don't have to already have them in place, would be taken out. And to me, that would fix my concern.
Yes, paragraph 23.
Get rid of A through C.
No,
You keep A through C.
yeah, because A through C aren't changing. It's right now, paragraph 23 says systems should meet : and then it has A through C. We're just gonna say has processes that meet A through C. So A through C themselves aren't changing, but
A through C.
the requirements are in A through C.
That is different than your, I mean, or an additional to your.
My question is, do we need the phrase for asset management systems in here? And could it just say governments that have processes that meet the requirements of paragraph 23A through C of statement 34 may report infrastructure assets using the modified approach?
And if there's no good reason for those asset management systems words, I agree with you, Joel. Again, it kind of helps clean that up and say, if you meet these requirements, you can have a modified approach.
Yeah, it's almost like it's saying somehow the processes are for the systems when what we were really trying to do was take systems out and replace it with processes. I mean, I understand what you were saying. I wonder if it's more confusing and we just take it out. Take out for asset management systems.
I would be good with that, but are we going to supersede that lead-in sentence in 34 that references asset management
We're
systems?
gonna change asset management systems to processes.
Okay, and it will supersede that sentence.
We'll
Okay,
admit,
great.
yes.
Good.
In the COD instructions,
Yeah.
we'll change
Okay,
that
good.
sentence.
Good, because that implies something that we were trying to get rid of.
Yeah.
Okay.
Can somebody read what we're changing this to? I think I agree with the changes. I just want to hear it.
I believe it should say governments that have processes that meet the requirements in paragraphs 23A through 23C of statement 34 may report infrastructure assets using the modified approach.
I agree with that cleanup.
That's good, Scott. You're okay. Robert, Jeff, everybody. All right. Anything else on paragraph 8? Jeff?
Sorry to do this, but I just remembered something else from paragraph 7. I promise not to go back to 6 after that. But it was something I think somebody brought up at GASAC, and maybe somebody else will remember. And I just figured now's the time we should talk about it. See if anybody else remembers it and see if I'm getting it right. I think the comment was to the effect of, in this componentization paragraph, we have the comparison of different from the estimated useful life of the infrastructure asset. And I think they were making the point, in a componentized world, do I even have an estimated useful life for the asset? The estimated useful life is my components. Do I create one? So what am I comparing it to? If I have 3 components, each with different useful lives, that's my asset. Do I come up with a estimated useful life for my asset in order to be able to create this?
In other words, should it be different from the estimated useful life of the rest of the infrastructure asset?
Or different from, I don't know how to
Of
phrase it, or different from the other components of the infrastructure asset, right? That would be, because there may not be in this future world one estimated useful life for the asset. Could be just a bunch of component estimated useful lives, right?
from the other components of the infrastructure asset.
Right.
I'm good with that change. Everybody else okay?
But
Right. Does anybody remember that we got that comment?
Yes,
right?
I remember the
Yeah,
discussion.
yeah. And I thought it had some merit.
if we're talking about the cost of a component is significant in relation to the total cost of the asset, which is and the useful life, estimated useful life is significantly different from the useful life of the infrastructure asset. I'm doing all this before I broke it apart. This
No.
analysis happens before I ever have it, before I've decided to account for it as a component.
Well, now I didn't necessarily agree with this, but didn't we say this is going to apply to new assets?
It applies to ones
So in my new asset world,
Right.
I'm determining
right.
estimated useful lives by component now, right? That's how I'm thinking about it.
I'm not going anywhere near that until I have a cost that's significant first. That's my whole point.
No, but I understand that. But once you do, then you've got it. What am I doing? How am I making my substantially different comparison?
Well, because it's substantially different from the estimated useful life of the infrastructure asset. That's the big thing. I don't think anybody's going to think that's the smaller thing. I think everybody would read that to know that.
No. Go ahead. Maybe Jackie's going to help.
No, I'm going to complicate it even more. So my question is, if we do it by substantially different than the components, are we talking about the component with the shortest life, the longest life, the average of the components? Which component are we comparing it to when we talk about substantially different? I know what you're saying, Alan. I'm just going back to what Jeff is saying about they would have to compare the estimated useful life to the components rather than, because there's no useful life of the infrastructure assets if it's been componentized, right? So you're saying, how do you get that added up to one useful life? And I'm saying, now that we've got it on components, what does this substantially apply to? The one with the longest useful life, the one with the shortest useful life, the average useful life of the components. So yeah.
So then I'm like, what are we asking? So what are you asking me to do, right? Are you asking, I've componentized my asset. Now I've got to create, separate and apart from that, an estimated useful life for the asset. Even though I don't, I'm doing what you want me to do because I've got components. So now I've got to create this estimated useful life of the asset in order to make this comparison. And I'm just wondering if that's what we want
but
people
Jeff,
to do.
But Jeff, you know that. You know your road's a 40-year road. And then what you're saying is, but I have a surface that's a 7-year surface. I know the road's a 40-year road. I'm comparing the 7-year surface to the 40-year road.
But
you know that.
But think about it, Alan, right? Isn't it the case though that when I'm in a world where I don't have to componentize, I'm coming up with my 40 as an amalgam of the 7 and the 60 and the other parts of this thing that get me to a 40-year useful life.
No, if the road's 40
for the whole asset.
The road is 40 is one thing, is how you've historically thought about it.
I don't think governments amalgamate and kind of average out. They probably take whatever the longest thing is, and that's what they depreciate it over.
So then if they do that, then Joel, do they need, so what are we asking them to make the comparison to then, right?
To the main thing, the rest of it, the original longest part of the estimated useful life, the bulk of it.
So to Jackie's question, right, that would be the component with the longest estimated useful.
No, you'd compare this, you compare the service to the road that you've known what the useful life of that road is forever. You've always known what the road was. It's 40 years. You're comparing that surface to that road to the 40 years. They know that. They've known that forever. We're not asking them to figure that out for scratch. They've always known that. It's just now you're saying the surface of the road is 7 years, compare the 7 to the 40. You know the 40. I don't think anybody's going to think they have to come up with that or have to figure that out. They already know it.
And if you play it out to the rest of the sentence, that you should calculate depreciation expense on that component using the estimated useful life of the component rather than the estimated useful life of the infrastructure asset. If we start changing both places where we talk about the infrastructure asset, you're gonna, I think, muck up the whole thing and just make it more complicated than it's worth. I understand the comment. Like, I get it. I guess I side a little bit with where Alan is, that I think people are gonna understand what we're talking about. And being more precise with the language might just make it more confusing. Diane.
It also seems like if you're looking at the amount being significantly different, not every infrastructure asset is going to be totally componentized. They're going to have like a piece, but that's it. It's because of that significantly or substantially different.
That is my hope. I'm hoping we don't have infrastructure broken out by 30 components. That's not the goal. All right, so Jeff, you brought it up. Are you okay then just leaving it?
Yeah,
We
no,
talked about it.
Yeah, I just wanted to
Okay.
make sure that, because I heard the comment, I wanted to just make sure
No,
that we
that's
came
fair.
to the conclusion that.
Yeah, that's fair.
Yeah.
Is everybody else okay just leaving it as is, or? I mean, Jackie doesn't even like the whole thing, right? No.
You are correct.
She's like, you could just remove the whole paragraph. I'd be okay, but. All right. Thanks, Jeff. So we're on to paragraph 9. Any comments on paragraph 9? Jackie.
It was just a wording thing on this one. I thought that it read a little awkwardly, that it might be able to be wordsmithed a little, so it was a little easier to read. I mean, I gave some suggestions to the team, and I'm fine with what I gave to the team, but my concern was that it was just, maybe it needs a little more wordsmithing. Was all. I don't have a problem with the content, just the way that was reading seemed a little awkward.
I would probably suggest, if that's the case, striking including infrastructure assets which require information to be divided by major classes of capital assets, and have it say, within note disclosures of capital assets, infrastructure assets should be divided by networks of infrastructure assets. That take care of, it wasn't what you provided, but I think
But it would address probably my concern that there's just too much going on in there that's breaking apart the idea.
I kind of like Scott's suggestion. Within note disclosures about capital assets, infrastructure assets should be divided by networks of infrastructure assets.
Is it divided by or divided into? Divided by is like divided by. Divided into.
I think into.
Into, right?
Into. I mean, you don't have, you already, if you understand, you have to already disclose by major classes of capital assets. So that we're just clarifying within infrastructure being a class that you have to disclose by network. So I think that improves it.
Is it by or into? Or we can leave it up to Reagan?
it should be, well,
It should be
be
into.
consistent with the requirement in 34. It should be into.
Into?
Into in there.
Excellent. So Jackie, that helped you. Improvement. Everybody okay with that change? Does seem like a good edit. Thanks, Scott. Anything else on paragraph 9? All right, next one. Paragraph 10. So I will say my first thing about paragraph 10. I already had this as a note. I've been worried about it for a bit. And then it came up at GASAC 2 that it remains unclear to some people, at least my vision of this disclosure of the 80%, 100% is that in addition to the roll forward, it's not supposed to affect the rows of your roll forward. Now, I think Scott talked about you might add columns out to the right. That's maybe a way to do it. So it might be in the roll forward, but it's not adding rows. You're not breaking out each row of the roll forward that is now by network into here's the amounts that are between 0 and 80% depreciated. Here's the amounts that are 80 to 100. Here's the amounts that are over 100. Partly because I didn't want, like we talked about in 104 with the held for sale, when we took that out, or we made it clear to take that out, we didn't want the roll forward being mucked up by ins and outs between the rows. And there were GASAC members that brought that up. So I don't necessarily have a fix. I think a fix might be an illustration. A fix could be, I mean, in statement 104, we had a sentence that noted the held for sale should continue to be reported as whatever. And then we said, in addition, you should report that. I don't know if we necessarily need that, or Scott, were you planning on an illustration of a note disclosure? There was some talk at GASAC about that being helpful too.
We weren't, other than updating the current illustrations in the comprehensive implication guide, but we weren't planning on providing one here, but we can if that's what the board would like.
In updating that, would you add the new disclosures in? Or that's part of updating it? I mean, I know part of updating it is to break out infrastructure by the networks, but also you are going to include an example of.
Well, because if they have infrastructure, you would have
to do it. Well, it doesn't
unless-
mean they
unless we
have
would-
any.
unless we would say in the assumptions that they
They don't have any that
Yeah.
meet that. Okay. How does that usually work? If we update it in the, does that come through in COD instructions? I should probably know this.
update the illustration.
Yes.
No,
You just update it.
They're done to what's in the comprehensive implementation guide. Because it's not authoritative.
But if we're gonna do that anyways, we're already doing the work. I would almost like to put it in as an illustration here so that people have it when they're implementing the standard.
I think that's a really good idea.
But it is the case, right? So are you suggesting, Joel, that we don't do anything? Because I've heard you say many times, right? I even gave the comment to staff, this is in addition to the roll forward and separate from it. Right? And so I agree with the illustration route 100% no matter what. My question is, illustrations, are they non-authoritative? And therefore, we are leaving open a world where they could do it as part of their roll forward table. And how would you feel about that if to do that, right?
I mean, I would have two concerns. One was I really hadn't thought about putting it as extra columns out to the right, which Scott said he was kind of thinking about. So like, I would be okay if a government did that. Right, because that wouldn't muck up the ins and outs of the roll forward. I don't really want the ins and outs of the roll forward to be mucked up. So I And I think that was the concern of why we kind of almost in 104 dictated it more than we would have to do here. So it's how prescriptive do you want to be? How concerned are you with the wanting to make sure they don't muck up the rows on the roll forward, versus being a little more permissive and letting governments put it in columns or do it however they want to.
Can we also add it to the basis in the discussion?
I mean, I'm almost of a mind, to be honest, that I would like to see the illustration. By seeing the illustration, it may help me decide like how I feel about attempting to even do it, right? Like, or I mean, I think certainly a lot of governments will take the illustration and run with it, right? So we know that. But the more I'm like, yeah, this is how, because even as we're talking about it, I'm trying to think of my own, well, how did I envision it laying out? And I'm not even sure, right? So if I see it like, here's a sensible way we have of illustrating it, do I think that covers the territory? Yes, we could probably put something in the basis too, but then I might be like, oh no, we need to put something in the standard because I didn't get this from the words. You know what I mean? Like that kind of thing.
Jackie?
I do agree with you that I really don't want to see the roll forward messed with the infrastructure asset. That's the roll forward is a capital asset. That's a capital asset roll forward. It's not just an infrastructure roll forward. So I would like not to see that messed with. I don't care if we add some columns out there on the end or do it separately, but I would just as soon see the capital asset roll forward be the capital asset roll forward as it is currently.
I guess as I think about it, even when I think about the columns, what you just made me think about is it is a capital asset. If I've got capital assets roll forward, and now I've got these columns out there that say over 100% depreciated, I'm not doing that for buildings or equipment or the
Right.
other capital assets. I'm only doing it for infrastructure. So it'd be almost misleading to add the columns and not have it address everything. So that makes me back to, I always envisioned it being this chart below the roll forward that kind of says of the infrastructure above, the below amounts are between 80 and 100% depreciated. And then you have that. That's what I always envisioned it being. So then it becomes, if you believe that, should we try to, the problem with 104 is there's a little bit of a classification of held for sale. And so this doesn't work quite the same way because I'm not sure what the language would look like. I don't know that it works exactly the same way. So I'm hesitant to do that. And maybe the illustration will be enough to avoid it.
It's almost the
We
case
can
that you
put
could,
NA in those other columns.
But doesn't beg the question, why shouldn't is somebody in the future going to go, well, why shouldn't you be disclosing if you have buildings that are,
Yeah.
and
I don't know if that would just only in the future. We might hear that.
right.
I have from the exposure.
Don't you have buildings or other capital assets that are 80% depreciated, and shouldn't you be disclosing that as well? I mean, part of my issue, and this was the question I had of the staff, and maybe I'm just dense, but the language was confusing to me, the way that this paragraph was drafted, beyond the issue about placement and whether, I mean, I think it needs to be below in the capital asset note, somewhere far away from the roll forward. That's my, okay. It will be right below in most cases, I suspect. But didn't the PV wasn't there a provision to disclose fully depreciated as well as 80%? But okay, but I didn't get that from the draft of paragraph 10, and that was confused. And I think there was, beyond other confusion from some GASAC members, I mean, just in general, there were a couple comments about breaking this into separate sentences to help clarify. So So I wasn't completely confused. I mean, from,
Robert, there's almost like two conversations going on, I think.
Yeah.
One is, do we need to tweak a reword paragraph 10 itself, which we did our GASX say, by the way. The second one is, do you just want to specifically say, do not put this in the roll forward? If you don't say that, they can. I don't think most people will. I also think if we illustrate it not that way, most people won't. But you just want to say, we do not want this information in the roll forward. And if you really don't want them to do that, you should just say, don't do that. Otherwise, you're allowing them to do it if they wanted to. I don't think most people will, because when I think about how to do it, I don't know how I would do it, but
And since we're talking about it broadly, I'll raise a third. Alan, you said there are two things. I think there's at least a third in this paragraph, and that is this notion of weighted average age. In my view, we have to describe how you weight average, because this here, we're going to get answers all over the map. You can weight average by number of assets. You can, I have 5 assets, so I just weight average the age by the 5 assets. Or I'm going to weight average by, I think it should be historical cost applied to the placed in service date. So I think, and that may add some words to this paragraph, which are going to affect the wordsmithing, and whether it's 2 paragraphs or 1 paragraph or something like that, or 2 concepts or 1 concept. So I think that how weight averaging gets described also needs to be addressed.
And I think that an illustration on that would be really helpful on how to calculate that weighted average. I just wanted to make an observation too. I thought it was interesting that there was nobody at GASB that mentioned that weighted average piece. And are they picking up on that? Because, we had these great ideas on how they were going to come up with something that would get them close to that deferred maintenance. I got the impression nobody really picked up on that. So is that something that's going to be useful to people?
I do have a note, though, Diane, I agree with you. There was not a chorus of comments on this point, but I think there was one commenter, at least, who said something to the effect of weighted average age of infrastructure assets. And they were like, is that by component? Because in a world where I might be doing components now, and components become my assets. Again, it's sort of along the lines of this other thing, like, I think we have to think about that, right? Like, by infrastructure asset, or is it it could be by component, it could be by asset. Because, but I agree with you, but there was that one comment about that. How would I weight average?
Diane, to your I think to me, we heard enough in comment letters that people wanted more context. Some people asked for this. So the fact that the users may not, and Gas Active said, oh, that's awesome. I doesn't make me think it somehow isn't useful. But if that's what you were asking.
It is. And I guess that it's important that we have it in here in the ED, because then we can get comment letters and kind of assess whether people really get this, whether they think this is going to help them or not. I think it's a great idea, and I think it really will work, but they need to understand what they're doing with it.
I seem to remember, like, the rating agency GASAC member kind of having a broad statement about this was all good or something. He didn't single out that one in particular, but okay. Diane, I'm with you on, I had the same comment on, I think we should illustrate a weighted average age calculation. We actually have one from statement 34 that I think we could repurpose a little bit, because it has some extra stuff in it. So I think if we're gonna have an illustration of a note disclosure and have an illustration of the weighted average age calculation, I think that's a good idea. Scott nodded his head yes, so I think that's good. I agree with Jeff that somehow in this wording change, we describe weighted average based on historical cost. So that we are specific. Beyond the illustration will help the calculation, but we have to tell them on what to wait. So if everybody's Jackie,
I agree with that.
okay. Anybody disagree with either of those things? Illustration on weighted average age, but within the text, however we reword it, we describe weighted average based on what? Historical cost.
I agree with that, but I also wanted to come back to the suggestion of being explicit as far as not to include the,
I had four things now written down, and I was clearing these two off to come back to. One is overall wording, which we may not solve here. We'll just maybe let the team kind of work on it unless they want us to do something. But being specific about outside the roll forward or whatever, I have us still to be worked on. Okay, so everybody's good with those, the weighted average age and illustration things. All right, so we could check those off. Check. Maybe
So-
let's deal with the,
Weighted average age based on historical cost.
yes,
Applied the original place and service date.
Yes,
to give context of what age.
right.
What's
the
age,
Right.
So that, because the wording one is either the hardest one or the one we may not want to try to wordsmith here in the meeting. We can see, but the outside the roll forward issue then.
Do you want me to rain on that a little bit as we
Sure.
talked about? Not that I've ever seen it differently. And this is back to maybe illustration's good. That tabular format you see of capital assets is not required. The statement says that information should be presented, beginning balances, ending balances, capital acquisition. Doesn't say it has to be together. Now, again, I don't think it ever would be differently presented. The comment brought up before that, that's you started with, that I guess people could, there wasn't an intention, nor, the wording here doesn't say as part of that disclosure, so that there was no intent in that, and maybe the illustrations take care of that. The two ways I think that potentially you could have small wording is something I would think you'd want to say in addition to other disclosures. I know that the concern is to this individual disclosure. My concern is if we say in addition to the disclosure by 115, that may add confusion as to, well, should it have been part of it or some part of it or put together with it or something like that. So I guess that's in addition to the illustration that you suggested earlier of that disclosure. I guess that's what I would suggest as the wording at the beginning of the paragraph, something like in addition to other disclosures. Unless the board wants to specifically state that you shouldn't. I didn't take it from the board's decision that it was bad. It was cost benefit not to require all that, but I don't think a user would be upset if it was provided. Because if you did it in the tabular format, you would also have to do obviously under 80, which, obviously was the cost benefit. The board didn't want to have to break it out that much.
So hold on. So when you're suggesting, Scott, in addition to, are you suggesting that to make it separate? In other words, to sort of telegraph that we don't want this in the roll forward. It's in addition to
Other disclosures. Yeah.
Yeah.
I mean, in essence, in 104, that's what we did. I mean, in 104, we had a sentence that said that the held for sale assets should continue to be reported as capital assets, but that was the kind of classification part of it. And then in the disclosure part, we say, in addition, should disclose, and we talk about the things that should be disclosed. And so it, in a way, the in addition part is kind of sort of how we handled 104. I would be comfortable that that with combined with an illustration would telegraph enough that they should probably keep it out of the roll forward without having to be more specific. So I'd be comfortable with that. Jackie.
Yes, I'm comfortable with looking at that too. I mean, when we look at it, if we think that there's going to be an issue, we can always address it then, but it seems like it would address the issue. I think the illustration is going to help us make that determination.
Okay. Carolyn.
And I am fine with that approach. The illustration is really going to be very helpful in demonstrating the, can I say preferred way to,
All the illustration can demonstrate is minimum requirements.
okay.
That's all it can demonstrate. So,
But it's kind of how you put the minimum requirements on a piece of paper.
if we illustrate it separate from the roll forward, that's going to kind of suggest that we think it's separate, but there's no words that say that. That's just how we'll show it, which I think will get most people to do it that way, because I don't think most governments are going to want to put it in the roll forward anyways. And so the moment we show it that way, what we show will just be the minimum requirements, what you got to disclose. But the moment we don't have it in the roll forward, I think that's going to kind of signal, don't combine it, even though there's no requirement for that. So,
which was Scott's point of,
was exactly Scott's point.
there's no requirement to have a
table.
table.
Right.
But we illustrated it and that's what people did.
Because if you think about what we're asking them to do, you'd have to go into, let's say, infrastructure. And if you had roads and bridges, you can't just have a roads and bridges line and a weighted average number on the side. You have to have roads and bridges, everything under 80, and then have roads and bridges, things from 80 to 100, and have roads and bridges, things over 100. You're adding multiple lines for every network of infrastructure asset, which is why I don't think they'll want to do it in the roll forward.
I get it. Some people thought they were supposed to.
I agree.
But I think the in addition and the illustration will be enough.
I do too.
And we avoid the pitfall, right, of having to suggest that there's a way to do it. Because in theory, you could write text that would meet the requirement here. You would have sentences that just describe, here's what it's over 80, here's my amount, here's my weighted average age, on and on and on. So we avoid that, right, by just sort of, you disclose, we'll give you an example, here's the way you think you can do it.
Yes.
But Jeff, in that scenario, they can still do exactly what you just said. Yeah. They could do the roll forward and just have words underneath that says we have these roads that are, so they could still do that.
Robert.
I would agree as well with the approach we're suggesting.
Thanks, Robert.
The in addition. And
Diane?
I'm good with that.
Good with that. All right. So the last thing I have is kind of wording. Do you feel like you have enough kind of stuff to take a stab at trying to clear it up, or is there something you want us to talk about more to try to help?
I think what we'll do is, as I said at the beginning, we tried to write this as it is with similar literature and requirements by there, because there's 2 or 3 things now in addition that maybe, as we worded in the preliminary review as 2 separate sentences, is what we would do. And we just split the sentence, the last half being, those last 3 lines that talk about doing it separate would be its own sentence rather than part of the same sentence, instead of having the whatever, separating the same information. We would just have a period and said that information should be presented, or whatever the wording we had in the PB. The PB had 2 sentences. It's how we would propose to do that. Then again,
So let's see it all put together next time and we'll decide.
We've got the additional issue on the, additional wording. We're
Right.
going to add
Got some other
related to
things to add into it.
What about the weighted average? That would be my, otherwise I don't know how to make it clear, because it, you have to do all these things, so they all have to be listed.
Right. Well, once we add all the stuff in and break it apart, we'll see what it looks like, because there's a lot going on.
I mean,
Robert?
that would get at my issue I raised with the staff, and I like the words fully depreciated, because in that way, then that would make it clear. But again, I think making it more than one sentence will assist in that as well. So.
Okay. All right. Anything, anything else in paragraph 10? All right, Scott, we can move to 11. Paragraph 11. The only thing I had here was should it be maintaining and preserving infrastructure assets as opposed to just preserving? The PV was monitoring and now I'm questioning. I don't know. So it was monitoring and maintaining or preserving. We don't have like in the modified approach now, that's really the place we talk about it. And now we're going to revert, or we have reverted or haven't changed, that the modified approach language now is back to maintaining and preserving because we don't distinguish anymore. So that's why I wondered if it should be maintaining and preserving here. Monitoring, maintaining, and preserving. This is applicable to everybody, which somebody else brought up. I thought, was it you?
Yeah. I mean, we can talk about it because, and I talked a little bit to Scott about this because I was like, well, gee, is it clear that this paragraph 11 is applicable to all governments? Because it's sitting in between a paragraph that's applicable to historical cost and applicable to modified. So he made a suggestion, which I think could be a good one, of moving paragraph 11 above 10, because you lead with the two things that are applicable to everybody. Or if you look at how we did recognition and measurement above, you could put subheads, historical cost net of, and put one of these for the one paragraph 10 under historical cost, and you could put paragraph 12 under a modified approach, subheaders to make it clear that those are applicable only, just like we did with recognition and measurement above. So
paragraphs, what is currently paragraph 9 and 11, those disclosures apply
to everybody.
To everybody.
So they would sit under the notes to the financial statements header.
And then we'd have a subheader for historical cost, and then that would have what is currently paragraph 10, and then we'd have a subheader modified approach, and that would have what is currently paragraph 12.
That may help clarity.
I think that would help. Robert.
But after the lengthy discussion we had, I thought I read paragraph 11 applied to regardless of method.
Yes, it does.
So that this isn't just related to modified approach.
No, it's above. It goes beneath paragraph 9, which also applies to all governments. You would move it.
Okay.
And it applies to all.
The only thing under the subheader that applies to the modified approach is paragraph 12.
Right.
But it's just rescinding, but I mean, it does only apply to the modified approach.
Right.
I would agree. But our discussion was beyond monitoring. The major discussion was about maintaining.
We tangented.
So should we say maintaining or preserving?
Yes, I think that's what we're talking about. Monitoring, maintaining, or preserving.
Or preserving?
There was monitoring, maintaining, and preserving. Well, if you're using the modified approach, it's maintaining and preserving.
Right.
If you're using historical costs, you're kind of probably doing the same things. You just don't, you account for them differently.
Mm-hmm.
So if it's their policy for doing it and the assets that are doing the modified approach are maintaining and preserving, then I would think that assets that are using historical cost are also maintaining and preserving them.
Right.
We just don't tell you to do anything with it other than disclosure policy related to it. So I would think it would be monitoring, maintaining, and preserving.
Mm-hmm.
Any objection to that change? Don't see any. Any objection to Jeff's reorganization. I think that reorganization, I didn't pick up on that, but it is kind of weird. Paragraph 11 being tucked in there and it applies to both
Right.
might be confusing.
Yeah. And I think, Scott, we also talked about, I think you suggested maybe we should put an if applicable in front of paragraph 11, because if you don't have a policy, we're not saying you have to have a policy. If you have a policy, you disclose it.
We did have a big discussion about that because we talked about whether they should disclose if they don't have a policy. And we said, we don't want them to have to do that. So an if applicable does make sense to me. Other board members, Jackie.
I'd actually recommended, because I picked up on that too. I didn't use the word applicable. I basically said governments with a policy for monitoring or preserving, rather than using should disclose. So just indicating that if they have a policy, they should disclose.
Yeah, I'm either way. I'm good with that too.
It's easy. All you have to use is with.
Okay, Robert.
I like that better than if applicable.
Okay.
I agree with the concept that, because otherwise we don't have one, what am I supposed to do?
Sounds good. Diane or Carolyn?
No, I agree, because we did have a big discussion about that.
Yep.
I like that. I had also mentioned it to staff, and we had talked about putting it in the basis that they don't need to create a policy for this.
Very good.
No, my only hesitation is like, in many cases when we have a policy that we want them to disclose, if they don't have it, we say you don't have one. And here we're just saying if applicable, okay. So disclose if you have it. Like, you don't have it, should you say you don't have it? If it's a big, I mean, if it's a, there's many cases where we say disclose a policy, we don't have it, tell us you don't have it.
I know, but we had a big discussion about it. We didn't want to do that.
We're still okay with that. It's totally fine. That's totally
Yeah.
fine with me.
I don't know. Yeah,
I agree. We had that discussion.
we did.
All good.
Okay. All right, so you're good with that change, Scott? Okay. So that was 11. So paragraph 12, yeah. Comments on paragraph 12. Going once. I'll move into the RSI, Scott.
Sure. Paragraph 13.
Any comments on paragraph 13? Don't see any.
14.
Paragraph 14. RSI seems good.
Okay. Jeff had
Whoa.
pointed out.
Yeah. So, yeah, you're going to mention that, Scott?
It's not in those paragraphs. There was an additional decision by the board I thought was wrapped up in 14, but it's not. I had the wrong paragraph reference there, I know. But in statement 34 in the RSI, in the paragraph that talks about factors, or the subparagraph, I should say, that talks about factors, the board tentatively decided that a change in the condition level should be added as one of those specific factors to discuss as to why a trend happened. What's in paragraph 14, there is the reason for the change has to be disclosed already, but this is to highlight that if you have significant changes, significant trends, that this change could be one of those items, and it's not currently listed in literature. So we will be crafting another paragraph.
Right. That could sort of separately from 14, right? Because it's a different idea, right?
I thought paragraph 14 encompassed it, but it does not, huh? Okay.
It focuses on the reason. This is a different thing.
Oh.
This is the factors.
Well,
And
okay.
so it's a separate part of.
All right. Well, I thought it was all wrapped together, but if you guys, we need to be more specific, I look forward to the language then. Anything else then on 13 or 14? All right.
Paragraph 15.
Anything on paragraph 15? No, no comments there, Scott?
All right, let's have fun and do the last three together.
Oh.
I know there's a comment on 17 that it did not reflect the board's decision as to applying the provisions in paragraph 9 on the disclosing by network that you don't have to go back more than 1 year. So the second sentence in paragraph 17 will be, I'm sorry, I can't count. The third sentence in paragraph 13 will be changed from saying retroactively to the proper wording that just go back to the beginning of the period.
To the beginning balances of the current period or something like that.
Correct.
That takes care of one of my comments. So I guess my only other comment is I know what we mean in the first sentence when we say the changes adopted conform should be applied prospectively, and that in contrast to the next sentence, prospectively means to all assets in service at year end or during the implementation year. Because then the next sentence says, well, specifically for paragraph 7, it only prospective is for assets acquired during that fiscal year. I still worry, though, that people see prospectively in the first sentence and think it might still mean the same thing the next sentence means. And I would feel more comfortable if we said applied prospectively to all assets in service at year end or during the implementation year or whatever or maybe just to all assets in service. I don't know if other board members share that concern or not.
It's a pretty important notion to me not to have, I mean, because I didn't love paragraph 7 going the way paragraph 7 went. But now I don't want, paragraph, what is it, 10 going the same route, right? So I'd want to have it clear that you apply it to assets and service.
So Jeff is with me. Jackie.
I think anything that clarifies what we're meaning is worth including, so I'm fine with adding that.
Thanks, Jackie. Carolyn's good too. Robert, it's good. Diane's good. So Scott, you're good with adding something like that to the end of the first sentence? Okay. Those were my comments on 16 through 18. Other comments on 16, 17, or 18? Going once. Right. All right.
Okay. With that, we'll move on to paper 2, and I'm going to turn it over to Zach.
Thank you, Scott. Paper 2 addresses the project staff's assessments of the expected benefits and the perceived costs of the proposals in the exposure draft. The proposals in the exposure draft apply to fundamental issues related to the reporting of infrastructure assets. These assets are a significant and prevalent category of capital assets because many governments that provide transportation or utility services often report major networks of infrastructure assets in their financial statements. Additionally, pre-agenda research indicated that users find value in the information contained in required supplementary information, for infrastructure assets reported using the modified approach because they use this information in their accountability assessments for state and local governments. Users further indicated an interest in additional information to assess short and long-term capital needs for state and local governments and the capacity of those governments' infrastructure assets to provide services. The project staff believes that the guidance addressing accounting and financial reporting for infrastructure assets contained in the proposals in the exposure draft would benefit users in the following ways. The periodic review of the appropriateness of estimated useful lives and salvage values for infrastructure assets reported using historical cost net of accumulated depreciation would provide more reliable information about the service capacity of those assets, and they would also better reflect their depreciation and actual usage. The separate depreciation of significant components of infrastructure assets with substantially different useful lives over the associated useful life of that component would better allocate costs to periods in which those components are used as part of the asset. Additionally, the updated definition of infrastructure assets would provide more consistency in information over time by helping users to understand the types of assets that are considered infrastructure assets. The extended presentation of estimated and actual preservation costs reported for infrastructure assets using the modified approach in required supplementary information from 5 to 10 years will improve consistency for historical trend analyses. The similar presentation requirements in the capital asset note disclosure for infrastructure assets between governments of similar purposes and sizes would enhance comparability in financial statements. The requirements to disclose a government's policy for monitoring, maintaining, and preserving, as we just discussed, infrastructure assets and providing information related to the age of those assets, including their historical cost, accumulated depreciation, and weighted average age of those assets based on their place in service state, reported using historical cost net of accumulated depreciation, would provide additional information to users that was identified as essential throughout outreach surveys and interviews. The project staff also believes that preparers and auditors will benefit from the proposals in the exposure draft because the definition of infrastructure assets will assist in the categorization of types of assets that should be considered infrastructure assets. The separate depreciation of significant components of infrastructure assets with substantially different useful lives over the associated useful life of that component would allow governments to better allocate those costs to proper periods, and the periodic review of estimated useful lives and salvage values for infrastructure assets reported using historical cost net of accumulated depreciation will provide more information to assess the accuracy of prior estimates. A significant objective of the preliminary reviews was to obtain additional feedback on the challenges and costs associated with implementing and auditing the proposed guidance. The project staff conducted outreach, including a field test to understand these costs. Some respondents to the field test noted significant time and effort would be necessary to provide certain components of proposed information. As a result, the board tentatively decided not to propose a disclosure related to maintenance expenses of infrastructure assets reported using historical cost net of accumulated depreciation. The exposure draft continues to have the significant objective of obtaining further feedback on challenges and costs associated with implementing, auditing, and understanding the proposals. And the project staff anticipates that auditors and preparers would incur costs to understand and implement the proposals in this exposure draft. But the project staff further believe that the additional guidance related to the definition of infrastructure assets and the componentization that would help preparers to correctly classify and allocate the costs of those assets justify the costs to understand and implement the proposals in the exposure draft. The project staff also believes that for users, the primary costs would be incurred at implementation to understand the effects of the proposals, but that the benefits from the information in these proposals exceed those educational costs. In summary, the project staff believe that the proposals in the exposure draft will result in more understandable, reliable, relevant, consistent, and comparable information related to infrastructure assets. And so at this time, the project staff believes that the expected benefits of the guidance proposed in this exposure draft justify the anticipated costs of implementation and ongoing compliance. This brings us to board discussion question number 1 for your consideration, which is based on the information that is available at this time. Does the board believe that the expected benefits of the proposals in the infrastructure assets exposure draft justify the perceived costs of implementation and ongoing compliance? And again, the project staff currently believes that based on the information available, The expected benefits of these proposals in the infrastructure assets exposure draft do justify the perceived costs of implementation and ongoing compliance.
Thanks, Zach. Board member responses to the cost benefit question here. Robert.
I believe that based on the staff's analysis and recommendation, why I'd agree with the staff recommendation. I think the work that most of you have done, not me, on tweaking some of the initial proposals that were included in the preliminary views, I think have provided a good balance from a cost benefit perspective and usefulness of a standard once it's ultimately issued.
Thanks, Robert. Diane.
Okay, so as a former auditor, I'd like to do an except for opinion here. And I agree with staff except for the costs related with componentization, because I think the costs exceed the benefits. I don't know how to answer that as a response.
It's an all or nothing.
Then I don't think the benefits exceed the costs.
So then you wouldn't vote for with a pre-ballot.
Is that my option?
They're one and the same.
Okay, then I guess I wouldn't vote for it.
So that means you're going to write an alternative view of the standard. If we even have a majority of board members want to move forward with the standard.
Right. If I need to do that, yes.
Jackie.
So I really didn't give a definitive answer to Scott and the team either when I did this, because I'm unsure about all the proposals in the standard exposure draft being cost beneficial. I believe, like Robert, that we've made some significant changes that are going to help achieve the cost benefit. But I still think that we're going to have some significant costs related to benefits that I think are marginal at best. And mine relate to componentization. Big surprise, right? That I have an issue with that. We've received some really strong comments and feedback related to the cost benefit of some of these things. I think of some of the examples that were even given in the GASB meeting yesterday related to this. So I'm kind of on the fence on whether I want to let this go forward or not. So right now, I'm going to go with Diane in the no bucket on this, simply because of the cost benefit related to componentization. But listen to the rest of the board to see whether or not I can be convinced that we expose this to see whether or not we can get enough feedback that's helpful to making it more cost beneficial than I think it is right now.
I
know
like
where,
that
I know
expression.
where Jeff and Carolyn are, so we're in trouble.
I guess we need to hear where Jeff and Carolyn are before then the rest of the
Sure.
board to make a decision on this.
Well, I also phrased my response back to Scott in a particular way, right? So I said, well, I agree with the recommendation as it relates to the information in the proposal. I also believe there is other information that could have been provided that would have been cost beneficial. That's not provided in the proposal. So I assume that means for the purposes of this document, I'm in agreement, right? But as it relates to what we'll talk about next, I think there are other things that could have been in this document that would have been cost beneficial that are not here. And so that's where I land.
So just to make sure that folks aren't connecting the dots, you connected, you agree with the current proposal as it is cost beneficial, but you're probably a no on going to a pre-ballot.
Because I think there is other cost beneficial information that is not included in the proposal.
You won't.
Carolyn,
Um, regarding the question as far as the cost benefits, I do see that the benefits outweigh the costs, but my issues will come as far as not including enough information. So I guess for this one, I'm in the yes.
you agree with the
Same
cost
as-
benefit?
Yes.
You're in the same place as Jeff.
Yes.
You agree with the cost benefit, but you're not gonna vote to proceed.
Mhm.
So we have two board members that are not gonna want to proceed because this doesn't do enough. And if, I don't know where Jackie ends up, but if Jackie and Diane end up not wanting to proceed because we've done too much, you know, it seems like to me we found the right balance, but that's
So
where we are.
I guess my concern now is, now what? I haven't been on the board long enough to come up against one of these before. So what happens now before I say scuttle the whole thing? I mean, I don't know that we're going to get anywhere else, right? I mean, what's the next step?
So we need Chris here, right? Which we don't really have. But if Robert and Chris and I are all voting for proceeding and the other four aren't for different reasons, but it's almost the same reason, just divided too. Like you and Diane and Jackie don't like componentization, and Carolyn and Jeff want maintenance being in. We just need one of the four of you, like we need to convince somebody to either agree to take componentization out because that was a close vote that kept it in, or somebody else to agree to put maintenance expense back in because that was a close vote to exclude it. And and if we don't get there, I'm not sure.
No, if you don't get there, you don't have a majority go to a pre-ballot, so you're not going to a pre-ballot.
Correct.
It's that simple.
Robert.
My comments would be different if maintenance was in. I would change my opinion on the cost benefit to muddy the water even further, just so you're aware.
So what would your reaction be if they took componentization out? Same as what you've got now?
I've been okay with componentization. If it came out, I think it would be even less costly. It would tip the scale further. But I'm okay with that as it is.
Right. I think we need to talk to Chris, I guess, and regroup. I agree with the cost benefits.
Where you are moving forward.
I know.
I can't officially vote for him.
I know. Well, it wouldn't matter at this
At
point.
this point, it wouldn't matter. At this point, it wouldn't matter.
For what it's worth, it's not maybe not my place to say, either Jackie or Diane, right? But at the stage where we're at, right, going to exposure draft, even though I'm in the position I'm in, right, for it to be scuttled at this point, I wouldn't be satisfied with that, right? I'd rather have it go out with the alternative view that I intend to express, and we'll see what the feedback is on it, right? Because componentization is in there, as you mentioned in your remarks, Jackie, we're gonna get that feedback on componentization. And you will have another opportunity, not me, but you will have another opportunity to weigh in on that, right? So, but if you don't, then my alternative view won't get weighed in on, right? And the board won't benefit from that feedback, right? So I don't mean to put you on a spot, right? Like that's not what I'm doing, but I'm just saying the reality of, I think what we're facing is if we just sit where we sit, then we end up stopping the project, which I believe there's a lot of information that users want from this project, right? And a result of having nothing result would be also a disappointment to them.
I don't want to see the project just get dumped. Okay, so give me a little clarification on this. If I go ahead and vote to move this forward, then, and we get the feedback on componentization and we redeliberate it, and I vote against it again, at that point, can I vote against the final release, even though I've given the go-ahead with the ED?
We're gonna have a separate round of due process. So additional feedback, additional comment letters, additional redeliberations. And how you weigh all that additional feedback and redeliberations, how you get to your ultimate decision on a final can be a very different decision than you are sitting right here today. Not to change the answer, but I do think there is a distinction between, and an important one that Jeff's kind of making is a distinction between something being in the draft today and we remove it later versus it not being in there right now and not necessarily getting addressed. So componentization can be there now and y'all ultimately decide that it's still not cost benefit. You still don't want to go forward. I'm sorry?
So I'm like Diane, I want and Jeff, I'm not really into scuttling this completely, but I need people to know that the board is not completely on, not everybody on the board is completely on deck with this whole idea of componentization. Because I think that they have a right to know that. On the other hand, if we go forward and we find out that they don't like componentization, and Diane and I are the only two that still decide that it's not right, it's going in there. Well, at that point, it's going in there because two of us can't stop it from going in there. So that's my conundrum. I'm not opposed necessarily to moving it forward, but I don't like the idea that there's nothing in there that indicates that this was a controversial issue with the board and not everybody on the board thinks it's a great idea.
Can basis for conclusions do that kind of work, Alan? I mean, I know you have to be, it's not that purpose, right? But the idea of, where some board members thought the intro where it says some board members thought more heavily about these things than others.
I mean, I think the basic conclusion is supposed to articulate the intent of the majority of the board, and that wouldn't be the place to do that. That's, in some ways, that's what the alternative view is for.
Exactly. So that's the whole thing, right? Not interested in scuttling it, but I want them to see that there's an alternative viewpoint by some members on the board.
And I do, please stop me if I could see it. I do think there's going to end up being a discussion potentially around the transition provisions that are related to componentization, because we're not making that be retroactive. We're not making it be all assets in service as of the implementation date. And we are making that truly be prospective. And I would argue the main reason why we made that prospective is cost benefit. So I would argue that we've already addressed cost benefit related to componentization because we made it prospective to new assets acquired as of implementation. So I would argue that's a very, very strong reason why the board did what they did to deal with cost benefit, which, yeah. So that's going to be there, and that's going to, I think, Scott, will be the basis of why we chose that transition provision. It's just, I think Jack and Diane are saying, yeah, it's still not enough.
Exactly.
Just don't want it, period. I mean, their argument is no matter what you do with it, don't want it because of the benefit doesn't outweigh the cost.
So the alternative is to get somebody who doesn't already have it in there to move theirs forward. So one other comment. I don't think any of us wants to stop this. I really don't. I don't think Carolyn or Jeff want to stop this. Diane and I don't want to stop this. But we don't want it to go forward without our views being expressed. And there's got to be some way for us to be able to do that, I would think. If this is going to be a true exposure draft where we're getting back feedback that feeds into what our concerns are.
I mean, if that's the way the four of you feel, it's one of the four not participating in the alternative view, and there can be two different alternative views. One is two of you expressing whichever of the views that you both share, and then the other case is only one of you expressing that view, even though we know two of you have it. I have a hard time telling you that because I know you all four believe what you believe, but that's kind of the only way to make it work.
Okay, I can go with that if it's 1 and 1. Not 2 and 1, because that sends a message too. It does. So I'm fine with that.
That's Carolyn and Jeff, like only one of you writing the view that you want more.
Hey, 2 of them can write it. I don't care.
Well,
2 of them write it, but I don't want one of them to vote.
I mean,
No, well, I'm not sure. I forget. I have to go back and look at the term of art. I'm not sure that we need to be put in that position because I'm not sure these board members versus this board member is so compelling as to make a difference. To me, it's more important that the view gets out there rather than it's this board member versus these board members. Right? I don't know how I want to have to compromise, because of that is going to be basically the difference. It's going to be the same views expressed. It's just going to be this board member versus these board members.
Yeah, I'm not buying that. Because you're still saying you guys do what we're not.
all right, we'll take a 15-minute break, come back at 3:30, and we'll decide how to move forward.
Man, I was hoping to catch that.
Okay, we're back. As a reset, we were on the cost benefit paper 2 for the infrastructure asset project. And people were debating their views. And so maybe we reset with how you're feeling now about cost benefit. And we'll just go around. Robert, I'm just going to go this way. Robert, cost benefit, you agreed with the staff recommendation or no?
I'm still in agreement with the staff recommendation.
Thank you, Robert. Diane?
Disagree.
Disagree. Jeff?
I agree as far as it goes, but it doesn't go far enough.
Do you agree that benefits, perceived benefit, no,
Exceed the cost. Yeah.
perceived benefits exceed expected cost or whatever
Right.
the words are? Okay. Carolyn?
Yeah.
Expected.
I agree with the staff recommendation that the benefits exceed the cost.
Thank you, Carolyn. I agree with that as well. Jackie?
I still hold my position that I have concerns about the benefits exceeding the costs, but I do believe that it is critical that we move this forward. So I'm going to support the staff recommendation that the benefits exceed the costs until I hear differently from the results of the exposure draft. But at this point, I'm changed to support the staff recommendation.
Thank you, Jackie. All right. So we have a majority of the board there. We can move to paper 3.
Thank you, Joel. Paper 3 addresses the GASB's scope of authority. According to the Financial Accounting Foundation's policy, the GASB must determine whether the information proposed in the exposure draft meets the characteristics of Group 1 financial information. Measures in the notes to financial statements will make the information more useful to users. The second characteristic is that the financial information results from economic or financial events affecting the user's assessment of the governmental reporting entity. The project staff believes that the underlying events and transactions addressed by the proposals in the exposure draft are the recognition, measurement, and presentation of information about infrastructure assets, which are economic or financial events that impact users' assessments of governmental entities. The third characteristic is that the financial information is relevant to governmental financial reporting objectives. The project staff believes that the proposals in the exposure draft will help users assess accountability by providing more understandable, reliable, relevant, consistent, and comparable information about infrastructure assets. This aligns with the objectives that are summarized in concept statement number 1, paragraph 76, which in part states that governmental financial reporting should assist users in assessing accountability and making economic, social, and political decisions. The fourth and final characteristic is that the financial information falls within one or more of the categories provided in the FAF's policy to be included in general purpose external financial reports. The project staff believes that in this case, the relevant categories include historical, economic, or financial events that are recognized in the basic financial statements, disclosures in notes to basic financial statements, and required supplementary information. Proposals in the exposure draft will introduce additional requirements for events recognized in the basic financial statements, including clarifying depreciation calculations for components of infrastructure assets and clarifying the requirement of periodic reevaluation of estimated useful lives and salvage values for infrastructure assets. Also, the proposals will modify the presentation of current note disclosures by requiring further disaggregation of infrastructure assets by network. Additionally, they will remove the note disclosure describing the modified approach and add disclosures related to government policies for monitoring, maintaining, and preserving infrastructure assets. These new disclosures will also include reporting the historical costs, accumulated depreciation, and weighted average age by historical cost and place in service date of infrastructure assets that have exceeded 80% of their estimated useful lives to be separated as previously discussed. And finally, the proposals will modify information in required supplementary information by requiring disclosure of the reason for a change in a government's established condition level of infrastructure assets reported under the modified approach. For these reasons, the project staff believes that the information proposed in the exposure draft meets characteristic 4, and therefore all 4 characteristics of Group 1 information, which puts it within the GASB scope of authority. This leads us to our board discussion question, which is, does the board believe that the proposed requirements to be included in the exposure draft meet all of the characteristics of Group 1 information and therefore are within the scope of the GASB's authority? And again, the project staff currently believes that the proposed requirements to be included in the exposure draft meet all the characteristics of Group 1 information and therefore are within the scope of the GASB's authority.
Thank you, Zach. Board member responses to the scope of authority question. Diane.
I agree with staff. This definitely meets all the characteristics of Group 1. Zach did a nice job of outlining all of that. I'm not going to repeat all of that, but it does meet that.
Thanks, Diane. Jeff.
Well, we don't see eye to eye on all things. I agree with exactly with what Diane just said.
Thanks, Jeff. Carolyn.
I agree with the staff's assessment that the requirements for the draft exposure do fall into Group 1. So I agree with the staff recommendation.
Thanks, Carolyn. Jackie.
I also agree with the staff recommendation that the draft meets the requirements for Group 1 and that the disclosure categories fit into recognition notes and supplementary information, required supplementary information.
Thanks, Jackie. Robert.
I concur with the staff recommendation, and I believe that the project is within the scope of the GASB's authority based on the information presented.
Thanks, Robert. Chris, have an answer here?
Chris would also agree with this is within Group 1.
Great. I agree as well. And as Diane said, Zach laid it out really well. The paper did too. So no reason to repeat it all, but I agree with the recommendation. It's Group 1. That's all we have, but before moving forward to a pre-ballot, we would then need to vote.
We need the
to move
board to vote
forward.
to approve to allow us to move to bring you a pre-ballot.
Let's take the vote.
Jeff?
I disagree. My disagreement is based not so much on what is contained in the exposure draft, but what is not contained in the exposure draft. As we go back to the history of the project, one of the big compelling things that this project was trying to address was this issue of deferred maintenance. We heard a lot about it from users of financial statements. We heard it through each of the rounds of input we sought from them. We heard it from the pre-agenda research that it was important to them. We heard it from the Concept Statement 7 outreach that we did. We heard it was important. In fact, we decided it was essential. So I think that bar is pretty high, that information was essential. And then we heard it from the input we got on the PV. And then in the PV, we discussed that whole Appendix A about the idea of deferred maintenance. We talked about why we couldn't get there as a liability, and I understood and agreed with that. But we also ended that appendix by saying, but here's the information we are going to provide that will help users with this need they have for deferred maintenance. The board decided not to move forward with those proposals, chiefly on a cost benefit basis, I believe. But I believe they're not taking into account the benefits here. I understand the costs are not going to be insubstantial for these, but I believe the benefits to users will exceed those costs. And I was willing, as we went through the feedback from those proposals, I certainly was willing to entertain some changes to the proposals. For example, estimated amount seemed to cause a lot of trouble. I would be willing to consider budgeted amount. I was willing to consider more detail on what is maintenance expense to try to get to where we could get it so the governments could understand it. I would be willing to entertain prospective application on something as an RSI table, understanding that I'm not asking them to go back 10 years to provide this information. I think a lot of those things might go a long way to assuage the concerns of governments as it relates to costs. And again, I'm trying to handle those costs in a balance that I believe the benefits are extremely high, right? So that's why I think that I disagree, because I think the proposal needs to have something in it, deferred maintenance. This is a once in a generation type standard. We haven't looked at this infrastructure asset since 34. I would not be happy with an outcome that says this is the outcome we have for the next 25 years. I think we've heard loud, at least I have heard loud and clear from users that this is essential information, and I believe we should do more to respond to them.
Thanks, Jeff.
Carolyn?
Jeff raised some really good points. But looking at the project and what we have proposed so far, there's a lot of good information that could definitely benefit stakeholders as far as their understanding of what's going on with infrastructure, the cost of infrastructure, the definition of infrastructure. So there's also a lot of good information that can benefit our community and governments and stakeholders. So with that said, I do support moving to an exposure draft.
A pre-ballot.
I'm sorry. Thank you.
Is disagree the right word? Okay, I disagree. I believe that the piece about the componentization in this proposed exposure draft is too heavy a lift for especially the smaller local governments. I could see some challenges from the larger local governments also, just in the volume of projects that they have and trying to do these analyses that would be required. I do, as Carolyn said, I think there's a lot of good things in this. But because of the componentization, I am going to disagree.
Thank you, ma'am. Jackie?
I've already expressed my concerns about this, but I've also indicated that I think that it's important that we move this forward to exposure draft. So I agree to move it forward.
Robert?
I think there's been a lot of good work that's been done to date that I would hate to leave aside. We'll get some more feedback from stakeholders if we ultimately move to an ED. So I would agree with the moving forward with the pre-ballot draft.
Thank you, sir. And while it doesn't officially register, Chris was also okay with us moving to a pre-ballot, even though since he's not here, his vote doesn't officially count. Mr. Chairman?
Yeah, we'll get Chris's vote once he listens to the
Yes,
meeting.
yes, sir.
We'll get it. I agree with moving forward. I agree with Jeff and Carolyn that I'd like to see more. I'd like to see maintenance expense, but more like Carolyn, I think on balance, there's a lot of good information in here that I think are improvements. I think as I've talked about before, the weighted average age within the 80% to 100% and the fully depreciated assets really is directionally information related to the CapEx maintenance costs that users are concerned about. And I think that's the bigger number. While yes, I agree, the regular operating maintenance is also beneficial to them, and they have told us that. On balance, I'd like to move forward and agree, like with Carolyn, that this other information is really good. And so even though I'd like to see the other one, I think we should move forward. And almost the same with Diane and componentization. I am worried about the cost of it. I'd like to get more information and maybe see what small governments say. But on balance, I think we've made some concessions, like substantial in the useful life difference, like prospective application only for assets placed in service. We've made cost concessions to allow that to phase in a more cost beneficial way, enough that I'm okay with it being in there, but I understand those concerns. But on balance, I think we've found the right balance between all of these things to move forward, and that this would be an improvement, a significant improvement in the financial report. So I vote to move forward to a pre-ballot of an exposure draft and look forward to it going out eventually, hopefully, and then getting feedback.
I appreciate that, sir. We'll endeavor to do that. We had planned, Scott, already to not bring this back to you until the start of 2026. That was before today. That was really to give us time to get the document itself and all the COD instructions and stuff in order. So you will see the pre-ballot early in 2026.
Very good. Thank you, team. Thanks, board. Appreciate the deliberation and the discussion and moving forward. With that, we have come to the conclusion. We ended with a bang and we've come to the conclusion of this month's board meeting. And so we will stand adjourned until our next meeting, which is a short meeting at 1:30 p.m. Eastern time on Monday, November 10th, where we are scheduled to talk about revenue and expense recognition at that meeting. So see everybody then. Meeting adjourned.